Hello guys, good morning, good afternoon and good evening. Before I get into what you can expect from the audit marathon, I first want to talk about this subject auditing. This auditing is split into two. One is standards on auditing, which I know definitely you all will study, but there are also other chapters. I want you to give equal importance to both, only then it will be enough for you to clear your exams. This audit marathon is a humble attempt of mine to cover approximately 80 marks of the entire syllabus. This audit marathon is split into three parts. Part 1, there are a few standards, and from other chapters we have done cooperative society. Part 2, again few standards from other chapters we have done CARO, government audit and bank audit. From part 3, we are doing questions, RTP and MTP of this attempt. Approximately the entire part 1 and part 2 and part 3 together will be less than 20 hours only. Now in part 1 and part 2 you are seeing a few colored things. What is that, ma'am? What are those colored items here? The colored items means I want you to do that together. When you are doing essay 220, I want you to study it along with SQC1. Same way 260 and 265, 600 and 610, and same way for all the 700 series also. How can I do 4 standards at once, ma'am? It is possible. Trust me, we will be finishing it within 1 hour, maximum 1.5 hours. How is this marathon going to be? Should I have prior experience in class, or should I have watched anybody else's 100 hours of video and then come to this marathon? This marathon is going to be extensive. Even if you have not watched anybody's classes, trust me, this is going to be extremely helpful for you. This marathon is only of lectures, but in my 100 hours of classes, along with the lectures, we will be seeing the PDF and we will be doing something called as summary notes. The PDF, don't worry, it will be there in the link of the description box below. For the summary notes, I want you to spend some time after you are done with each and every standard to make this summary notes. Listen here guys, we are all studying for that one day of going and writing the exam. Before that day of writing the exam, you have only one day to prepare for that. Auditing is an extremely vast subject. So these summary notes, if you are able to prepare after each and every standard itself, it will be extremely helpful for you to revise all the standards and also the other chapters. In my class, if you see, I will make them do the summary notes then and there. Because it is a marathon, I was not able to spend that much time for making the summary notes and all. That's why I am asking you to pause the video and make the summary notes by yourself. How is the summary notes going to be? You are going to make small notes and trying to finish the entire standard in a single page, single side. For big standards like 315 and all, maximum you can go up to 2 pages. What are the techniques which I am using in my class? There are a lot of techniques as it is a theory subject. One is I will be using a lot of mnemonics. Along with mnemonics, there will be stories. Stories not for you to sleep, for you to remember the points. For CARO and all, there is a beautiful story which you will never forget in your entire life. I have a few expectations from you when you are watching the marathon. Let me also go through that. The first one is, I want you to have a fixed, dedicated desk when you are watching the marathon. You are watching these videos at the liberty of your house only. That means you can watch on your phone also. You can watch on your laptop, sitting in your bed, not even sitting, even lying down you can watch these marathons. Yes, you can watch the video, but it will not be effective. But if you have a dedicated space to watch the audit marathon, trust me, it is going to be 2 times more effective than what you are going to do by just sitting in your bed. Dedicated space is the first point. The second one is, I urge you to see the marathon only in standard speed. There might be some places where you feel that ma'am is slightly slow, where you feel that ma'am is repeating the same points again and again. If I am repeating, that means it's important. And there will be a lot of places where I will pause for you to answer. Don't just keep staring at the phone. Try to answer. Try to scream. It's okay even if people at home are looking like, what is that sound coming from inside the room? Let them think whatever they want. Our motive is to clear the exam, and we will be doing each and everything possible in our hands to clear the exams. Clear, guys? If there is any doubt for you, you can reach out in my number. You can either WhatsApp me, call me, anything at your convenience. And like I already told you, the PDF will be given in the description box below. If you want, you can use the PDF. If you are already following some other book, it's okay, you can follow that. Ultimately, every faculty is following the Bible only, the study material. So it's okay whatever material you are following. In case you want to follow my PDF, the link is there in the description box below. Thank you guys. Happy auditing. I want to start by asking a simple question. What is audit? You are all here for what class? Audit class. What is audit? Imagine you are hiring a cook. You know what is a cook? Who is a cook? A chef who is coming home to make the food for you. You are hiring a chef. What and all will you check at that point? For a chef, what and all will you be checking? Come on, guys. Is he qualified? Okay, qualified. Is he really a chef? Next, you will check for experience. Then, whether they are entering at the correct timing. Yes? Whether they can make pasta, pizza, Italian is my favorite, Thai curry is my favorite. So, specific cuisines, you will verify all those things, whether they are able to do it. How you will verify? You will ask them to cook and then you will verify. Yes, you will ask them to cook and then you will verify. You will check for all these things. Next, what other things you will be seeing? What other things you will be seeing? Taste. How is the taste? You will check the taste. Next. Types of cuisines. They are specialized in. Actually, you will ask them to make it and you will check. Next. So basically, you are doing so many activities to see whether they are doing their job properly or not. As an auditor, we have to do so many activities to check whether the financial statements are correct or not. When I say correct, I want you to think of whether it is representative of whatever is happening. That is the meaning of correct. If the financial statements are correct, that means I am saying that whatever has happened in the entity, that is being represented in the financial statements. If it has been properly represented in the financial statement, the auditor will conclude that it is correct. Clear? Next. Say I am purchasing a fixed asset. My company is called as Daimler AG. Who is Daimler AG? Mercedes-Benz or a parent company. They are buying a huge fixed asset. What is the journal entry for this? Journal entry for this. Journal entry for purchase of a fixed asset. Fixed asset account to bank account. This is the journal entry. From this journal entry, it will be posted to the ledger. From the ledger, it will go to trial balance. From the trial balance, it will go to the P&L and balance sheet, which is nothing but your financial statements. Yes, these financial statements will be going to the auditor, and auditor will be saying whether this is correct or incorrect. That means whether it is representative of whatever is happening in the entity. In this case, the purchase, whether it has really happened or not, whether the fixed asset has actually come or not. So the auditor will be giving a opinion in a audit report. Clear? In an audit report, the auditor will be giving his opinion. The next flow is, this audit report will go to whom? This audit report will be used by the shareholder. Yes, the person who is buying the shares, he will want to know the financial health of the company. This audit report will be used by the bankers or lenders. They are giving money to the company. They want to know whether this company will be able to repay that money. Yes or no? This audit report can be used by the government authorities. You are saying, this is my profit, a percentage of this profit I am paying as taxes. Whether this is real or not, government will want to know. So all these people who are relying on your audit report are called as stakeholders. For these stakeholders, only the auditor is putting his signature. Clear? Yes? Now, what is audit? Because you are putting the signature and so many people are relying on your signature and believing that the financial statements which are signed by the auditor are correct, the auditor has to be extra cautious. Yes or no? The auditor has to be extremely careful when he is putting his signature. The first thing he has to be is independent. Independence means he is a third party to the entity. Our mother is there. How much she'll feed us? How much will she feed us? Always extra. Our father is there. How much money he'll give us? Not always extra. But still, if the mother or the father is the auditor of your company, what will they do? Extra or 10,000 rupees potukopa. They might be able to sign. So the first quality of the auditor is he has to be independent. That is, he has to be a third party of the organization. It is an independent examination of the financial information. Listen here, they are using the word financial information and not financial statements. That means financial information includes the financial statements along with all these other things. The journal entry, the ledger entry, the trial balance, and what is before the journal entry? The bill for this. This bill will be the sufficient appropriate audit evidence for this entry which you are posting. So all of these together is the financial information. So an audit is an independent examination of a financial information of any entity. For example, say there is a company who is having profit of 20,000 rupees and a company who is having a profit of 2,000 rupees. Can audit be done for this 2,000 rupee company and for 20,000 rupee company? Yes. So, based on size, will you do audit, or audit is done for all the entities? Audit is done for all the entities. Say, there is a loss of 10,000 rupees. For this, can audit be done? Yes, of course it can be done. Whether it is profit or loss, audit can be done. So, audit is an independent examination of financial information of any entity, whether profit oriented or not, whether they are making a profit or whether they are making a loss, audit can be conducted. Next, their fixed asset is only 0, small entity. Will that change? No, it won't change. So even if the fixed asset is 0, even if it is a small entity or if it is a big entity, it will not change. Fixed assets, whether it is small or big, it will not change. Audit can happen. Just a second. Audit is an independent examination of financial information of any entity, whether it is profit oriented or not, irrespective of its size. Next is, can an audit happen for company? Yes, it can happen. Can an audit happen for a firm? Yes. Can an audit happen for a sole proprietor? Yes. Can audit happen for a non-government organization? Yes. So whatever legal form it is there, audit can happen. So audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. All of this, for what are you doing? The auditor wants to give something called as opinion. When such an examination is conducted with a view to expressing an opinion thereon. Idella pandrathu only for one reason, that is to give an opinion. The opinion will say whether the financial statements are correct or incorrect. For now we will read it as correct or incorrect. Correct means it is representative of whatever is happening in the entity. Incorrect means it is not representative of whatever is happening in the entity. Clear, guys? Next, what is an engagement? Engagement. Is audit an engagement? What is an engagement? Engagement means an arrangement to do something. You can remember the ring ceremony engagement. What happens in that engagement? The boy and the girl come together. Yes, they are making a promise for the future. Who is making the promise for the future? Are the boy and the girl making the promise? No. The parents in the engagement will actually come together and make a promise saying, at this specific date, I am accepting for my daughter or my son to marry your daughter or your son. That is called as engagement. So, to whom are they telling this? They are telling between themselves, but there are main people, relatives who are coming to eat in the engagement. Correct? Yes? So, the promise is between two parents for the relatives. In front of the relatives, it should happen that in a future date that these two will get married. That is called as engagement. So, how many parties are there? 3 parties are there here. Same way, here also in an engagement, there are 3 parties. Who are the 3 parties in the engagement? Who are the 3 parties? Now, in an engagement, it can be an audit engagement or assurance engagement or anything. So, we will not be using the word auditor when I am saying engagement. Instead of auditor, we will be using the word practitioner. The practitioner in an audit engagement is the auditor. Clear? So, an engagement means an engagement in which the practitioner will express a conclusion. Conclusion na? His opinion. In an audit, it is an opinion which is designed to enhance the degree of confidence for the intended users. This is nothing but the stakeholders. So, this is the person who are as relatives. So, everything which is done is ultimately for the relatives. In front of them, the engagement is happening. Same way here, everything which is done is for the intended users, that is the stakeholders, other than the responsible party. Responsible party is the management. So, the management and the auditor will come together in an audit engagement and say, in this future date, I will be doing all these works. These are all my responsibilities. These are all your responsibilities. Appdin solli both of them are coming together and they are saying that. Are you able to understand? Now, who will prepare the financial statements? The management only should prepare and present the financial statements. The auditor cannot be involved in the preparation or the presentation of the financial statements. Now, how many engagements are there? There is someone called as Auditing and Assurance Standard Board. This Auditing and Assurance Standard Board has given a framework for all the engagement standards. So how many engagements will be there? The first thing is assurance engagement. In assurance engagement, what and all are there? Assurance engagement means the auditor will be giving an opinion in this engagement. At the end of the engagement, the auditor will be giving an opinion. Opinion means whether he will be saying it is correct or incorrect at the end of the engagement. Now in assurance engagement, we have two types of assurance engagement. One is based on past, that is historical financial statements, and the second one is based on the future, that is prospective or projected financial statements. This prospective or projected financial statements is for the future. Historical means it is for the past. Now historical financial statement, you tell me, audit is for the future or for the past? Audit is for the past. Whatever has happened, everything which has happened has been translated to journal entry. Journal entry is posted to ledger. Ledger has balance sheet, which is a financial statement. So whatever has happened in the past, auditor will be doing a post-mortem on that. Yes, so audit is a historical financial statements. Under historical financial statements, do we have only audit or we have something else also? We have something else also, which is investigation and review engagements. What is audit? Audit is a independent examination of the financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. When such an opinion is given, when such an examination is conducted with a view to expressing an opinion there, that is audit. What is SA 200? SA 200 is overall objectives of an independent auditor. Overall objectives of an independent auditor. Or auditor நீ என்னெல்லாம் கிழிக்கணும் அப்படின்னு சொல்றது தான் SA 200. What are these standards? What is SA? What is SA? Standards on auditing. Why do we need these standards? What is the background for having these standards? For example, how many types of biryanis are there? Come on guys, how many types? How many types of biryanis are there? Basmati, Hyderabadi biryani, Ambur biryani. What else? What else? Siraga Samba biryani. What else? Veg biryani illa sollira kudadunna idha solrene. What other biryanis are there? What other biryanis are there? That's all. You guys know that much only. Chicken biryani, mutton biryani, all of those things are there. Hyderabadi biryani, Ambur biryani. What other? Dindigul biryani, very important. So there are so many types of biryani which is there. For this, what are all the ingredients which should compulsorily be there? Compulsory ingredients. There should be ghee. There should be some kind of meat. There should be rice. There should be spices and salt. So all of these things are compulsory ingredients. Apart from this, if you want, you can put cashew. If you want, you can put the other ingredients. But don't put only vegetables and call it a biryani. Like that, you are setting a standard. Are you able to understand? Like that, in auditing also, they are giving you the ingredients. Idella 100% you have to follow. If you want, you can do more also. If you want, you can put cashews also. But don't be without putting these compulsory ingredients. If you put only vegetables, if you want to add one takali to this, you want to add one tomato to this, you can add vegetables. But if you miss any of this, then it is not called as audit itself. It is not called as biryani itself. Are you able to understand? So the standards on auditing is basically giving you a guidelines as to how you have to conduct the audit. So what are the benefits of having standards on auditing? Benefits of having standards on auditing. What are the benefits? The first one, you will ultimately get a high quality biryani. Yes or not? இதெல்லாம் நீ ஃபாலோ பண்ணனா அந்த பிரியாணி பக்காவா இருக்கும். Yes, the different people will make differently. They also say hands also is different. Yes or no? Yes, definitely. When an auditor is doing an audit also, different minds are working differently. But if you are following all these things, then I will be sure that at least 99% taste will come. So I am assuring of high quality if you are following all the standards when you are doing the audit. The second one is there are so many people who are involved. Who are those people? Those people are called as stakeholders. There are so many people who are involved. Are the shareholders owners of the company? Yes, they are the owners of the company. They are giving the money and they are getting something called as shares, which is just a paper. Now not even paper, it is digital. And what is happening to their money? For whatever operations it is happening in the entity, the money of the shareholders are being used. Being the owners of the company, do they have to know whatever is happening in the company? Definitely they have to know whatever is happening in the company. Can they go every day and go and see? It is not possible for them to go every day and see what is happening in the company. So whatever auditor gives, signs and gives, they can trust immediately. Are you able to understand? Now there are so many employees in the organization. Say some employee is doing fraud. Say some employee is doing fraud. That means he is embezzling some cash and all. Is there a possibility that the auditor, when he goes for audit, finds out that this specific employee is taking out the money from the company? Yes. So it is stopping the employees to doing some kind of a fraud. The fourth one, you are saying 100 rupees only profit. Out of that, 30 rupees only I am paying the tax. But your sales is some 4,000 crores. Will the government believe that? Sales 4,000 crores. Profit 100 rupees. Tax paid 30 rupees. Will the government believe this? Obviously they will have their own doubts. But is it possible to have financials like this? Is it possible to have financials like this? Of course it is possible to have financials like this. There cannot even be profit with having a sales of 4,000 crores. It can even be a loss with a sales of 4,000 crores. Of course a financials like this is possible. But the government will be believing a financial like this only when the auditor signs on the financial statements. So it is helping for the government to trust that this much only is the tax which is to be paid. The next is, the company is going and asking the banker, listen here, I am Daimler AG. Daimler AG is parent company of Benz. So I am Daimler AG. Benz a company you all know. I am bigger than that itself. I want to start a new EV division. For this EV division, I want a loan for 5,000 crores. Then the banker will ask, what are you exactly going to do with this loan? Then I'll have to submit a full financials for the next 3 months, for the next 6 months as to what I'm going to do with this 5,000 crores. Yes or no? So basically I have to prove to them that with this 5,000 crores, I will be able to generate a revenue of something more than this. Yes or no? Only then the banker will be convinced that with this money itself, whatever you are deploying the funds, you will be able to make some profits and you will be able to repay that money back to him. He is only concerned about his own self, correct? He wants to know whether you will be able to repay the money or not. So any lender or banker, if they want to rely on the financial statements, they will look for auditor's signature. An auditor is coming to do an audit. You are saying that, management is saying that, sir, I have a petty cash. In that petty cash, I have these rules. Saying after 10,000, this person has to sign. After 50,000, a senior member has to sign. After 1 lakh, I am the CEO, I myself have to sign. These are the rules which I am having in the organization. What is this called? It's called as internal control. Internal control is framed by the management for the management. Internal control is being communicated to the auditor. Will the auditor be able to find whether this internal control is operating properly or not? Yes, when he is conducting the audit, he will be able to find out whether the internal controls are effective or not. That is also a benefit for having standards on auditing, because which standard is talking about internal control? SA 315 elaborately is talking about internal control. So if you follow that standard, you will be able to comment on the internal controls also. Clear? So what are the benefits of having the standards on auditing is, first one, high quality biryani you will be able to give. The second one is, so many people are relying on the financial statements. Who are those people? The shareholders, government and banker. So these three people are also getting benefited if the auditor is using standards on auditing. The next one is, if there is any fraud which the employee is doing, the auditor will be able to find that out. Next, the internal control, whether it is operating effectively, the auditor will be able to find. Now coming back to here, we were in types of assurance engagements, and I said assurance engagement are split into two, that is something for the past and something for the future. If something is for the past, we were all very clear that audit is for the past only. Whatever has happened, the auditor is going to sign. Investigation. What is investigation? Investigation means they are diving deep into it and they are able to give 100% assurance. Is audit 100% assurance? Audit is reasonable assurance. That means a good amount of assurance, but something less than 100%, this is only audit. What is limited or moderate level of assurance? That is the review engagement. I want you to think of it like this. For example, guests are coming to your house. If guests are coming to your house and if they have informed 1 month prior, what will you give them? Guests are coming to your house and they have informed 1 month beforehand. What and all are the items you will be giving the guests? Number 1. As soon as they enter, what will you give? Water. Next. Sweet. Juice. Yes. Next. Okay, some snacks. They are coming for dinner time. Next. What dinner? Be specific. What dinner? Starting from starters. Next. Soup. How many starters? Some 3 starters. Soup. 1 soup. Next. Main course. How many items in main course? 2 or 3 items in main course. Then again 1 sweet, which is dessert. You will give so many items. This is called as feast. You will be able to give them a full-fledged feast if they are able to tell you 1 month in advance. Say they are coming. Today they are coming. Yesterday only they told you. What will you able to do? Maximum biryani. Happy. You also happy. They also happy. Biryani plus onion raita. Yes. They are on the way. வர வழியில தான் கால் பண்ணியே சொல்றோம். வந்துட்டே இருக்கேன் டின்னருக்கு வர அப்படினு சொல்றோம். What will you be able to make? Upma. This is the national food of India. Yes or no? Upma. If they are telling you only when they are on their way, you don't have time. So here in review engagements for all the listed entities, they have to submit a quarterly report, quarterly review report to the SEBI within 7 days of the end of the quarter. So what can you make? Very limited time. So limited review. All you can make is only Upma. Audit is, there is a timeline, but there is a proper timeline saying by September company accounts, July individual returns. All of these things, timeline is there. That is previous dates they are telling you, this is on time, so you are able to make a biryani. But if there is no timeline, 1 month is there, so much timeline is there now, you will be able to give a proper feast. This feast is called as investigation. Biryani is called as audit. Upma is called as review engagement. In a review engagement, there will be only a limited or moderate level of assurance. In an audit, what kind of assurance? Reasonable level of assurance. In an investigation, 100% assurance. Are we able to understand between these three? Yes. Now coming to prospective or projected financial statements. Remember guys, I am still under assurance engagement only. Assurance engagement, first I split into two. The first one was historical, the second one was prospective or projected. Under historical there were three, that only was feast, biryani and upma. Now coming to prospective or projected. For the future, the company is doing something. Say for example, Ola is there. Ola wants to get an investor. Investor means who? They will be giving money. If they believe in the business of Ola, they will be giving money for which they will be getting equity in return, percentage of Ola in return. So, will anybody give money at any time? No. They will first check the business of Ola, whether Ola is actually able to get so much revenue based on the equity the investor is getting. Yes or no? So there will be so many checks which are done by the investor. The investor wants to know, okay, I am giving you say 1000 crores. With this 1000 crores, what are you able to do with these 1000 crores? Are you able to increase the revenue at least 10 times more? Only then for this 10% equity, I will be getting something in return at least in the next 5 to 6 years. Yes or no? Investor will want to know all these details. So Ola will go to one person and ask this person to sign on the financials for the projected financial statements. Are you able to understand? Same applies for lender also. Banker will also want to know the projected financial statements. Sometimes it can be for non-financial information also. For example, a control is just designed in the organization. Control is just designed in the organization. So they want to know how this control will be working. As per this design, if the control is working, all of these things will happen. Only one person will sign. That is also for the future, because right now the control has only been designed. Are you able to understand? So you can just remember investor, Ola for projected financial statements. The next one is called as agreed upon services. Agreed upon services. Agreed upon services, we have SRS, that is standards on related services. What are these related services? Any kind of compilation engagement or any kind of just checking two segments or two geographical areas. I am only checking Tamil Nadu and Kerala operations. All of those things are coming under SRS, related services, agreed upon services. So here in these agreed upon services, is the auditor giving any kind of opinion? Is the auditor giving any kind of opinion? No, here auditor is not giving any opinion. He will help the management. Basically, management to auditor, they will help the management to do the related services. So here, should he be independent? Not necessary to be independent here. Clear? So here first we saw the framework for all the engagement standards. In that we saw what is the assurance engagement and standards on related services, that is agreed upon service. Assurance engagement I split into two, which is historical financial statements and projected or prospective financial statements. The historical financial statements I split into three. The first one was investigation, which is 100% assurance. Audit we all know is only reasonable assurance. Reasonable assurance means 99.99%. Something which is less than 100% is reasonable level of assurance. The third one is limited or moderate level of assurance. That is SRE, review engagements. Clear? Yes? Next, shall we go to the next part? Let's just go through the PDF for Essay 200. Essay 200 is overall objectives of an independent auditor and the conduct of audit in accordance with standards on auditing. What are the objectives of Essay 200? Each and every standard will have an objective and scope. Definitely they will have an objective. What is the objective is to obtain reasonable assurance. That means something which is less than 100% assurance about whether the financial statements as a whole are free from material misstatement. What is the meaning of free from material misstatement? Free from material misstatement means they are correct. Whatever is happening there, that is what is representative of whatever is happening here. What is the meaning of material misstatement? Material means important. Misstatement means mistake. What kinds of mistakes can happen? For example, what is your name? Aftab. Yes? Aftab, do you have girlfriend? You imagine you have a girlfriend. You and your girlfriend went to beach. There were few rowdy boys there. They were irritating your girlfriend, eve-teasing your girlfriend and all of those things. Are you angry? Very angry, correct? What will you do to them? What will you do to them? You want to hit them, but your girlfriend is there next to you. You can't hit them because it is unsafe for her. Yes? So what you will do, you will first drop your girlfriend home and then you will go find their address, go to their house and you will bash him. Yes or no? Or you will sit simply. You will definitely bash him. Yes? This is the first level of mistake. Say you and your girlfriend, you are talking on phone and going. You are ride bike. Yes, when you are riding the bike, you are having those headphones and you are talking happily, you are going in the bike. Pavam and Tata, he is walking in the corner. You are jolly when you are talking in a bike, by mistake, you just hit him. When you hit him, already he is of old age. What happens to him? Spot gone. Over, mar gaya. That is also a mistake, but here, your intention is not to hit him. Yes or not? Here the intention is not there. Here the intention is there. So misstatements are of two types. Both are mistakes. Can you hit them? No, both are mistakes. One is intentionally you are going and hitting them. The other one, it is an unintentional mistake. Unintentional mistake means it is an error. Intentional mistake means it is a fraud. So material misstatements are of two types, that is fraud or error. So here the objective for this standard is to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement. This misstatement can be either due to fraud or error. Once he is checking that whether the financial statements are free from all these mistakes, that means it is correct. Whatever has happened there, if there is a purchase of fixed asset, the correct entry has been posted here. Whatever has happened there has been represented in the financial statements. Now, then the auditor will be able to express an opinion whether the financial statements are as per applicable financial reporting framework. Applicable financial reporting framework is nothing but your accounting standards. Now in AS. Alright. Now next one, next objective. Okay, you are checking whether the financial statements are free from material misstatement, whether due to fraud or error, in order to give an opinion thereon. All these things you are checking. You will check and keep it with yourself. You will prepare an audit report and you will communicate it to the stakeholders according to standards on auditing. The way you have to do the audit, the way you have to prepare the report, the way you have to communicate it to the stakeholders, everything is given in the standards on auditing. That is the second point. To report on the financial statements and communicate as required by the standards on auditing. Are you clear? So the objective of SA 200 is to obtain a reasonable level of assurance. That means a good level but something less than 100%. What assurance you are getting? That whether the financial statements as a whole are free from material misstatement, whether due to fraud or error. Because of this, the auditor thereby is enabling to express an opinion thereon whether the financial statements are prepared as per applicable financial reporting framework. All of this work he is doing to report and communicate as required by the standards on auditing. Clear, guys? The overview of the objectives, whatever is given in these 2 points, that only is given here as these 6 points. The same thing, to obtain reasonable assurance. Gaining a reasonable assurance leads to formation of an opinion in accordance with AFRF to report on the financial statements. Reporting what? Reporting the opinion. Next, communication of reporting. Reporting and communication should be in accordance with the standards on auditing. So basically these 6 points, they have just broken down the 2 objectives of the standards on auditing. If they are asking for 2 marks, you will be writing this. If they are asking for 6 marks, you will be writing the objectives and also the overview of the objectives. Clear? Next is scope of audit. You will be covering all the aspects. All the aspects means from journal entry to ledger entry, even before the journal entry, what is there? All of those things, internal control, each and everything you have to check. Reliability and sufficiency of financial information. What is the meaning of sufficiency? Sufficiency means in SA 500 we would have seen sufficient and appropriate audit evidence. What is the meaning of that word sufficient? Sufficient means the quantity. Appropriate means quality. So reliability and sufficiency of the financial information and whether proper disclosures are done. And the last one is, if everything is okay, he will be expressing an opinion on the financial statements. What and all are not included when you say audit? The first one is who has to prepare and present the financial statements? The management. So in the scope of audit, the responsibility for preparation and presentation of financial statements will not be with the auditor. Second, duties outside the scope of competence. That means if there is a huge machinery, complex machinery, will the auditor be able to go there and tell what is the life of that machinery? We will not be understanding how the machine is working itself because we are studying only accounts, law and all of those things. A proper engineer has to come and be able to tell the life of the machine and all of those things. Can an auditor tell that this invoice is genuine and sign on that invoice? No, the auditor cannot authenticate the documents. The auditor can only sign on the audit report. Expertise in authentication of document, genuineness, all of those things, auditor will not come. Is audit equal to investigation? No. Investigation is what assurance? 100% assurance. So investigation is also out of the scope of what is called as audit. Clear, guys? Scope of audit, what and all it includes, what and all it excludes. Now sometimes audit requirements will be as per law or voluntarily they will come and say, we will have audit. Who and all are the people for which audit requirements are mandatory? That is, as per law it is required. Now first, all the companies governed under the Companies Act 2013. First thing, all the companies, they have to have audit. The second one, banking company, insurance company, electricity company, cooperative society company, charitable trust, all of these people also must have audit compulsory. Then who only will not have audit, ma'am? For whom it is not compulsory? Sole proprietor, HUF, partnership firm. For all these people, they might not have audit, but say TCWG is there. That is, those charged with governance. Those charged with governance are the people who will set the direction of what the company should do. Yes or no? They will not be involved in the day-to-day operations of the company. They are top level people, CEO, CFO. They will say, this is your target, next 6 months you have to do this. And all the other people, manager and operational level people, they will be working towards that goal. So this TCWG, say in a partnership firm, the TCWG will be the partners of that entity. That partner might not be involved in the day-to-day operations, but he wants to know what is happening in the entity. So he will frame an internal rule saying, either in the memorandum of association or article of association, he will say that this company should mandatorily undergo audit. So if the internal rules require audit, then audit has to be done for them. Say for example, sanction of grant. What is the meaning of grant? Grant means the government will be giving some funds to a company to encourage them. If they want to encourage an industry or if they want to encourage a specific company, then the government will be giving funds for free. If they are giving a grant, they want to make sure whether you are really in that industry, whether you are capable of doing business in that industry, whether you will use the funds properly. So for sanction of grants, they want some proof that you are using the funds properly. So even though you are a HUF or a partnership firm or a sole proprietor, if you are getting a grant, the government will want to know the financial statements, and the financial statements has to be audited. Loan, same way, if a banker is giving money, the banker needs to be sure that the money is used for the purpose for which it was bought. So the lender or the banker also might require audit. So in these cases, it is not mandatory for proprietor, partnership and HUF. It is not mandatory, but if the internal rule requires, or if there is a sanction of grant or loan, then they may require the audit. But if it is a company under Companies Act or banking company or electricity company, cooperative society, all of those things, compulsorily they have to have the audit. All these dashes are for years. If you want, you Google and you write the years so that you will remember. Otherwise, you can leave it, no problem. Next, appointment of auditor. Who will be appointing the auditor? So for a company, the shareholders in the annual general meeting will be appointing the auditor. For a government company, the big person called as Comptroller and Auditor General, he will be the person who is appointing the auditor. In a firm, the partners will be appointing the auditor. So to whom will the audit report be given is whoever is appointing, to them only audit report will be given by the auditor. So in the case of company, to the members, that is the shareholders, it will be given. In 700 we will see the components of audit report. The first one will be the addressee. Addressee na nee yarukku kudukra in the audit report, that will be to the members of XXX company limited or something like that. That means you are giving it to the shareholders. So who is appointing the auditor in a company? Shareholders. To whom is the audit report given? Shareholders. In a firm, who is appointing? Partner. To whom is the audit report given? Partners. In a government company, who is appointing? C and AG. To whom is the audit report given? C and AG. Clear? Yes? The next is engagement. We finished. Essay 210 is talking about agreeing the terms of audit engagement. Before you enter into an engagement, there will be few terms and conditions. Yes or no? Yes or no? Before engagement, before you get married to somebody, there will be an engagement. Before getting into an engagement, there will be some discussion between parents, discussion between the boy and the girl. Now what will they talk? Inga paru, I don't know cooking. Cooking, cleaning, vessel washing, all of those olden days. Nowadays, I don't know anything. I am daddy's little princess. Yes or no? I have not done a single work in my house. But for you, I am willing to learn. I will learn cooking, but whatever I am cooking and putting in the sink, you have to do vessel washing. Like Big Boss house, you will first split the duties and you will give them. Yes or no? Clear? So before an engagement, what will happen? This is your responsibility. This is my responsibility. You are able to separate it and give it to different people. The same way here, the engagement is between the auditor and the company. Here the responsibilities will be split, saying the preparation and presentation of the financial statement is the responsibility of the management, and obtaining sufficient appropriate audit evidence and doing all the audit procedures and giving an opinion is the responsibility of the auditor. Like that, they will be splitting the responsibilities even before getting into an engagement. Are you able to understand? That is SA 210. It deals with auditor's responsibility in agreeing the terms of audit engagement with the management and those charged with governance. What is the objective of the auditor here? Based on the responsibility, so here if the boy is telling, chanceless, you told you will learn, no, you are learning to cook. If you are learning to cook, you learn to wash the vessels also. What is the big deal if he is telling like that? Will you accept the engagement? Will you continue with that boy? No, you will think of, that means future, he has some more burdens for me. Like that you will start thinking. So the objective of this standard is accept or continue an audit engagement. Listen here, the words used here is not accept or reject. Here the words used are accept or continue. If it is a new engagement, you will be accepting. If it is already an existing engagement, that means an auditor will be appointed for 5 years. Engagement letter is prepared only for 1 year. For the next year, you will be continuing the audit engagement. That's why they have used the words accept or continue an audit engagement. Only on the basis upon which auditor has been performed, has been agreed through. First thing is there should be preconditions for an audit. What are the preconditions? The preconditions are that the financial statement should be prepared as per AFRF. Because when the auditor goes for audit, we are studying so many things. Standards on auditing, so many standards, everything we are studying and going. Anga poi paatha, he is using US GAAP. How will we even correlate and sign and tell the stakeholders whether these financial statements are correct or not? So the first precondition is the financial statement should be as per AFRF. Confirming that there is a common understanding between the management and the auditor for the preparation of the financial statements in accordance with AFRF. I told you internal control means it is a policy and procedure which is for the management, by the management. It is designed, implemented and maintained by the management and TCWG or any other personnel. Yes or no? So for the internal control, the management considers necessary to enable the preparation of financial statements that are free from material misstatement. Material misstatement whether it is due to fraud or error, intentional or unintentional. The third one is whatever the auditor asks, the management must be in a position to give the auditor, to provide the auditor with access to all the information. Information I am giving. But if you feel that I have not given some information and you are asking for more information, I cannot tell. I already gave you, get out. I should be able to give that additional information, whatever the auditor feels it is necessary for the audit also. In some cases, the auditor will be going to individuals and asking them few questions. Is this really happening in the entity? Really, I saw this invoice of fixed asset. I want to see the fixed asset in person. Through my eyes, I want to see. Then only I will believe that this invoice is original. Show me the fixed asset. Like that, you can go and ask the random people in the organization. So, access to all the people, unrestricted access to persons within the entity must be there. All of these are preconditions for the audit. SA 210 is basically saying before entering into an agreement, the auditor will think whether he has to accept or continue. He will accept or continue based on the preconditions whether it is there or not. What are the preconditions? The financial statements are as per applicable financial reporting framework, and all the internal control is proper in the organization, which is enabling the financial statements to be free from material misstatement, whether due to fraud or error, and the auditor must get all the information, and if there is any additional information, that also the auditor must be able to get, and unrestricted access to personnel in the organization must also be there for the auditor. If everything is there, then he will accept or continue with the engagement. Clear, guys? Yes? For this, they will be having a love letter. Because only if it is in writing, they cannot go back. Nee sonnella na cook pannana, you are washing the vessels na, nee maati pesa kudadana. I am making an agreement. In the love letter itself, I will be writing. I liked it that you told like that. All of those things I will write in the letter and get it signed from him. That is called as engagement letter, where the auditor will be signing and the management will be signing in the engagement letter. What is the engagement letter? What and all will be there? What is the scope of that audit? What is the objective of the audit? The objective of the audit is to give a reasonable assurance. For that, I will be checking all the items in the financial statements, all the profit and loss account, all the balance sheet, everything. That is my scope. What is the responsibility of the auditor? The responsibility of the auditor is to do all the audit procedures, get all the audit evidence and give the opinion within the stipulated period. All of those things are responsibility. Responsibility of the management. What is the responsibility of the management? Preparation and presentation of the financial statements. Identification of AFRF. All of these things will be there in the engagement letter itself. Yes, but if law or regulation tells the terms of the audit engagement, then the auditor need not have a separate engagement letter, because law is most superior than everybody else. If the law itself is saying idudha on scope, idudha on objective, idudha on responsibility, and if law itself is telling everything, no need a separate engagement letter. Clear? Okay. Now if the preconditions are not there, that means they are not giving access, or they are not providing information, or it is not as per AFRF. All these preconditions, if it is not there, first you go and ask the management. First discuss the matter with the management. If the law is saying whether preconditions are there or not there, I am saying you are appointed as the auditor, I am saying this is the engagement letter, this is the scope, you have to do the audit now. There is no questions asked, because law is the most superior person. So even if preconditions of the audit are not there, and if the law is saying so, you will be continuing with the audit. But if the law is not saying so, then he has to first discuss with the management. Directly don't reject. Give him an opportunity. Ema, nee da first sonnalla cook pandrenu. Kalyanathu appuram maati pesna enna artham. Like that you please discuss. Directly don't go against that person. Clear? Limitation on scope of auditor's work prior to acceptance of audit engagement. Imagine you are going for audit. First lerde avan oru mari thena vetta pesuvan. Engagement letter pottadilirundhe oru mari nee da auditor. When you completed CA, okay, it's been only 4 years. In this 4 years, what you would have done? Some 10 audits, that's all. For me, I am in this company for 20 years. I have seen 20 auditors. My age is much more. Your experience is so less. All of those things he is talking. He is speaking. When you are going for audit itself, you know that na enna question ketalum he is not going to give. இந்த மாதிரி ஏதாவது பேசிட்டே தான் இருக்க போறோம் அப்படின்னு உனக்கு முன்னாடியே என்கேஜ்மெண்ட் போறதுக்கு முன்னாடியே if you are able to know that, then why even go to the engagement? Yes or no? If the auditor believes that the limitation will result in the auditor disclaiming an opinion, when he will disclaim his opinion, when there is no sufficient and appropriate audit evidence, if he knows that audit evidence itself will not be given to him, ஒரு மாதிரி எடக்கு மடக்கா பேசிட்டே இருக்கானா, don't even accept the limited engagement. He is putting limitations on your work. He will not be able to provide all the information. He will not allow you to do all your audit procedures. He will not allow you to get the audit evidence. Appadina, if you know all of these things before itself, you please do not accept the limited engagement. Clear? Yes? Now, the terms of the engagement are done. What was the terms in this engagement? Girl is going to do cooking. Boy is going to do vessel washing. This was going very good. Every day girl used to cook. Every day boy used to do the dishes. Vessel washing was taking care of the boy. One day girl told, can we please shift? It is very boring for me. Same thing every day I am doing. You please do cooking from tomorrow. I will do the vessel washing from tomorrow. What will you do? I am feeling very bored. Same thing I am cooking. நீ ஏதாவது டிஃபரெண்டா சாப்பிட்டாலும் பரவாயில்லை. Every day biryani. Every day I have to cook the same biryani. Very boring for me. Please let's interchange the roles. They are asking like that. Or they are saying give me holiday for 5 days. I want leave. They are asking like that. What will you do? Immediately will you go for divorce? Just because they ask like that? No. If there is a reasonable justification, then you will accept for the change. Same way here also, if there is a change in the terms of the audit engagement, directly don't say no. First see if there is a reasonable justification. If there is a reasonable justification, then please accept it. If there is no reasonable justification, then reject the engagement. Clear? Yes? What is the meaning of recurring audit? Recurring audit. Recurring audit is something which is happening year after year after year. Continuously the same auditor is the auditor for that company. That is called as recurring audit. Normally auditor will be appointed for how many years? 5 years. Then he can be appointed for another 5 years. Then there will be a cooling period of 5 years. Then again he can be appointed for 5 plus 5 years. Yes or no? So that means for a 10-year period he can be appointed as the auditor for the same company. Recurring audit means year after year after year the same person is doing the audit. During recurring audit, can the auditor just leave it, engagement letter done, signed done, 5 வருஷம் no problems அப்படின்னு சொல்லிட்டு விட்டுறலாமா? Or he has to step into it and see when he has to send the revised engagement letter. He has to see when he has to send the revised engagement letter. When he will be sending the revised engagement letter. The first one. They told that this is your responsibility, this is my responsibility. You told the girl that her responsibility is cooking. What she understood, cooking means what? Stove la cook pannradhu. That means if somebody cuts the vegetables and gives me, I will just put the vegetable and cook it. She understood like that. What happens here? Because of this, fights are happening. So if one of the party misunderstands the scope, then at that time in a recurring audit they will be looking to change the engagement letter. Misunderstanding of the objective or the scope. Say first they told cooking and he was doing vessel washing. Now after this cooking there is a cleaning which is involved, yes or no? That is the worst part of cooking. Cooking is mudinjirum, but the cleaning will take much more time than cooking. And the cleaning apatti eduvume pesla. So what is happening every day? No one is cleaning. You told me to cook. I did the cooking. He was supposed to do vessel washing. He did the vessel washing. Nobody spoke about the cleaning part of that work. So what is happening there? They want to revise the terms of the audit engagement. When they are revising the terms of audit engagement, they will be able to tell that cleaning one day I will do, one day you do. Like that they will split it among themselves. So if they want to revise the terms of the audit engagement, or if one party has misunderstood the scope of the audit engagement, even during recurring audit, engagement letter can be revised. Clear up? Now, one person is there in the management side. He only signed the engagement letter. Alright? Now after 2 years, that person quit his job and went for another job. Another person who came here, he is telling, அவன் தான சைன் பண்ண அந்த என்கேஜ்மெண்ட் லெட்டர், எனக்கும் இந்த என்கேஜ்மெண்ட் லெட்டருக்கும் என்ன சம்பந்தம் இருக்கு? Why should I follow this engagement letter? Just throw it in the dustbin, he is saying. So if there is a change in senior management, in that case also try to revise the engagement letter. Now Ola was there. I told you Ola wants an investor. So what happens here? 10% equity first they give. Investor loved the company. Investor wants to get more equity. I will give more money. Appdin solli kept getting equity. Now investor is having 100% of the equity. Basically the person who founded Ola has quit the company, sold all his equity, got good money from the investor and settled in life. In this case, the owner itself has changed. If the owner itself has changed, please change at least that single paper engagement letter also you change. So if there is a change in senior management or change in ownership, then you have to change the engagement letter for the next is they were doing car manufacturing. Yes, EV car, normal car, SUV, sedan, they were doing car manufacturing. Suddenly they want to get into luxury bikes also. What is happening here? They are changing the nature of the business itself. If the nature of the business has changed, or if the size of the business has changed, in all these circumstances, they can change the engagement letter. Say the FRF has changed, that means what? Financial reporting framework, from AS to Ind AS it has changed. Now everybody has to follow Ind AS only, but engagement letter la enna potrukku, responsibility is to follow the accounting standard. In that case also the engagement letter will be changed, or any other reporting requirements, if it is changed, engagement letter will be changed. For September exam, recurring audit, very important. For recurring audit, when they can change, misunderstand the scope, revising the terms of the audit engagement, change in senior management, change in ownership, change in nature of the business, change in the size of the business, change in the financial reporting framework, change in the reporting requirements. In all these cases, even in a recurring audit, year after year after year, the same auditor is getting appointed, he will consider to change the engagement letter. Clear, guys? Yes? Now, there is a recourse for the auditor in a situation of non-agreement for the change in terms of engagement. That means what? The auditor is saying, listen here, I want to change these terms. It is not proper. I want to expand the scope or something like that auditor wants to do. Management is not cooperative. Now auditor is saying, say, okay, previous engagement letter you signed, I want to at least continue that. For that also management is not continuing. If it is that case, then the auditor can withdraw from the audit engagement. He can quit the engagement and go. Clear? But before withdrawing, he has to determine whether it has to be communicated to those charged with governance or the owners of the enterprise, or if the law requires him to do the audit, to the regulators also he might have to communicate. So if he has to withdraw directly, he can't say poda and get out of the office. He has to first communicate to all these people and then only he can get out of the office. Clear, guys? This is essay 210. Next, shall we go to essay 700? Yes, 700 series. What is essay 700? What is essay 700? Forming an opinion and reporting on the financial statements. That means how the auditor has to form the opinion, how the auditor has to report on the financial statements is given in essay 700. 701 talks about key audit matters, communicating the key audit matters in the independent auditor's report. 701 is applicable only for listed entities. Only if it is listed in the stock exchange, the key audit matters must be communicated. Otherwise, that paragraph itself will not be there. 705 is talking about if there is any mistake, that is whatever has happened, it is not represented in the financial statements. If there is any mistake, you have to go for modifications to the opinion in the independent auditor's report. These modifications will differ based on pervasiveness, whether sufficient appropriate audit evidence is there and all of those things. So basically, if there is a material misstatement, 705 will come into picture. 706 is EMP and OMP in the independent auditor's report. Emphasis of matter paragraph and other matter paragraph in the independent auditor's report. When they have to use the EMP, when they have to use the OMP will be given in 706. Now coming to 700, we said this is forming an opinion and reporting on the financial statements. Every standard will have a objective and the scope. What is the objective of essay 700? The first objective is forming an opinion and reporting, which is the same as the name of the standard. The second objective is what and all are the contents in the audit report, that is given in essay 700. What are the contents given in the audit report? Can you see? Yes? The first one is title. What is the meaning of title? It will be written as Independent Auditor's Report. This first this is the audit report. So first give the title. The second one is addressee. To whom you are giving this audit report? To the members of company. Next is the opinion paragraph. Opinion means this is the main paragraph as to what the auditor is saying. Opinion na whether it is materially misstated or not அப்படிங்கிறது சொல்லுவாங்க. If it is materially misstated, I told you that we have to go to essay 705 modifications to the opinion in the independent auditor's report. What are they saying? Modifications of the opinion in the independent auditor's report. This essay deals with auditor's responsibility to issue an appropriate report in circumstances when informing an opinion in accordance with essay 700. Forming an opinion nale essay 700, the auditor concludes that based on whatever audit procedure he has done and whatever audit evidence he has obtained, he is concluding that the modification to the auditor's opinion on the financial statements is required, is necessary. He is concluding that the financial statements has to be modified. That means the financial statements are not representative of whatever has happened actually. That means there is a material misstatement, whether it is intentional or unintentional, it exists due to fraud or error. The essay also deals with how the form and context of the auditor's report is affected when the auditor expresses a modified opinion. What is the objective of the auditor? Based on audit evidence obtained, the auditor should say that the financial statements as a whole are not free from material misstatement, or the auditor is unable to obtain sufficient appropriate audit evidence to conclude that the financial statements as a whole are free from material misstatement. Now, modification means that there is a material misstatement. If there is a modification, the next thing they have to check is whether they have sufficient appropriate audit evidence and whether it is pervasive. What is the meaning of the word pervasive? The meaning of the word pervasive means paravaradu. That means one item in the financial statement is wrong has affected all the other items in the financial statements. That is called as pervasive. Now, just one item is wrong, but it is not affecting all the other items in the financial statements, and for this I have the sufficient and appropriate audit evidence. In this case, I will be giving a qualified opinion. Qualified opinion means it is only affecting one item and I have the sufficient appropriate audit evidence for that. I know that it is not pervasive. That is called as qualified opinion. It is affecting one item, and because of this one item it is affecting all the other items in the financial statements. I have proper, sufficient and appropriate audit evidence. Now, I will give a adverse opinion. For example, I have a sufficient appropriate audit evidence that the closing stock, which has to be valued at cost or NRV, whichever is lower. It has to be valued like that. But what they have done is they have only taken cost. Market price lam paakave illa. So even if market price is increasing, the stock which is being showed is undervalued. If stock is undervalued, that means your gross profit is also undervalued. If your gross profit is undervalued, that means your net profit is also undervalued. The net profit is getting transferred to the balance sheet, yes or no? There is a mistake. So just because one item, that is closing stock, there is a mistake, it is affecting all the other items in the financial statements, so that we can conclude that it is pervasive in nature. Pervasive means paravaradu. One item tappa irukradnala all the other items also there is a mistake. Clear? So here, if there is a material misstatement and one item is affecting all the other items in the financial statements, and I have sufficient appropriate audit evidence for this which is happening, then I will be giving a adverse opinion. Clear up? Yes? The last one is, I don't have a sufficient appropriate audit evidence, but if I know that if I get this evidence, I will be sure that there is a material misstatement and this mistake will affect all the other items in the financial statements. In this case, I will be giving a disclaimer of opinion. Disclaimer of opinion means there is no sufficient appropriate audit evidence, but if it is there, I know that it will be pervasive. For example, Kingfisher Airlines is there. Kingfisher got a loan for 8,000 crores. Yes, Kingfisher Airlines is there, got a loan for 8,000 crores. They withdrew, that means drawings, say some 1,000 crores. They withdrew drawings, some 1,000 crores out of this loan of 8,000 crores. Who withdrew? The management, those charged with governance, those people withdrew. But for what purpose they withdrew all of those things, I don't have proper evidence for this. In this case, 1,000 crores is a huge amount. Yes, there is a material misstatement. Yes. Whether it is pervasive, yes, if he has really withdrawn so much money and when the company is already going through so many losses, it will affect the going concern itself. So it is pervasive in nature. It is affecting all the other items in the financial statements. But I don't have proper, sufficient and appropriate audit evidence. I know that he has withdrawn, but for what purpose he has withdrawn, what date he has withdrawn, who exactly has withdrawn, whose account this has gone to, all of of those things are still daisy. I don't have proper picture on that. So if there is no sufficient appropriate audit evidence, but if there is a material misstatement and it is also affecting all the other items in the financial statements, I will be giving a disclaimer of opinion. Can I say that if there is no sufficient appropriate audit evidence itself, I will be giving a disclaimer of opinion? No. If there is no sufficient appropriate audit evidence and if there is a material misstatement but it is not pervasive, I will be giving a qualified opinion. So in two cases, I will be giving a qualified opinion. First one is if there is sufficient appropriate audit evidence that there is a material misstatement but it is not affecting all the other items, not pervasive, I will give a qualified opinion. Or if there is no sufficient appropriate audit evidence that there is a material misstatement and it is not pervasive, I will be giving a qualified opinion. So can I say that whenever it is not pervasive, that means whenever it is not affecting all the other items in the financial statements, can I give a qualified opinion? Yes, can I say that? Yes, I can say that. If the pervasiveness is getting affected, that means it is affecting all the other items in the financial statements, then I should either give an adverse opinion or disclaimer of opinion based on sufficient appropriate audit evidence. If there is sufficient appropriate audit evidence, I will be giving a adverse opinion. If there is no sufficient appropriate audit evidence, I will be giving a disclaimer of opinion. This table is extremely important. Extremely important. If there is sufficient appropriate audit evidence and there is a material misstatement, not pervasive, qualified opinion. Not pervasive nale, only qualified. If there is no sufficient appropriate audit evidence and there is a material misstatement but not pervasive, qualified opinion. If there is sufficient appropriate audit evidence, there is a material misstatement and it is pervasive, yes, then adverse opinion. If no sufficient appropriate audit evidence, there is a material misstatement and pervasive, then it is a disclaimer of opinion. Extremely important. Now answer this question. There is sufficient appropriate audit evidence and there is no material misstatement and it is not pervasive. What opinion will you be giving? Unmodified opinion, because only if there is a material misstatement itself you will refer this table. If there is sufficient appropriate audit evidence and there is no material misstatement and not pervasive. Material misstatement, now what is the concept of pervasiveness and all? Not pervasive. Now you will be giving a clean report, that is an unmodified report. Clear, guys? Now coming to essay 701. 701 is communicating key audit matters in an independent auditor's report. Key audit matters means what? How will you determine these key audit matters? How will you determine? Now the first one is risk of material misstatement is high. What is the meaning of risk of material misstatement? Material misstatement can be either intentional or unintentional. Intentional means fraud, unintentional means error. So an auditor, before going to audit itself, if he is able to find out that this place that there is a mistake to happen, the risk is very high. If the auditor is able to find out that place, then he will conclude that the wrong is high. That is, the risk of material misstatement is high. The risk of material misstatement, Patti, where are they talking? In essay 315. In essay 315, the risk of material misstatement is split into two. What are those two? Inherent risk and control risk. Inherent risk means that if the industry itself is falling, then company will automatically fall. During COVID, all the tourism industry, all the hotel industry, everything fell. What happened to OYO rooms? No one went to OYO rooms. Yes or no? So if the entire industry is falling, then that company also will definitely fall. It is not in the control of anybody. That is called as inherent risk. In essay 315, we will read that. What is the meaning of control risk? Control risk means the internal controls in the organization are not operating effectively and efficiently. Either there is a problem in the design or there is a problem in the implementation of the control itself. Both these risks together are only called as risk of material misstatement. If the risk of material misstatement is high, then key audit matters will come. Now we are in essay 701, key audit matters. How to determine those key audit matters? The first one is if the risk of material misstatement is high, then key audit matters paragraph will come. Are you able to understand? Next, what is the meaning of accounting estimate? Accounting estimate. Accounting estimate means all the provisions which you are making. Yes, there are debtors. What provision you will be making on the debtors? Provision for bad and doubtful debts you will be making on the debtors. Provision for bad and doubtful debts means, that means they are not able to give that money. That is the meaning of that. So the company, in the mind of the company, they are thinking that the debtors is say 1000 rupees, but 700 rupees even kittandu terade. That means they are not able to give that 700 rupees. So in the mind of the company, they are creating a provision for that 700 rupees. It is like a loss. Yes or no for the company, because varavendiya pano inume varuma varadanu I don't know. That is called as provision. When I am doing that provision, what are all the factors the management will be considering? When I am making the provision, what are all the factors the management will be considering? The constant conversation with the debtor or past periods, how he was he able to give on time? All of these factors you will be considering and you will make the provision. But this time you are not even able to communicate to him. He is not even picking up your call, switched off. You went to his house, address changed. Nobody knows where he went, fully absconded. There is high uncertainty while making this estimate. If there is a high uncertainty while making an accounting estimate, then key audit matters will come into picture. Clear? The first one we saw was the risk of material misstatement was very high. The second one is high uncertainty while making an accounting estimate. If it is there, then key audit matters will come into picture. The third one is there is a merger which happened, or this company has been fully acquired by another company. That means there is a significant event which happened or a significant transactions which happened. In that case also, key audit matters will come into picture. So key audit matters, how to determine the key audit matters, these three factors will determine the key audit matters. The first one is if the risk of material misstatement as per essay 315 is extremely high, then key audit matters will come into picture. The second one is if there is high uncertainty with regard to accounting estimates, then key audit matters will come into picture. The third one is if there is a significant event or a significant transaction which has happened, then also key audit matters will come into picture. Clear? One thing has to be extremely important, it has to be kept in mind for this key audit matters is this key audit matter paragraph should only pertain to the current period. Only pertain to the current period. Something about the previous period affecting this year or something about the future which can affect this year, all of those details should not come in the CAM paragraph. I am not saying it should not come in the audit report. You please mention it somewhere else. But in the CAM paragraph, only the current audit matters should come into the picture. Now you are saying risk of material misstatement is extremely high, accounting estimate is extremely high for debtors. So I want to mention all these things in my CAM paragraph. You are saying that. Can you directly mention? No. You can't directly mention in your key audit matters. You have to first go and talk to the management and those charged with governance, all the top level people. You first have to go talk to them, tell them that this is what I am going to write on my key audit matters, and only after that you will be writing in the key audit matters. Clear? Important points, only 3-4 points are there in this 701 CAM, but everything is important. So for which entity CAM will come? Only for listed entities CAM paragraph itself will come. Listed entities, laws and regulations, or if for a specific law or regulation they are saying that CAM should come, na it will come. Or for public interest the management has decided that CAM should come, na CAM will come. So listed entities mattu you think, because that is only mandatory. Law and regulation, public interest and all, if it is there it will come. Clear? What are key audit matters? Key audit matters means it is something important which the auditor wants to communicate to the stakeholders. They are those matters that in the auditor's professional judgment were of most significance. That means it is extremely important in the audit of the financial statements in the current period. Everything in the CAM should pertain only to the current period. CAM are selected from matters communicated with those charged with governance. Appadina, the first step is to first communicate to those charged with governance. Then only comes the CAM paragraph. Without communicating to those charged with governance, can you write something in the CAM paragraph? Never, never you can write. It shall not pertain to previous year's audit matters. The same thing again and again they are saying. It should pertain only to the current year information only. How will the auditor determine CAM? Those 3 points. High risk of material misstatement, high accounting uncertainty, and significant event or transaction. CAM will not be communicated if important. When will CAM not be communicated? If a law and regulation prohibits, or if there is a possible adverse consequence. That means if you communicate this, no one will invest in the company. It is a highly confidential matter which should not be communicated. So in these cases, CAM will not be communicated. So will anybody read this CAM? Will anybody read this CAM? It is an important matter, okay, but this important matter you are writing only after consulting with those charged with governance, and if it is highly confidential matter you are not going to write here. If there is any adverse consequence, that means any negative information if it is there, you are not going to write here. That means simply Naam ke vas they are having this CAM, yes or no? Yes. So CAM will not be communicated if law or regulation prohibits, if there is a possible adverse consequence, or if there is a highly confidential matter. So if I want to modify my report, that means there is a material misstatement under 705, I want to modify my report. In the case where I want to modify my report, can I say that in the CAM paragraph, CAM is what? Important matters only, no. I have written this important matter in the CAM paragraph, so I am not modifying my report. I am giving a clean report. Am I correct? No. CAM is something which is extra. CAM cannot be a substitute for modification. As per SA 570, what is SA 570? Going concern. As per SA 570 going concern, I have to report. Going concern na in the company I have to report on that this company is going to die. Instead of reporting there, that is an important matter. So I am reporting in CAM. Is that enough? No. I have to report there also. CAM and enavana potiko. But definitely I have to report there. So it is not a substitute for reporting on going concern matters as per SA 570. Are you able to understand? So it is not a substitute for 705, not a substitute for 570. Individually, if I want to give an opinion, specifically you have to have an opinion paragraph only. In CAM, additional information you can give, or same information again you can give, but you can't only write in CAM and leave off the other areas. Are you able to understand CAM clearly? Yes? Next, in 700 we stopped here. Opinion paragraph, basis for opinion paragraph. The opinion paragraph, we shifted to 705 and completed the table itself. Yes or no? The opinion paragraph is over. On what basis you are giving this opinion? The basis for opinion paragraph. So if I am giving a clean report, unmodified report, can I say that why should I have a basis for opinion paragraph? Only if I am modifying my report, you want to know what are all the reasons why I am modifying my report. So I have to give a basis for opinion. If I am only giving a clean report, unmodified report, can I say I will escape from the basis for opinion paragraph? No, it is a compulsory thing. This basis for opinion paragraph is compulsory, whether it is an unmodified report, modified report, qualified, adverse, disclaimer, whatever report you want to give. Basis for opinion is compulsory. Next, you have to talk about going concern, that is essay 570. Next, you have to talk about key audit matters 701. If it is a listed entity or based on public interest, they have decided that key audit matter should be there. Responsibilities of both the parties must be given in the audit report. Engagement letter also we saw. Scope and responsibilities of both the parties, the same thing must be given in the audit report also, because engagement letter is between the management and the auditor. Audit report only is given to the stakeholders. So the stakeholders has to know who is exactly responsible for what. So again, the responsibilities for the financial statements by the management and responsibilities with regard to audit of financial statements by the auditor, everything has to be given. The next one is EMP and OMP as per SA 706. What is emphasis of matter paragraph? What is other matter paragraph? Emphasis of matter paragraph means something additionally the auditor wants to communicate, but whatever the auditor wants to communicate is already there in the financial statements. The financial statements is representative of whatever is happening in the enterprise, but auditor wants to give something extra which the auditor is thinking that it is useful for the people who are relying on the financial statements. If it is the case, then he will be writing in a paragraph called as EMP, emphasis of matter paragraph. The auditor is thinking that this is important, the auditor wants to communicate something to the stakeholders, but the financial statements are not having this information. That means other than those presented in the financial statements, but the auditor feels that it is relevant for the understanding of the stakeholders, then the auditor will be having this paragraph called as OMP, other matter paragraph. The difference between them is only that whether it is already disclosed or not disclosed. If it is already disclosed, then emphasis of matter paragraph. If it is not already disclosed, then the other matter paragraph. The same thing is given as the scope. The same thing is given as the objectives. You can just read the definition, that is more than enough. EMP is a paragraph included in the auditor's report that refers to a matter appropriately presented or disclosed in the financial statement. That means financial statements are already having that matter, but auditor feels in his judgment it is important for the stakeholders' understanding. That means it is of such importance that it is fundamental to users' understanding of the financial statements. If it is already there and auditor wants to give importance to that, highlight that specific point, then he will be giving in emphasis of matter paragraph. OMP means a paragraph included in the auditor's report that refers to a matter other than those presented or disclosed in the financial statements. Financial statements are actually not representative of whatever has happened. It is not having that information. Auditor specifically, he wants to give that information for the better understanding of the users of the financial statements, that is the stakeholder. Then it is other matter paragraph. Clear, guys? Now coming to the top for the contents. We saw that EMP and OMP as per SA 706. Then any other reporting responsibilities, for example, Example, other reporting responsibilities. Caro. If under Caro, that is a extra reporting responsibility, other reporting responsibilities, based on that also the contents of the audit report should be there. That means Caro points audit report la irukano appdin solranga. Next, signature, place, date of audit report and you did. So every audit report you see will have a title, addressee, opinion para, basis for opinion para, 570. 701 is key audit matters, responsibility for both the parties, that is the management and the auditor, EMP and OMP paragraph as per 706 and other reporting responsibilities like Caro and all of those things. Place a signature, date, you did. What is you did? Unique document identification number. That means only a chartered accountant must sign. I don't know if I told you, I have a friend whose name is Prem. He is not a chartered accountant. His father is a chartered accountant. His father's company's name is Prem and Associates. If he goes to the client's office and if he just says, "Hi, I am Prem from Prem and Associates," what is the assumption? That he is a chartered accountant only, yes or no? But can he sign any audit report? No, he can't sign the audit report. Who will be signing the audit report? The father only will be signing the audit report. So in this case, even if Prem goes for the audit, gets all the audit evidence, does all the audit procedure, wants to give this opinion, the father is supposed to be informed as to what is happening. So every document wherever the auditor is signing, there is a unique identification number. This is 14 digits, alphanumeric character, 14 digit. For this number to be generated, an OTP will be going to the member's phone. So the father will get the OTP. He has to call the father for the OTP. At least the father knows that his sign is being used in this document. Are you able to understand the use of UDIN, unique document identification number? Because nowadays everything is digital signature. DSC means what? It is just a pen drive. I can give the pen drive to anybody. You can put my signature anywhere. Pen drive only has a password. If I will keep the password as 1234. Anybody can put that 1234 and sign on the behalf of me. But I have to know where my signature is being used. For that, every document where my sign is being used, this unique document identification number must be generated. This 14-digit unique number must be generated, and for that number to be generated, I have to give, that is the member has to give the OTP. Only if the OTP is given, this UDIN will be generated. Clear, guys? Now, what are the matters included in the opinion? These two we have to dive deep. Opinion paragraph, basis for opinion paragraph. What are the matters included in the opinion paragraph? First, I have to tell. Already I am telling, idu yaroda in the company, what is the name of the company, already I am telling. But still again I have to tell in the opinion paragraph the entity's name whose financial statements have been audited. Description about the financial statements, whether it is a standalone financial statements, whether it is a consolidated financial statements, all of that description about the financial statements has to be given. Description about the title of components, that means statement of profit and loss, balance sheet, summary of changes in equity, all of those things, the title has to be separately given. Reference to notes and significant accounting policy. Reference to the period, which year you are doing, 2024 March, from 1st April 2023 to 31st March 2024, the exact period, that also has to be given. And in the end only, the actual opinion, whether it is a qualification or adverse or disclaimer or unmodified opinion, in the end only you will be giving. So the matters included in the opinion paragraph extremely important. You have to know what entity, the description about the financial statements, that is whether it is standalone, consolidated all those financial statement or a description you have to give, the title has to be given, the period has to be given, the opinion expressed has to be given, and reference to any notes and reference to significant accounting policies. All of those things compulsorily has to be there in the opinion paragraph. Same way, basis for opinion paragraph also has few compulsory things. What are the compulsory things? That the audit was conducted as per standards on auditing only. Auditor's responsibilities. Again, I have to tell a statement indicating in brief about the auditor's responsibility. The auditor was ethical, the auditor was independent. I followed all the law, I followed all the code of ethics given by ICAI. All of those things I have to tell. Auditor has obtained sufficient appropriate audit evidence for the opinion that he has expressed. He has to talk about the SAI also, sufficient appropriate audit evidence also. All of these things compulsorily has to be there in the basis for opinion paragraph, these 4 points. Clear guys? Shall we quickly see an opinion paragraph and basis for opinion paragraph? I have just opened Infosys Independent Auditors Report. Coming from the top, what and all are there in the Auditors Report? Title, is it there? Independent Auditors Report. Yes, it is there. To whom it is there? To addressee, to the members of Infosys Limited. Opinion paragraph, what and all should be there in the opinion paragraph? The first one is entity whose financial statements has been audited. We have audited the accompanying consolidated financial statements of Infosys Limited. Description about financial statements of the entity. We saw it was consolidated financial statements. Description about title of components of financial statements. That means consolidated balance sheet, consolidated statement of profit and loss, consolidated statement of changes in equity, consolidated cash flows. All of these things are components of the financial statements. Reference to notes and significant accounting policies. Notes to the financial statements including a summary of material accounting policy and other explanatory information. Yes, is it there? Next, reference to the period covered. Is the period given? Period. As at 31st March 2024. The opinion expressed by the auditor. What is the opinion expressed? In our opinion and to the best of our information, we give a true and fair view in conformity with the NDAs. True and fair view means they are giving a clean report, unmodified report they are giving. All of these things are there. Now you have tick, Infosys audit report. Infosys done by Deloitte, I think so. So whatever Deloitte did, is it correct? Yes? All of you giving correct? Yes. Now coming to basis for opinion paragraph. What should be there in the basis for opinion paragraph? State that audit was conducted as per standards on auditing. Is it there? We conducted our audit of the consolidated in accordance with the standards on auditing specified under whatever of the act. Is it there? Statement indicating in brief of auditor's responsibility. They are starting with our responsibilities under those. Is there a brief statement? Yes. State that auditor complied with ethical requirement of code of ethics. We are independent of the group in accordance with code of ethics issued by ICAI. Auditor has obtained sufficient appropriate audit evidence. We believe that the audit evidence obtained by us is sufficient appropriate. Is it there? They might even ask you to frame the opinion paragraph, frame the basis of opinion paragraph. You need to be careful to cover all the points which is there in the opinion paragraph and which is there in the basis of opinion paragraph. Clear guys? Now having a understanding of how the audit report will look. Next, coming to the contents. We saw down signature, place, date, UDIN. Check if UDIN and all is there in this audit report. Is it there? Yes, UDIN. Date, place, what other things? Signature, he is not yet put the signature. Yes, All of the things must be there compulsorily in any audit report. Clear, guys? CAM we finished fully. 705 we finished fully. Types of opinion: unmodified opinion, modified opinion. Under modified, qualified, adverse, disclaimer. We saw the table. Next one was EMP and OMP. 700 series done. Is it easy? Yes? Okay. Okay guys, starting off with essay 500. What is essay 500? Essay 500 is audit evidence. What is the meaning of evidence? Evidence means proof. Adharam. You are saying something, you are giving an opinion, you are saying something is a mistake. What is the proof for you to say that? That is called as evidence. Audit evidence means the information used by the auditor in arriving at the conclusion. The conclusion is nothing but the opinion. So what is the information that you have used? Invoices. No invoices are there. So I was not able to get sufficient appropriate audit evidence. If none of the purchases have invoices, obviously it is pervasive in nature. That is the reason why I gave disclaimer of opinion. So some kind of a proof, adharam, you are able to tell. That is called as audit evidence. Audit evidence includes information contained in the accounting records and other information. What is the information contained in the accounting records? The first one is all the journal entries. Yes, any journal entry can be your audit evidence. Or for you to enter this journal entry, there will be some bill, invoice, all those things. Everything together will form as audit evidence. This is audit evidence based on the information contained in the accounting records. So not only journal entry but also something before the journal entry, that is the invoices, also will form part of audit evidence. Now there is a contract between me and the landowner. Based on that contract only I am paying the rent month on month. So that contract also can constitute as audit evidence. Clear? Journal entry, invoices, contracts, or they are maintaining all the books of accounts properly. You are thinking it is proper. Second, books of accounts they are maintaining in Excel sheet. Are you able to understand? 2 books of accounts they are maintaining. Software 1 books of accounts and Excel sheet separate 1 books of accounts they are maintaining. Now you are seeing 2 books of accounts. Both of them are having different profits, different items, all different. So based on that you are saying they are doing some fraud. So that Excel sheet or that spreadsheet can also form part of your audit evidence. Are you able to understand? What and all we saw? The journal entry itself can form part of audit evidence. The source of the journal entry, that is the invoice, that also can form part of audit evidence. If there is any contract, based on that contract only everything is getting executed. That contract agreement can form part of your audit evidence. And any Excel sheet, any kind of spreadsheet, all of these things can form part of your audit evidence. This is called as information contained in accounting records forming part of audit evidence. What is that other information, ma'am? Other information means which is not form part of accounting records. What is this other information? The first one is minutes of the meeting. What is called as minutes? Minutes means அவங்க பேசிட்டே இருக்காங்க, whatever they are talking they will be writing and that will be circulated at the end of the meeting. So the minutes of the meeting also auditor has access to, and that also can form part of audit evidence. Now there is somebody who has to give the money to the company. They have to give the money to the company. Auditor is doubtful whether this person will give or not. So auditor is asking the company to please make a provision. Company is saying no sir, he will delay but he will definitely give. So auditor is saying if he will definitely give, அவனை எழுதி கொடுக்க சொல்லு. Ask him to write and tell me that he will definitely give. So he is making a written representation that I will definitely give the money. That also will form part of audit evidence. Next, internal control means what? Internal control means policies and procedures by the organization for the organization. By the company for the company, they themselves are having rules and regulations. Example, petty cash I told you. More than 10,000, one person has to send. More than 20,000, one person has to send. For like that, for each and everything, they will have internal control. Say for fixed assets, who has to purchase a fixed asset? Who can sell a fixed asset? Who will enter the journal entry for the purchase of fixed asset? Who will approve that journal entry? All of these things will be framed by organization or auditor. Organization only. The internal controls I told you is by the management, for the management. So the organization will be doing all these internal controls. That is called as manuals of internal control. That manual also will form part of your audit evidence. Are you able to understand? Audit evidence means Aadhar, some kind of a proof based on which the auditor is giving his opinion. Audit evidence means information which is used by the auditor for giving out his opinion. It includes information contained in the accounting records and also other information. Information contained in the accounting records means the journal entry, the invoices, the contracts and even worksheet and spreadsheets can form part of audit evidence. Other information minutes of the meetings. Minutes means whatever they are talking normally when we go for articleship. I told you first day what they will ask you to do. Whatever we are talking you just to make note. I have also done that when I was in articleship. Yes, so that is called as making the minutes of the meeting. So somebody who has made the minutes of the meeting and kept it aside, that also auditor will have access to what those people spoke. Even if auditor was not involved in the conversation, he will know exactly what they spoke in the minutes if he has access to the minutes. So those minutes will also form part of audit evidence. Clear guys? So information for the auditor, management itself will give or expert will give. Whatever management gives, can the auditor directly take that as face value and say this is sufficient appropriate audit evidence? That is not possible. Auditor has to check a few things. Auditor has to first check whether everything is complete. Whether everything is complete. What is the accuracy? That means if they are saying I purchased this fixed asset, these are all the fixed assets. I am having a fixed asset schedule. Really, in the 10 item na fixed asset avankita irukka, illana he is having 20 items in physical verification. All those things auditor has to check. Directly whatever the management gives them, he will not accept. He has to check whether it is complete. And fixed asset value, whether it is as per invoice or not, or are they undervaluing or overvaluing. Fixed asset means depreciation, whether correct percentage of depreciation, whether they are using. All of those things are accuracy, whether it is properly recorded. Correctana value whether it is recorded. All of those things we have to check. And whatever the management is giving with regard to that fixed asset, all the evidences, whether it is sufficient, we have to see. Sufficient means quantity. Whether whatever invoices they are giving, whether they have covered all the invoices, we have to check. So auditor will not directly take whatever evidences management is giving. They have to check 3 things. One is completeness, accuracy and sufficiency. Sometimes there will be experts for each organization. Expert means what? There will be an engineer, there might be some lawyer who is giving their expert advice. If that expert is giving us some audit evidence, the first thing we have to check is whether he is really an expert. Yes or not? The first thing we have to check is whether he really has the knowledge on the subject in which he is telling. Whether he has the proper competency, whether he has the proper capability. Adella paatha peragu, then you see whatever he has given is complete, accurate and sufficient. Are you able to understand? So completeness, accuracy and sufficiency, auditor has to check with whatever information the auditor is receiving from the management side. Clear guys? The next is audit procedures. Audit procedures. Whose house parents are very strict? Very strict parents. Sanjeev's house parents are very strict. Okay. Sanjeev went with his girlfriend in bike. Where? Raining. No, outside. It's raining. Good weather. Where you are going, Sanjeev? Mahabs. He is going to Mahabs. போயிட்டு எங்கயாவது நல்லதா சாப்பிட்டு இந்த வெதர் என்ஜாய் பண்ணிட்டு வரலாம் அப்படின்னு சொல்லிட்டு he is thinking. Normally he will come to audit class like that at 6:30 itself he is leaving from his house. His mother is thinking, பரவாயில்ல பையன் பாவம் சீக்கிரமா எந்திரிச்சு rain or shine he is going to his class அப்படின்னு சொல்லி she is very proud of his son. But where he is actually going? Didn't even enter Roypeta. Directly he went off to girl's house first to pick up the girl and then went to Mahabali. Evening I told her till 5 o'clock today. So he told his mother before itself, ma'am told we have to study after class also. So till 5 I am going to study today. I will come home at 6 o'clock. ஏன்னா மத்தவங்களா 5 வரைக்கும் படிக்கறாங்க. I will study till 5:30 extra that half an hour. So I will come at 6 p.m. Mother saw. நேத்தெல்லாம் இப்படி படிக்கவே இல்லையே. How come today extra he is overworking அப்படின்னு சொல்லி she is getting a doubt. That time he will put his clothes like that. Correct? In the button, what was there? Hair was there. One big hair was there. Enna idu or periya hair like this it's coming. How come it came to the button of my son? Appdin solli she is having a doubt. So she is asking Sanjeev, did you go somewhere else? Tell me the truth. Sanjeev doesn't know all these hair story, button story, all these things doesn't know. So he is showing the summary notes of the class which he did before itself and he is telling, see here, how much I wrote. Kai valika valika I have written and what is the question you are asking me. Appdin solli Sanjeev extra bittella podu. Mother is still doubtful. So mother what she did, he will call Sanjeev's best friend. Who is that sister? Sister she will call and ask, inga paarma, he already knows sister vandu andha madri kadaiya. Not like that. Sister is real sister only. So listen here. So she called and asked, inga paarma, really did he come to class? He is saying till 6 o'clock. No, sister vandu very truthful. She said, inga paarma madam, I am there till 1 only. I have college. Till 1 o'clock he was there. After that I don't know what happened. Appadina sister put one bitter. But till 1 she covered for me. So what the mother did? She called another person and she asked, what happened? Sanjeev's bad luck. His father's friend who was on bike, side when he was overtaking, full scene he'll put no, full speed he'll go, dup 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 dup, sound and all will come. So everyone on road were looking at this Sanjeev and the girlfriend only. Father's friend saw Sanjeev and he also called and told, Paatha apdi theriyudhu, but I am not sure. Like that he also put one bit. No, mother got how many confirmations? 3 confirmations. One was hair, one was friend also edo mati edo solra, 1 varikundra, 5 varikundra. So all these confusions, she is extremely confused. So she decided, Sanjeev, come here. அந்த கூப்பிட்டதுலயே சஞ்சீவுக்கு புரிஞ்சிருச்சு இன்னைக்கு சம்பவம் இருக்கு அப்படின்னு சொல்லி with the tone itself we can understand. Yes or no? We can understand with the tone they are calling us itself. எதுக்காக கூப்பிடுறாங்க? To eat or to give or. So Sanjeev understood. Say okay, இன்னைக்கு இருக்குன்னு சொல்லி he is going. She is slowly asking, tell the truth. Where did you go? I saw your audit mom's status. She is somewhere in Himachal Pradesh. How come you went to her class? Her mom is very smart. So she did all these verification procedures and then she is asking the questions to Sanjeev to lock him so that he can't give any kind of answer. Like that, auditor also has many different audit procedures to be done. What are the different procedures we are going to see? First one is inspection. Inspection means what? I am taking the records, I am taking the document and I am examining them. Examining of the records or documents is called as inspection. Next is inquiry. What is the meaning of inquiry? I am taking the mic and asking him, "Dey unmaiya solda." Appdin solli I am asking him. That is called as inquiry. Inquiring means seeking information from knowledgeable persons. That means somebody who knows the job. To them only I am asking. Sanjeev ku kandipa theriyuma unma? Sanjeev ku theriyuma unma? So I will ask him. Sanjeev oda friend sister ku theriyuma unma? So I will ask the sister also. I know that they know the answer. So seeking information from knowledgeable persons. Don't seek from clerk. You will not get any information. Fixed assets patti theriyununa, you ask only the manager who is responsible for the fixed asset or the person who is entering that fixed asset entry. You ask people related to that. That is only called as inquiry. Are you able to understand? Inspection and inquiry done. Next is observation. Observation means I called Sanjeev. Sanjeev, come here. I called him. That time his face changed. Okay, therinjiruchu appdin solli his face changed, shivering, all those things are happening. I am observing all those things. That means what? I am looking at the process and the procedure. They are doing everything in the company. They are doing everything. The auditor is just observing whatever is happening in the company, just looking at all the policies and procedures which are happening in the company. That is called as observation. The next one is external confirmation. External confirmation means this external confirmation has to be directly from the third party. How? Sanjeev's friend's dad saw that and called. So directly he is calling the mother and he is giving some kind of a confirmation. So direct written response from a third party to the organization is called as external confirmation. Recalculation. They have already calculated. How they will calculate? Depreciation of plant and machinery put automatically 10% will get calculated and automatically carrying value will be there. Whether the system is doing the work properly or not, how will the auditor know? Auditor will take his calculator, actually key in the numbers, put into 10% and see what is the value, whether it is subtracting properly. So auditor is recalculating whatever the system has done. That is also a type of audit procedure. Now only the calculation process auditor did. Auditor will re-perform the entire activity. That means whoever is keying in the entry, he will say, "Please move, sir. I will key in the entry. If you key in or I key in, same answer should come, yes or no. So I will key in whatever I should do. If I am keying in plant and machinery to bank, automatically my bank account should reduce. Automatically plant and machinery should increase. Automatically the depreciation for the plant and machinery should get calculated at the end of the year." So whether all these transactions are happening automatically, the auditor will key it in himself. That is called as re-performance. What are the audit procedures? Inspection, inquiry, observation, external confirmation, recalculation and re-performance. How will you all remember this? A-ROAR. A-ROAR means audit procedures. What is A-ROAR? External confirmation, inspection, inquiry, re-performance, observation, analytical procedures and recalculations. There are a few mnemonics which we will be remembering in class. At the end of the class, September boys and girls, I want one boy or one girl to write down all the mnemonics in one sheet. Okay? So what is audit procedures? Audit procedures. A-ROAR. External confirmation, inspection, inquiry, re-performance, observation, analytical procedure and recalculation. Clear? Clear till here audit procedures? Next comes the types of audit evidence. Types of audit evidence depending upon nature, depending upon source. Depending upon nature, how are they classifying the types of audit evidence? The first one is, I am seeing something. That person saw Sanjeev with his girlfriend and then only he called and told. Yes or no? That is called as visual audit evidence. You are seeing something. You are seeing them do the work. You are observing, you are seeing them do the work. That is called as visual audit evidence. The next one is inquiry lab. What are you doing? You are going with mic and asking, unga toothpaste la uppu irukka? Yes or no? When you are asking, they are giving some answer. That is called as oral audit evidence. The next one is you are asking the third party to give a return confirmation. Yes or no? That what was it? External confirmation. Direct response from a third party. It should be in written format. So that is called as documentary audit evidence. The three types of audit evidence depending upon nature is visual, oral and documentary. Depending upon source, we have internal and external. Something which is internal to the organization, that means the company itself is giving the audit evidence. All the cases we saw except for the third party giving the response, all of those things are internal audit evidence. If that third party is giving some confirmation, that also constitutes as an audit evidence. That is called as external audit evidence. So depending on source, I am splitting it into two, internal and external, and depending upon nature, I am splitting it into three, visual, oral and documentary. Now you guys tell me whether sales invoice, whether it is a internal audit evidence or external audit evidence. Sales invoice. Sales invoice. Sales invoice. Internal or external? Sales invoice is prepared by the company only. So sales invoice is internal. Purchase invoice. That means I am purchasing a fixed asset from somebody. He will be making the invoice. Purchase invoice is external. Very important. What is sales invoice? What is purchase invoice? What kind of audit evidence? Depending upon source, they might ask. Clear? Why sales invoice is internal? Why purchase invoice external? Clear? Now comes audit evidence. How should the audit evidence be? The audit evidence should be both sufficient as well as appropriate. Sufficiency means, I have told several times that it is quantity. Appropriateness means it is the quality. Quantity means how much of the audit evidence I have to collate. That is called as sufficiency. Appropriateness means what quality of the audit evidence. That means how relevant it is, how reliable it is. That is called as appropriateness of the audit evidence. Clear? Now coming only to the sufficiency part. In sufficiency, if some area is extremely material means important. If some area has high importance, should I increase my audit evidence or reduce my audit evidence? I have to increase my audit evidence. If I know that in one particular place, the risk of material misstatement is extremely high, that means previous year in that area only there was a problem, and because of that area, the auditor of the previous year had to give a qualified opinion. So automatically in this year, that area becomes high in risk. Yes, high in risk. So if the risk of material misstatement is high, should I increase the quantity of my audit evidence or reduce the quantity of my audit evidence? I have to increase the quantity of my audit evidence. Now, population is there. In the population, every item in the population is similar to each other. That means it is a homogeneous population. Homo means similar or same as each other. If it is a homogeneous population, if everything is similar to each other, should I increase my audit evidence or reduce my audit evidence? I can reduce the audit evidence, because if everything is similar to each other, I don't have to test each and everything. I can only test based on sampling method. Clear? If it is heterogeneous na, each and every item is different. Then I have to test each and every item, so I have to increase my audit evidence. Clear, guys? So sufficiency means the quantity which I have to use for my audit evidence, whether I have to increase or reduce. It based on factors like materiality, risk of material misstatement and the nature of the population, whether it is homogeneous or heterogeneous. If it is very material, I have to increase. If the risk of material misstatement in a specific area is extremely high, then I have to increase. If it is a homogeneous population, that means everything is similar to each other, then I can reduce my audit evidence quantity. If it is heterogeneous, I should increase my audit evidence. Now comes the appropriateness. Appropriateness means, I told you, it is quality. Quality now, I have to check for two things. One is how relevant it is, that is whether it is for this financial year only or some other financial year, it is included in this financial statements. How relevant it is for my audit, you have to check. Relevance and reliability, whether it is from a reliable source, all of those things auditor has to check. For quality, auditor will be checking only two things, which is relevance and reliability. When will quality be high? If the management itself is giving or third party is giving. When will quality be high? Quality means relevance and reliability. Reliability means how much you are able to believe what evidence they are giving. If the management itself gives some evidence, will you believe that? Or some third party gives some evidence? If it is from independent sources, reliability will automatically be high. Clear? Yes? Now there are internal controls in an organization. Auditor will test that internal control, and if there is any deficiency in the internal control, he will be communicating that with the management and TCWG. When he is testing, say, internal controls of fixed assets, and he is very convinced that the internal controls of fixed assets are perfect. Okay, if the internal controls are extremely effective, that means, can I say that anything with regard to fixed assets has high reliability? Yes. So if the internal controls are effective and if information is received from independent sources, that is third party, I will conclude that the reliability will be high. Now auditor is there. Auditor is going for audit and doing everything, doing audit procedures, getting audit evidence, everything. For some reason, I am not able to go today. So I sent my brother. He is a CS. But I told him exactly what to do. I sent him. He got all the information and he is giving it to me. Now, is this more reliable? Or I myself am going and I am doing everything. I am doing all the audit procedures, getting all the audit evidence. Everything is by myself. This is more reliable. If I myself am going, that is more reliable. So if the evidences are obtained directly by the auditor, we can say that quality is very high. That is, it is appropriate. Now, visually I saw something. I asked him, toothpaste la uppu irukka? He said irukku. Orally also he gave me something. Is this of high quality, or he is writing something, signing and giving it to me? Is this of high quality? Whatever is written can't be changed. But if we see something, he will say, nee enna paakave illa. Yes or no? Sanjay also will tell like that. Ava vera yareyo paathittu avan solluvan. How can that be me? Enna mari ethana per irukanga? Na class la irukken solren. He will tell or not. Easy for him to fight. But in case if he takes a photo, இதே சட்டை தான் நீ காலையில போட்டு போனா, அந்த சட்டை தான் அங்கேயும் இருக்கு, நீ ஹெல்மெட்டை போட்டு மூஞ்சியை வேணா மறைக்கலாம், உடம்பு எப்படி மறைக்க முடியும்? Mother will ask. So if it is a documentary audit evidence, then it is of high quality. That is, if it is in written format, it is of high quality. There is an invoice. Fixed assets is purchased. Auditor wants to check whether that really fixed asset has been purchased. They are asking for invoice. Invoice is given in PDF format. That also, it is editable. Now just I am keeping the cursor like this. It is coming like this. Invoice. What I can do? I can do like this. Delete it. Yes or no? So, if it is an original document that has more reliance, or just a Xerox copy, duplicate document that has more reliance, an original document will have more reliance. So the quality depends on what are the factors, whether it is from independent sources, whether internal controls are effective around that subject, whether it is obtained directly by the auditor, whether it is in documentary form, and the document must be original document. All of these things we have to check. Are you able to understand? Now this is just preamble of SA 500. In SA 500, audit procedures are of two types, RAP and FAP. Risk assessment procedures and further audit procedures. Further audit procedures are again of two types, test of controls, substantive procedures. Substantive procedures are again of two types, test of details, analytical procedures. Test of details are again split into two. What happened here? Test of details again split into two, which is test of transactions and test of balances. Test of transactions is called as vouching. Test of balances is called as verification. Again from the top, audit procedures are of two types, RAP and FAP. Risk assessment procedures, further audit procedures. Further audit procedures are again split into two, test of controls and substantive procedures. Substantive procedures are again split into two, test of details and analytical procedures. Test of details is nothing but vouching and verification, which is test of transactions and test of balances. Are you able to understand what is RAP, what is FAP, all of these things we will see in the upcoming standards. Now, audit procedures, you have to do audit evidence you will be obtaining. Yes, will you be doing this same way for all the items in the financial statements? No, it will differ. Some items you will be giving more importance than the other. For example, election campaign happened. One actor you can think of in that election campaign, media covered fully from the time he came out of the house till the time he went back. Who is that amazing actor? Who is that amazing actor? Ilaya Thalapathy Vijay. Ilaya Thalapathy Vijay, before that he came in cycle and all. Yes or no? This time Vishal came in cycle. But did media cover him fully? No, they covered. But they will not cover as much as Vijay. Ajit also came and he also put. Did they cover? Chanceless. As much as Vijay's power, nobody else has. Yes or no? Yes or no? Because people, so many people are Ilaya Thalapathy Vijay's fans. So if say Galata is putting Vijay's video, he will get so many views. So he will focus only on the important people. Yes sir. Other people will he leave out? He will cover them. Other people's screen time 10 seconds, 20 seconds now. Vijay kya? 20 minutes screen time. Like that, when you are doing audit procedures and getting the audit evidences, you will be giving importance to few areas. These few areas is given in SA 501. SA 501 talks about audit evidence, special considerations for selected items. Why are they giving special consideration only for these three selected items? Is because these three are extremely important. What are these three? The first one is inventory, second is litigation and claims, third is segment reporting. In the mono important sir, adinala please give importance to these three when you are doing the audit. Appadi solradhu da SA 501 audit evidence special considerations for selected items. Clear? Yes? Can I proceed? First one I told you is inventory. Inventory means sarakku, that means stock. Yes or no? Stock is extremely important because if there is a mistake in stock, it will automatically affect the gross profit, automatically affect the net profit, automatically affect the balance sheet. It will lead to what opinion? What opinion? Adverse opinion. Because it is pervasive in nature, there is sufficient appropriate audit evidence that there is a material misstatement, so it will even lead to adverse opinion. That is why inventory is extremely important material to the financial statements. Material means important to the financial statements. What should the auditor check for inventory? Now, inventory value will be there in the financial statements. Yes or no? Say inventory's value is given as 1 lakh. Whether really this 1 lakh worth of inventory that company is holding or not, auditor has to know. Yes, how will he know that? By way of physical verification of inventory. By way of physical verification of inventory, he will be able to tell that this inventory is actually existing. So the first thing the auditor will have to check is whether it is existing or not. The second one is, what is the meaning of inventory? Inventory is stock. Stock means something which is ready for sale. Yes or no? Something which is ready for sale is your inventory. So the auditor has to check what is the condition of this inventory. Whether it is really available for sale or it has become obsolete. The inventory is perishable. It has gone. But still he is showing us inventory. That is wrong. Correct? So the auditor will check for two things. One is existence and condition. These two things auditor will be checking. How he will be doing is by way of physical verification of inventory. Now, 31st March 2024. This date only, no, inventory closing stock is on this particular date you are showing. On 31st March 2024, auditor has 20 clients. Is it possible for all the 20 clients, auditor will go in person and do the physical verification of the inventory? Is it possible? No. For few clients, he can do on 31st March, but if it is not possible, he will be doing physical verification on some other date, and he should do the audit procedures on intervening transactions. What is the meaning of intervening transactions? For example, say on 31st March 2024, the auditor is not able to go. So he is going on 5th April 2024. When he is going on 5th April 2024, he is getting the closing stock as on 5th April 2024. But he is supposed to get the closing stock as on 31st March 2024. There are 5 days purchases and sales which has happened. What he has to do is, he has to add all the sales and subtract all the purchases. Now simply if he just adds all the sales and subtract all the purchases, okay, he will get some figure here. But this sales, whether it really happened or not, this purchase, whether it really happened or not, auditor has to apply audit procedures on this sales and purchases even if it is after 31st March, because the closing stock is found on 5th April. So for those 5 days, even after 31st March, he has to apply the audit procedures on the intervening transactions. Are you able to understand? So physical verification of inventory is extremely important for checking the existence of the inventory. For that, he has to do physical verification as on 31st March. If that is not possible or not practicable, he will choose an alternate date and he will be doing the audit procedures on the intervening transactions. Clear? Yes? Now, on 5th April, I am going to the client and saying, sir, I want to do physical verification of inventory. The client is saying, sir, my inventory is fully in northern part of India. Pakistan la paadi irukku, Jammu la paadi irukku, Kashmir la paadi irukku, indha mari he is saying. POK nu onu irukku, Pakistan occupied Kashmir, anga konjam irukku, nee mudunja anga po uyiroda irundha nee physical verification panniko. He is telling like that. What can we do? Auditor cannot risk his life to go and do the physical verification. So instead of doing physical verification, He will do alternate audit procedures. They are saying if the physical count is impracticable, in this situation, is it impracticable? It is not possible for him to go to Pakistan, occupied Kashmir and all. Threat for his entire life will be there. So I will start doing alternate audit procedures. If that alternate audit procedures is also not possible, then use the weapon. Weapon is modify the opinion. That means either qualified or adverse or disclaimer based on facts of the case. I will go for that. So first thing I will be doing is I will try to find whether the inventory is really available, existence, and whether that inventory is available for sale. That is the condition. These two things I want to know. For that I have to first do the physical verification of the inventory. When I am doing the physical verification of the inventory on 31st March. If on 31st March I am not able to go, then I will select some other date and I will be doing the audit procedures on the intervening transactions. That is the sales and the purchases I will be adding and subtracting, and on those sales and purchases the auditor has to do the audit procedures so that he will know the closing stock as on 31st. But 5th April also he is not able to get the physical verification of inventory because it is impracticable. Impracticable means he is unable to go to that place and do it. At that time he will do alternate audit procedures, something else apart from going there and doing the physical verification. Alternate audit procedures also not possible now. Use the weapon. Weapon is SA 705, that is modification. Sometimes inventory will be held with third party. Company kitte inventory kadayadu. Inventory is held by third party. At that time also auditor has to find the existence and the condition of the inventory. So auditor should call the third party and ask him to tell the auditor what is the quantity available with you. In my accounts I am seeing that you are holding 100 quantity. Either I can tell him that this is in my accounts, please confirm, or ask him to give the quantity and I will confirm with whatever is there in my accounts. So I will ask him for the quantity and the condition. If possible, I will go and inspect myself. If I am not able to do any of that, I have to do other audit procedures. What is this other audit procedures which I will be doing if the inventory is held by a third party? Say there is a warehouse. I am holding all my inventory in a warehouse. I don't have so much space in my company. So I am appointing a warehouse and I am keeping all the inventory in that warehouse. When the inventory is going inside the warehouse, they will give something called as warehouse receipts. Yes or no? I will ask for that document. You please give me the warehouse receipts. How many warehouse receipts are there? How many times inventory has gone inside? In that warehouse receipt, all the documents, details as to the value of the inventory, quantity of the inventory, what date the inventory has come inside, everything will be there. That is called as the document. Document or example da, it is warehouse receipts. Sometimes inventory I will get some money. That means I am pledging my inventory. I am giving my inventory as a collateral. Collateral means I am giving it as a security for getting the loan. If I am giving my inventory as a collateral, then I can call the person who has given the loan and ask him to give a confirmation as to whether this transaction has really happened or not. What is the amount of loan you have given? What is the amount of inventory you are holding? What is the quantity of inventory you are holding? All of those things we can ask. Now say, if it is in a warehouse, that warehouse ko or auditor irupangla. Yes, that warehouse or auditor would have done all the audit procedures, obtained all the audit evidence. In that one small portion will be my company's stock also. So I will rely on another auditor and I will ask him for that information. Are you able to understand? Yes? I will check how that warehouse is having its internal control. Enter panamode, if they are not even giving the warehouse document, that means warehouse receipt, then what is the point of asking for the warehouse receipt? Yes, what they are doing, monthly they are finishing. At the end of the month, they are from the beginning seeing what and all have entered and they are preparing the warehouse receipt at the end of the month. That is the level of internal control they are having. So will I rely on their words? I will not be able to rely on their words. So by checking the third party's internal control also, I will be able to say whether I can rely on the words or not. So the other audit procedures are checking of the documents like warehouse receipts. If it is pledged or if it is given as collateral means it is given as security, I will ask for confirmation. If it is done by any other auditor, all the audit procedures are done by any other auditor, then I will ask for that auditor's help to check for my stock there, or their internal controls also I can check, and I will have an idea as to whether I have to rely on their words or not. For this we have a mnemonic called as ACID. What is ACID? Another auditor, confirmation for collateral, internal control and documents. Important other audit procedures. Now ACID, if it is held by third party, inventory is held by third party, then it is ACID. Clear? The next important thing is, what did I say? The first one is inventory, second one is litigation and claims. What is the meaning of litigation and claims? That means all the legal cases against the company. The example for this is, if you remember, Sun TV. I have a friend in Sun TV who is a lawyer for Sun TV, but he is an employee of Sun TV. That means அத்தனை கேஸ் இருக்கு. போற வரவெல்லாம் they are filing a case against Sun TV, that they have a whole legal department inside the television company itself. Are you able to understand? Lawyer na usually we will think of a third party only who are talking for us in court. That is also there, but apart from that, they will have a legal team inside the company itself. I want you to understand, all these big companies will have an internal legal team and there will be external legal team. This internal legal team is like employees of the organization. They will work for preparing draft of the report, how you should talk, what are the facts of the case. All these things will be developed by the internal legal team and it will be given to the external legal team. Now in some places, if the auditor finds a case, say for Sun TV, advertisement means what? They are paying the money for displaying their product on screen for few seconds, correct? Yes, say for 10 seconds they are charging 1 lakh rupees. 10 seconds 1 lakh rupees. They will say I will play your ad 10 times. Now one company filed a case on them saying you played my ad only 7 times. 10 seconds you played, but you played my ad only 7 times. Remaining 3 times, they kept fighting with them, give me the money back for the 3 times, or you at least play it now. But Sun TV said, no, I played it 10 times. They did not give the money. Like that, auditor found at least 10 companies filing a case against Sun TV. Now looking at this, how many companies would have actually made advertisement with Sun TV? At least 10,000 companies? This will be an understatement, yes or no? Now, as an auditor, are you getting a doubt whether only these 10 companies have filed a case or actually there are so many companies but Sun TV is not telling us? You are getting a doubt, yes or no? So, when you are doing audit procedure only for this 10 companies but you are getting a doubt, there are existence of other litigations in the company, then you have to seek direct communication with the entities in-house legal team. So the first thing is, you will first see risk of material misstatement. First of all, if it is not even material, you will leave the issue. Only if there is a risk of material misstatement and you are doing audit procedure on one legal case and you are finding that many are actually there, you will seek to talk directly with the in-house legal team. Whatever details the in-house legal team they are giving, can we say that management and DCW only are giving? How can I rely on the in-house legal team? Yes, so an auditor will not rely on the in-house legal team. Whom will auditor rely on? External legal counsel. This external legal counsel is an external party. He is independent of the organization. So if an external legal counsel says something, auditor will be able to rely on that information. But auditor cannot directly go and ask the external legal counsel. He has to give something called as letter of inquiry. Letter of inquiry the first he has to give to the external legal counsel and first seek for permission, and also he has to get the permission from the management and TCWG before going to the external legal counsel. If the management and TCWG are not giving permission, or they have given the permission and you are going and asking the external legal counsel letter of inquiry, but external legal counsel is not replying to you. In these two cases, what should the auditor do? The auditor will go for alternate audit procedures. In the alternate audit procedures, if he is able to find some information, then okay. In this also, if he is not able to find the information, take out the weapon. Weapon is 705. So the first thing he will be doing is, if he feels that the risk of material misstatement is high, and if he feels that when he is doing the audit procedure for one legal case, he is finding that there are many other things similar to this, then he will directly go to the in-house legal team and ask them for information. But whatever information they are giving, it is the same as management only. They are not independent parties. So we want to talk directly with the external legal counsel. But can we directly talk to the external legal counsel? No, we have to send something called as letter of inquiry to the external legal counsel. Once we send the letter of inquiry to the external legal counsel, if they respond, okay. If they don't respond, then do alternate audit procedures. In alternate audit procedures also, no use, then go for SA 705, use your weapon. Before going to the external legal counsel, you have to get the permission of the management and TCWG. If the management and TCWG is not even responding to you, not even giving you permission, asking you to get out of the office, simply you will come and ask the same question to me, again to my in-house team, again now you want to go to external team, what do you think of yourself? They are asking you to get out. Then what you will do? Alternate audit procedures. Directly you will not use your weapon. First you have to do alternate audit procedures. If that is not working, then you use your weapon, go for modification of audit report. Now, when can I go to external legal counsel? For each and everything, can I disturb them? No. When I can go to external legal counsel? If I feel that it is highly risky. That means there are so many cases that even if we lose one case, we are automatically going to lose all the cases, so it might even affect the going concern of the entity. It is highly risky. In that case, I have to go and approach the external legal counsel. Case is there, I am not able to understand the case. So many intricacies are there in the case. Now 10 seconds, 7 seconds, one more time 6 seconds, one more time 5.5 seconds, one time 7 times, 10 times. There are so many complexities, intricacies are too high. In that case, I am not able to understand what information the in-house legal team or what information the management is giving to me. So I am forced to go to the external legal counsel. It is a highly complex scenario. In that case, I can go to the external legal counsel. In case there is a disagreement between the management and the external legal counsel. External legal counsel வந்து என்ன சொல்றான், sir, நீங்க பண்ணதுதான் தப்பு. What you made is only mistake. You please accept that. Instead of paying them back the money, you please play those remaining 3 times. I saw everything. My team saw all the ads for the last 10 years. Full team we saw all the ads. In that I saw that only 7 times you have actually put. The mistake is on our side. Management is saying, I am paying you money. You are supposed to support me. Who are you to tell me like this? They are getting angry. So there is some kind of a disagreement between the management and the external legal counsel. In this case also, if the auditor finds out that there is a disagreement, the auditor can directly go to the external legal counsel. Clear, guys? Clear? Yes? Now, in this internal legal counsel, external legal counsel and all of those things, auditor has to do audit procedures. What are the audit procedures that the auditor has to do? The first one is inquiry. He will inquire with two people first. Who are those two people? Management and in-house legal team. These two people he will inquire. After inquiring, they are not giving any kind of information. Then what will the auditor do? They will see how can we go and see that? Definitely they will have the minutes of the meeting. So the second audit procedure is checking the minutes of the meeting. They are saying, sir, we are very good. Nobody has filed a case on us. Till date, nobody has filed a case on us. You are also believing that. Then you saw in the P&L account, in the left side, there is something called as legal expenses. Every month, 1 lakh. So totally 12 lakhs they have spent on legal expenses. But when you go and ask them, they are saying, one case is also not filed on me. So when you are looking at the legal expense account, you know exactly how many cases, at least approximately, you will know how many cases are pending on them. The fourth audit procedures is only confirmation with the external legal team. So there are 4 audit procedures that the auditor will be doing. The first one is inquiry with the management and the in-house legal team. See, everyone are getting covered actually. Management, in-house legal team, external legal team. But the flow is different. The first you will go and inquire. If they don't give any info, you will see the minutes of the meetings of them. Then there also you are not getting anything. You believed them. There are no legal things happening against them. So you started doing the audit procedure and other items. That time you saw one item called as legal expenses. In that 12 lakhs they have spent. Now you are getting a doubt. Why did they spend the 12 lakhs? So legal expenses account you will go and verify. A fourth one is confirmation directly with the external legal counsel. These are the 4 audit procedures which you will be doing. So if the risk of mental misstatement is high and if you are doing audit procedures on one legal item and you are finding many other things, then you will go and seek information with whom? In-house legal team. In-house legal team, first you will seek the information. But whatever they say, will you directly believe it? No, they are also same as management only. So you will want to ask the external legal counsel. How can you go to the external legal counsel? With the letter of inquiry. If they are not responding, then alternate audit procedures. Alternate audit procedures, no information you are getting. Weapon SA 705. Before going to external legal counsel, you have to get the permission of management and DCBG. If they are not giving the permission, alternate audit procedures. If alternate audit procedures are not working, again weapon. Then you can go to external legal counsel. All of those things we saw. Next, third important part in SA 501 is segment information. Segment information in accounting standard what? AS 17. As per AS 17, whether they are following it or not, for all the different products or service or different geographical area. Both ways, they can do segment reporting. Yes or no? Geographical area, north, south, east, west, they are doing segment reporting. Or EV, normal vehicle, they are doing segment reporting. Are able to understand? Based on products or service also, they can do segment reporting. Based on geographical location also, they can do segment reporting. For segment reporting, the presentation, disclosure, all of those things should be as per AFRF, which is nothing but AS 17. How the management is doing the segment reporting, the auditor has to obtain an understanding about that. That is the audit procedure that the auditor will have to do. Based on whatever they are doing, we have to do few analytical procedures and all of that. These two are the only audit procedures in segment reporting. This is the smallest part. Now just a recap of SA 501. We started off by saying that audit procedures will be done for all the items, audit evidence will be obtained for all the items, but few items will be given more importance than the other. Essay 501 is telling please give importance to these three areas. First one is inventory, second is litigation and claims, third is segment reporting. Inventory, two things you have to check. One is whether inventory is really available and existence of the inventory, and whether inventory is ready for sale. That is a condition for the inventory. For that you will have to do a physical verification of inventory. If you are not able to do physical verification on 31st March, you will choose another date and you will do audit procedures on the intervening transactions. If physical count is impracticable, then you have to do alternate audit procedures. If that is also not possible, then you will go for SA 705 using the weapon. Next is, if the inventory is held by third party, that time you have to get information about the quantity and the condition of the inventory. For that you will have to do other audit procedures, which is nothing but ACID. Next we saw was litigation and claims. Litigation and claims, there will be in-house legal team and external legal counsel. With the in-house legal team, you will go to them if you feel that when you are doing audit procedure on one item, you found that many other cases is possible and the risk of mental misstatement is high. If they are giving some information also, you will not rely on them fully. You will want to contact the external legal counsel. Directly you can't contact the external legal counsel. You have to give something called as letter of inquiry. If they are not responding to anything, then you will do alternate audit procedures. Then for that also, if you are not getting any information, you will use your weapon. Before going to external legal counsel, you have to get the permission from the management or the TCWG. If the management or TCWG are not giving any information or not giving any permission, then you have to do alternate audit procedures. Then in alternate audit procedures also no information means you can use the weapon. Then you can go for external legal counsel when it is highly risky, highly complex, or there is a disagreement between the management and the external legal counsel. You can go to them. There are few audit procedures you have to do. You have to inquire with the management and in-house legal team. Then if inquiry is not proper, then you will see the minutes of the meeting, then you will see the legal expenses account, then you will go for direct communication with the external legal counsel. Next is segment information. Segment information, there is nothing they are saying very big, they are only saying it has to be as per applicable financial reporting framework. Segment that means they are splitting based on geographical areas or based on products and services. Everything should be as per AFRF. All the presentation, disclosure, everything should be as per AFRF. Clear guys? SA 501 done with this. Now I am starting SA 560. SA 560 is subsequent events. Subsequent events, now what is the meaning of that? That means, say for a financial year, auditor is doing the audit. That means from 1st April 23 to 31st March 24. This is the period of the audit. So till 31st March 24, whatever transactions has happened in the company, the auditor will be checking those transactions, verifying those transactions and doing all the audit procedures to get the audit evidences on those transactions. But sometimes his opinion might have to be based on something which is happening after the 31st March 2024. For example, 31st March 2024, closing stock is 10 lakhs. Auditor wants to check the existence and the condition of the closing stock. He went on 31st March itself and he did the physical verification of the closing stock. Everything was perfect. 10 lakhs was perfect. So he is about to sign the audit report, clean report, unmodified report. On 6th April, there was a fire. In this fire, the closing stock of 10 lakhs, just this one went off, became zero. It became zero because it was fully destroyed by that fire. Now, if that audit report is being given to the shareholders, is that correct? No, it's not correct. Because looking at 10 lakhs, there are so many people who will be giving money or buying shares. There will be so many transactions which are happening in the organization. So, even though some event which happened after the financial year, it might be important for the auditor to give importance to that transaction also. So, for this standard, we are splitting it into three. The first one is the timelines. Timelines, we are splitting it into three. The first one is from 31st March till the date of audit report. That means auditor has full control till the date of audit report. The audit report is still not given to the company. Auditor has full control as to whatever is happening. Yes, on say 7th April, there was a merger which happened. Merger means two big companies, they came together and they became one company. But what are you doing on 31st March? That small single company, you are giving the audit report. Is that correct? No, it has to give effect to the merger also. So for here, the auditor has to obtain audit evidences and the auditor has to understand how the management is first identifying the subsequent events. Does the management have any policy or procedure to identify the subsequent event which is happening after 31st March? Merger and all is extremely apparent. Some things the management might have to put extra effort to identify the event itself which is happening after the financial year. Now, first, how will auditor find out whether the management is having all these policies and procedures to identify the subsequent event? Auditor has to go and directly ask the management and those charged with governance. If you directly go and ask the management and those charged with governance, will they give you the correct answer? Not possible. They will not give all the time. But they will talk between themselves and our job is to go and hear that. What is the meaning of that? Minutes of the meeting. Between them they are talking, but they will have the minutes. Auditor has access to the minutes. So auditor will be going and checking the minutes. Now in the minutes also auditor is not able to find anything. On 31st March, they will make a budget for the future. Yes or no? Budget for the future will be there. In the future budget, if you see, till now sales is only 12 lakhs. Each month 1 lakh. That is the sales values. But in the future, in the first quarter itself, they are achieving 15 lakhs. Only for the quarter. For quarter budget was done, they are achieving 15 lakhs for the quarter. Now auditor is getting a doubt. How, sir? Now 1 lakh monthly pandreenga, but your forecast is as if in the next 1 month you will be making 5 lakhs approximately. Yes or no? So if you are asking that question, he is forced to tell you because I am merging with another entity, both of us put together, we will become a big entity. That is why I am able to increase my revenue like that. So the auditor has access to budgets or forecast which is happening in the entity. So all of these things, if I am checking, I will have an idea of the subsequent events which are happening after the balance sheet date, but before the date of audit report. I told you I am splitting the timeline into 3. The first one is the date of the balance sheet date till the date of the audit report. Here I told you, you will make an inquiry. Inquiry na directly you are seeking information from knowledgeable persons. Yes or no? Seeking information from knowledgeable persons is called as inquiry. How will you make the inquiry? What are the questions you will be asking for this inquiry? We have a mnemonic for that. AAA BCD. What is this AAA BCD? Are you acquiring any assets? Are you selling any assets? Acquisition of the asset. That is the first A. What is B? Are you borrowing any money? If you are borrowing any money, from whom are you borrowing? What is the collateral you are giving? What is the security you are giving? What is the value of the security? What is the value of the money which is entering the organization? All of these questions you will be able to ask when you are doing the inquiry for borrowing. C is contingency. Contingency means future action plan. What is that which you are having? D is destruction of the asset. Any asset which is destroyed. What is the reason? How has the asset been destroyed? What was the accounting done for this destruction of the asset? Now 2 more A's are there. For this is any change in the accounting policy and any accounting adjustments they have made. Once you are able to ask all these questions to the management, you get a fair idea as to the subsequent events which has happened. Clear? So first we have to go and ask the management, how are you identifying your subsequent event? We have to figure that out as auditors. Then we have to go and ask them inquiry about AAA, BCD. Next, will they give all the answers as soon as you inquire? Chanceless. We have to go and see what they are talking between themselves. That is the minutes of the meeting which is happening between the management and those charged with governance. In the minutes also, if I am not able to find anything, please see the budgets or the forecast. Normally it will be for the future. If they are having budgets, you can easily identify what has actually happened there. This is the first timeline, that is the date of the balance sheet till the date of the audit report. Next is date of audit report till the date the financial statements are issued in the AGM. Till the financial statements are issued in the AGM, auditor has control but limited control. Yes or no? So the flow is auditor will go and conduct the audit. While conducting the audit, he will apply all the audit procedures, get all the audit evidences. He will do the audit report. The opinion will be given in the audit report. This audit report will be given to the company. That company along with the audit report will add more items and make that as an annual report. Annual report will be shared to the shareholders in the annual general meeting. Are you able to understand? So here the date of the audit report till the date that the financial statements are issued in the AGM. So after the date of the audit report, if the auditor finds something, the auditor does not have any obligation to perform audit procedures after the date of audit report. But if he finds something which has happened, say for example now, in the second timeline I am saying fire happened. Fire happened after the date of audit report but before the financial statements are issued. Here, first I should discuss with the management and TCWG. First understand, sir, already you are in fire vanduchu, 10 lakh stock zero ஆயிடுச்சு. நீங்க இப்போ என்ன பண்ண போறீங்க? Are you going to prepare and present another financial statements which your closing stock is zero? அந்த மாதிரி you first discuss with the management and TCWG. அவங்க நேர்மையானவங்க, they are very good people. They will say that, yes sir, by mistake fire has happened, no problem, we will get the insurance later. We will amend the financial statements. I will make the closing stock to zero. If they are accepting for amending the financial statements, the auditor will determine if the financial statements needs amendment, and if they are accepting for the financial statements to be amended, then auditor has to do audit procedures on the amended financial statements. Auditor has to obtain sufficient and appropriate audit evidence on the amended financial statement. Management is saying, எங்களோட responsibility என்னது? What is my responsibility? Preparation and presentation of the financial statement. I prepared and presented the financial statements. You did the audit report also. Why are you poking me again and again? One time only no preparation and presentation. I can't do again and all. Get out of my office. The management is not amending the financial statements. That time you check. Auditor has how much power over the audit report. Now I told you we are in the timeline between date of audit report to the date financial statements are issued. I have dated the audit report today only. I have dated the audit report today. Tomorrow I have to send to the client. It is still with me. Who has the full power? Auditor has the full power now. Audit report still with the auditor, not provided to management or TCWG. Auditor has full power on this audit report. Now he asked me to get out. I have sufficient appropriate audit evidence that this financial statement is materially misstated. It's supposed to be zero, but it is showing as 10 lakhs and it is affecting all the other items in the financial statement. So I will use my weapon, SA 705. Are you able to understand? Now here, next, I have provided the audit report now. Second situation. First situation, what happened? Audit report is still with the auditor only. Dated today. Tonight only fire happened. So I called him and told, he asked me to get out. Weapon was still with me, so I was able to amend. Now I gave the audit report to him. Now the company is having the audit report. I told you the audit report will be given to the company and they will compile and they will add more things and make that as annual report. Now they are in the process of adding so many things. Now I will call them and tell them, sir, audit report is with you, I understand. But please don't issue the audit report. I will be telling them not to issue the audit report. But management, will they listen to you? Whatever you say, they will say okay or what? Chanceless. They will issue it without the amendments. If they are issuing it without the amendments, it is the duty of the auditor to prevent the reliability. How will the auditor prevent the reliability and all of those things? Standard is not telling. So what will auditor do? He status podu, he LinkedIn la post podu, Instagram la story podu, whatever you want you do, YouTube la your video podu, press release podu, whatever you want you do. But you have to prevent the reliability of that audit report if it is issued without the amendments. Are you able to understand? Clear? In these 3 cases we saw, 4 cases we saw. First one was management is amending. If the management is amending, then the auditor has to do the audit procedures. If the management is not amending but the audit report is still with me, I still have the weapon, so I will change it to SA 705 immediately. I have given the audit report to him, but I don't want to send it to the stakeholders. I will call him and tell, please don't send it. If he has issued it without amendments, then it is the duty of the auditor to prevent the reliability of the audit report. How he will do? Standard is not telling. Clear? Now coming to the third timeline, which is after the financial statements are issued. I already told you, once the date of the audit report is done, then auditor is not obligated to perform any audit procedures after the date of audit report. After the financial statements are issued now, obviously it is after the date of the audit report. But say after the financial statements are issued, there is some problem. There is a subsequent event which is extremely material. It has to be reported. Then what should the auditor do? The auditor will again go and discuss with the management and TCWG, again determine if the financial statements need amendments, inquire how the management or TCWG is going to address this issue in the financial statement. If the management says, okay, I will amend the financial statements, no, that is when after it is even issued to the shareholders, now they are again going back to that financial statements and they are amending the financial statements now. Now auditor has to do audit procedures on the amended financial statements. Now whoever has already relied on the old financial statements, auditor has to inform to other people who have relied on the previous financial statements. Now this new audit report, auditor has to give. In the new audit report, SA 706, I have to mention. What is SA 706? EMP and OMP. In the emphasis of matter paragraph or other matter paragraph, the auditor has to mention that the previous audit report is fully wrong. This is the new audit report for that financial year. Even though that audit report has been given to the users of the financial statements, you please don't rely on that. This is the new one. You rely on this one only. Please solely EMP or OMP la you have to compulsorily mention. But if the management is saying, get out, I can't keep amending. Already I prepared all the documents, I did the annual report, I gave it to the stakeholders. Now you are coming and telling me to amend the financial statements. Now how can I change it? Again, it is the duty of the auditor to prevent the reliance. It is the duty of the auditor. How you will be preventing the reliance? Standard is not telling. You put status on WhatsApp, you take photo, you take a video of yourself talking and you give a press release. Do whatever you want. But as an auditor, you have to prevent the reliance. Clear? Yes? First we saw date of financial statements 31st March to the date of audit report. There, auditor will perform all the audit procedures by way of first he will understand the procedures that the management is going to do to identify the subsequent events. For that he will inquire what are all items he will inquire is AAA, BCD. He will be inquiring on AAA, BCD. If he inquires, directly will he get all the information? No. So he will be checking the minutes of the meetings. In minutes also, if he is not getting anything, he can check the interim financial statements or the budgets of that company. The next one is between the date of the audit report till the date the financial statements are issued. In that case, after the date of audit report, auditor does not have any obligation to do the audit procedures and all of that. But if there is some material thing, he has to first discuss with the management as to what the management is planning to do. If the management is very good, sir, I will immediately amend to the financial statement, no problem for me. So if the management is amending, then the auditor has to do audit procedures and obtain sufficient appropriate audit evidence. If the management is saying he can't amend, now you have to see where is the audit report. Audit report is still with the auditor, not given to the client. So weapon is with us, SA 705. Auditor is given to the company, but company has not posted to the shareholders yet. So ask the company not to issue this audit report. I am going to give a new audit report. If the company is issuing without amendments, then auditor has to somehow prevent the reliance. The third part was after the financial statements are issued. If after the financial statements are issued, that means it is after the date of the audit report. That means again, auditor does not have any obligation to do the audit procedures and all, but he will discuss with the management and TCWG, determine if the financial statements need amendments, inquire how the management is going to address all these issues in the financial statements. If the management amends, then auditor will be doing all the audit procedures, inform to the already issued people saying don't rely on that, I am giving a new one, and the new audit report mentioned in the EMP, OMP paragraph and say 706, he has to mention. If the auditor is saying no, I can't amend, get out of my office, auditor has to somehow prevent the reliance. Are you able to understand? Clear, guys? Next is one small topic called evidence of conditions. If the evidence of condition existed at the date of balance sheet, then it is an adjusting event. If the evidence of condition not existed at the date of balance sheet, then it is a non-adjusting event. This is as per AS, accounting standard. You have to know what is the adjusting event, non-adjusting event. What is the meaning of evidence of condition existed at the date of balance sheet? What is the meaning of that? You are making a sale. Your total sales is 1 lakh. 90,000 is for one person. You are relying totally on one person. This person will give money only after 45 days. Now month on month, this person is not giving that money. Every month 90,000 is becoming overdue. That means a major debtor has declared insolvency. If he is saying, I am sorry. If a major debtor declared insolvency, that means whether the debtor was existing on that balance sheet date. Yes, he was existing on that balance sheet date. That means it is an adjusting event. That means condition was existing as on balance sheet date. Evidence of condition existing on balance sheet date. Example, one more example I will tell you. They are planning a merger. Planning a merger. Planning is happening from February. Merger happened in April. Here, evidence of condition existing on balance sheet date. So it is a adjusting event. Stock on 31st March, 10 lakhs. On 5th April, fire. It became 0. Evidence of condition, is it existing? No, suddenly only fire will come. Evidence of condition not existing as on balance sheet date. So it is a non-adjusting event. Fire on 20th March. Insurance company gave only 50%. You are expecting 90%. You created a provision for 90%, but insurance company is giving only 50%. Evidence of condition here in this fire case existed as on balance sheet date. Fire already happened by the time balance sheet date came. Insurance provision already created, but insurance company gave only 50%. Here it is a evidence of condition was existing as on balance sheet date. Clear guys? Clear? This is a separate concept, accounting standard concept, but they can even test this for you in your exam. What is adjusting, non-adjusting, and all of those things. Clear up? This is essay 560. Let's go to essay 570. Yes? Next is essay 570. 570 is talking about going concern. Going concern means what? Going concern is an assumption in accounting. Yes? What does that mean? You are assuming that the company will go on forever. And the assumption that the financial statements itself is prepared. So when the auditor is going for audit, when he sees the financial statements, he will know that this assumption is followed. Yes or no? Yes. So what is the auditor's responsibility with regard to essay 570? The auditor's responsibility is to obtain the sufficient appropriate audit evidence to conclude that this going concern assumption has been used appropriately. Appropriately means what? Really this entity is going concern and the financial statements are prepared as per going concern assumption. So the auditor has to obtain sufficient appropriate audit evidence that this going concern assumption which is used in the financial statements are used appropriately. This is the first objective. The second one is conclude that the audit evidence obtained, whether material uncertainty exists or not. What is the meaning of material uncertainty? Material uncertainty means there is a 50-50 probability. And if we fail in that 50%, it is extremely important. Uncertainty nale 50-50 probability. Material means important uncertainty. If we fail, then it is a big problem. For example, you all know this car company. What is this car company? Audi. What Audi did, he made a beautiful advertisement. What advertisement? He is saying, my car, keychain is coming. In this keychain, first one, my car is having the safety of who? Mercedes-Benz. Then they are saying, another keychain is coming. In that keychain, male ring hole irko. Yes, sir. In that keychain, they are saying, this is having the style of BMW. Then they are saying it has the sportiness of Jaguar. Then it is saying it is having what? Something else of some other car. Like that, 4 car companies, they took the names of 4 car companies and they kept 4 keychains, and the next slide, slowly all of these are going away and only Audi is staying. Basically what they are about to tell is all in one. In the 4 saying this is Audi. So, don't spend, just spend some 60 lakhs on my car and you will get the features of all these 4 cars. Solely he is making an advertisement. It is a very good advertisement. Yes or no? Very beautiful advertisement for us. But if you see Mercedes-Benz, BMW, Jaguar and other car company, these 4 people, it is a good advertisement or worst advertisement? It is the worst advertisement. Will they keep quiet? No. They will ask her, you want to advertise your car. You advertise your car. Why are you involving my name? Did I stop you from advertising your car? Why are you unnecessarily involving my name? So they filed a case against Audi saying, because of you, my image is tarnished. You are talking as if Mercedes-Benz is giving only safety. I am also giving style, I am also giving engine power, I am giving so many other things. You have tarnished tarnished my image like anything. For that, you have to pay me 1,000 crores. Like that, all these 4 companies have filed a case on Audi and totally they are asking for 4,000 crores. Now the revenue of Audi itself is 4,000 crores. Listen, revenue, not profit. Revenue itself is 4,000 crores. In case they lose the case, what will happen to Audi? Going concern itself will get affected. But whether they lose the case or not, we don't know. It is a 50-50 probability. Guys, all this is my imaginary case. In advertisement, what is real? After that case and all, I myself made it up for this example. Don't go and Google, really is there a case against Audi? It is not there. Now listen here, there is a 50-50 probability of whether they will win the case or lose the case. That is called as material uncertainty, because if they lose the case, then their whole company will be shut down. Going concern itself will get affected. That is why it is material uncertainty. Are you able to understand? The first objective was the auditor has to obtain sufficient appropriate audit evidence to conclude that this going concern principle is being used appropriately. That means really whether it is going concern or not. The second one is conclude that the audit evidence obtained, based on the audit evidence obtained, whether material uncertainty exists or not. Material uncertainty means 50-50 probability. Might happen, might not happen. But if it happens, it will affect my entire company, going concern. Based on this, the auditor will be reporting with regard to 570. We saw in SA 700 contents of audit report. Separately they told 570, reporting on 570. That is also a responsibility of the auditor to separately talk about this going concern. So reporting on 570 as per SA 700. Are you able to understand? Now coming to responsibilities of the management. Responsibility of the management means with regard to going concern, what and all the management has to do. First, the management has to assess itself whether it is really going concern or not. The management has to assess itself whether it is going concern or not. For that, there are a lot of factors that the management has to consider. What are the factors that the management has to consider for assessing whether the entity is going concern or not? What is the degree of uncertainty of a future event? That means what? Degree of uncertainty of a future event. That means you are saying Audi did like this and there is a 50-50 probability. Really, is it a 50-50 probability? Last year only, somebody else called Horlicks, they made an ad saying, Complan kudicha unmele perisavama, Horlicks thaan kudikano. Appdin solli they made an ad. Complan went and complained on Horlicks. But Horlicks only won the case. Horlicks only won the case. They do not want to pay even a single rupee. So here there is a similar ad which is made by Audi, tarnishing image of all other 4 companies. So here actually what is the probability of winning the case? It is really 50-50 or the winning probability is little higher. The winning probability is little higher because there is a similar case where person in place of Audi has won the case. So here also the probability of winning is higher. So the management has to first check the degree of uncertainty of the future event. What is the actual probability? Is it 90-10 actually? All of those things they have to see. They also have to check degree affected by external factors. Who are these external factors? For example, there is a supplier. Supplier means he is supplying the goods to him. That supplier has gone off as bankrupt. Supplier bankrupt and whatever he is supplying is of very low quality. So automatically these people started getting returns, complaints and they will not come back to us? Yes or no? Will anybody come back? If again and again they are giving defective products, will you keep going to the same shop and buying them, giving them more opportunities? No. So, if a supplier is doing some mistake, it is affecting this entity. So, supplier is somebody who is external to the organization. So, this mistake also will affect my company. So, what is the degree of external factors affecting my company? Third one is, the management must do a judgment of the future. Here in Audit, what judgment of the future they will be making? See here, Horlicks won the case last year. I also did same thing. So in this year, I am also going to win the case. I am making a judgment for the future. So the management has to do all these things. The management also has to check what is the size, what is the complexity involved affecting my going concern, and all of those things. What is the nature, what is the conditions, where am I operating, what industry I am operating, is the entire industry falling, then there is some risk called as inherent risk. So it will automatically affect my entity also. So all of those things management has to check. Now this is the only standard which is talking about responsibility of the management. Are you able to understand? So it is important. Next is auditor, not responsibilities, it is implications. Implications, now it will be like case studies. What is the first case? The first case is saying that the financial statements are actually prepared as per the going concern assumption, but the auditor is saying that it is inappropriate. Inappropriate means the financial statements are actually not going concern. The entity is actually not going concern. That means the financial statements should not have been prepared this way. But how the financial statements are prepared? As per going concern. Here, the auditor has sufficient appropriate audit evidence that there is a material misstatement, and is it pervasive? Yes, going concern means the entire entity is getting affected. So, pervasiveness now, he has to give a adverse opinion. Clear? Here in the first case, we saw that the financial statements are prepared as per going concern assumption, but the auditor feels that it is inappropriate. Inappropriate means the entity is actually not going concern, but the financial statements are prepared as per the going concern principle. In that case, there is a material misstatement. Yes, there is an apparent material misstatement. Is there evidence for that? Yes, there is sufficient appropriate audit evidence. Is it pervasive? Yes, it is affecting all the other items in the financial statements. So, auditor has to give a adverse opinion. Clear? Now coming to the second case. The financial statements are again prepared as per going concern assumption. But here there is a material uncertainty. Material uncertainty means, I told you, there is a 50-50 possibility of it getting affected or not getting affected. This material uncertainty was disclosed in the financial statements. I want to reiterate the concept of the modified opinion, saying a modified opinion means there is a mistake in the financial statements, and that mistake is material. There is a material mistake in the financial statement. Material mistake means whatever is happening in the entity is not being reflected in the financial statements. That is only the concept of material misstatement. Here there is a material uncertainty, and the financial statements have disclosed that material uncertainty. That means whatever was happening has been disclosed in the financial statements. So there is sufficient appropriate audit evidence that there is no material misstatement here. If there is no material misstatement, that means unmodified opinion, clean report will be given. Are you able to understand? Yes, you need to be very clear with this. Material uncertainty naale modified opinion kadayadu. If there is a material uncertainty and if it has been disclosed in the financial statements, that means the financial statements are representative of whatever has been happening in the entity. So it is an unmodified opinion. Are you able to understand? If it is not disclosed, if it is not disclosed. That means there is sufficient appropriate audit evidence that there is a material uncertainty, but I don't know about the pervasiveness. So depends on the pervasiveness, I will be either giving a qualified or a adverse opinion. Are you able to understand? Now in some cases, I want to understand about the going concern of the entity. So I am doing inquiry and all of those things, but the management is saying, oh well, to see the financial statements, give the opinion. I gave the financial statements, I gave invoices. Simply don't come and ask the questions. Get out. They are saying they are not willing to respond to you. They are not responding properly to you. At that time, do you have sufficient appropriate audit evidence? You do not have sufficient appropriate audit evidence because they are not responding properly. If there is no sufficient appropriate audit evidence and there is a material misstatement, what opinion will you be giving? If it is pervasive, you will be giving a disclaimer of opinion. If it is not pervasive, you will be giving a qualified opinion. So based on the pervasiveness, you will give a qualified or a disclaimer of opinion. Are you able to understand? Yes, implications. 3 case studies we saw. The first one was the financial statements are prepared as per going concern, but the auditor feels it is inappropriate. That means it should not be prepared as per going concern. That means there is a material misstatement and there is sufficient appropriate audit evidence and it is pervasive. It is affecting all the items in the financial statement. So the opinion given by the auditor has to be adverse opinion. In the second one, the financial statements are prepared as per going concern assumption, but there is a material uncertainty. Material uncertainty means there is a 50-50 possibility of going concern being affected or not affected. If that material uncertainty has been disclosed to the financial statements, that means the financial statements are representative of whatever happened has happened to the organization. Then it is a unmodified opinion. If the material uncertainty is not disclosed, then there is a material misstatement, and there is sufficient appropriate audit evidence, but we don't know about the pervasiveness. So based on the pervasiveness, it will be either qualified or an adverse opinion. The third case was the management asking you to get out. Management is unwilling to extend his assessment. At that case, you do not have any sufficient appropriate audit evidence. When there is a misstatement and you do not have sufficient appropriate audit evidence, based on the pervasiveness, you will be giving a qualified or a disclaimer of opinion. Clear? Yes? That is Essay 570, guys. Listen here, guys. Next is Essay 220 and SQC 1. Now both these standards are relating to quality. That means however you are reporting as an auditor, you have to follow certain quality standards, quality measures, because we already told standards on auditing. If you are following, that means you are giving highest quality. Yes or no? Uniformity, highest quality we saw. Highest quality of biryani, if you remember it right. Yes or no? Same way, more quality to have, they are having these 2 specific standards called as SA 220 and SQC 1. Why now quality is one word, why are we having 2 standards for that? What is the difference between them? Standards on quality control 1 is for the firm as a whole. How a firm has to operate irrespective of whatever engagement it is having. Whether it is a limited review engagement, whether it is a assurance engagement, doesn't matter. You follow this SQC 1. SA 220 is specific for audit engagement. Are we able to understand the difference? So, both these standards are talking about 5 things. What are the 5 things these 2 standards are talking about? The first one is, how should the leadership be? Leadership means the top level people in the organization. How should they be? What should they do? The second one is, what is the ethical requirements which is there? Third one is acceptance and continuance of client. We already saw an essay Acceptance and continuance of client. We saw in 210, today we saw accept or continue was the objective of 210 itself. Acceptance or continuance of client. The fourth one is human resources. How should the human resources be? What procedure they should follow and all of those things. The fourth one, most important one, is the engagement performance. I'll tell you why this is the most important one. And the last one is monitoring. If we finish these 5, then there is nothing more in these standards. So we are just going to see, as per SQC1, how should the leadership be? As per SA 220, how should the leadership be? Same way for ethical requirements, acceptance or continuance of clients, human resources, engagement performance and monitoring. Are you clear? The first one is leadership. Whenever they say SQC1, your answer should have the word policies and procedure, because SQC1 is giving the policy and procedure for the entire firm. Are you able to understand? This leadership is basically going to give you the policy and procedure for the internal culture of the organization. Culture means what? The ethics which is followed in the organization. Who has the ultimate responsibility in this leadership? The partner or CEO has the ultimate responsibility in this leadership. Below them, there will be so many people, the management, operational level people, all of those people should have proper experience and capability. That's all the standard is saying. SQC1 with regard to leadership, they are saying there should be, I told you SQC1 naale, this word should be there, that policy and procedure. That will itself give you 1 mark. The policy and procedure is talking about the internal culture in the organization. Culture means the ethics which is followed in the organization. Who has ultimate responsibility? The partner or the Chief Executive Officer, that is the CEO, has the ultimate responsibility. And people below them must have adequate knowledge, adequate skill, adequate capability and all of those things. That only the leadership of SQC1 is saying. What the leadership of SA 220 is saying, I told you the difference between SQC1 and SA 220 is that SQC1 is for the entire firm and SA 220 is for the only for audit engagement. So every audit engagement, we know that there will be someone called as engagement partner. This engagement partner will have the full responsibility for each engagement, and he has to ensure that all the work are with regard to all the legal requirements, all the professional standards and all the quality control policies of the firm which is done by the partners and the CEO. Are you able to understand? So you can imagine this as, I told you I worked in KPMG, yes? KPMG will have the policy and procedure for whether it is doing a consulting activity, whether it is doing audit activity, any activity. KPMG will have a policy and procedure. I was in which department? Transfer pricing department. In that my partner's name was Rupesh. He is the engagement partner for the work that we are all doing. So this engagement partner, Rupesh, is responsible for the TP audit which is happening. So Rupesh also has to take care of all the policies and procedures which KPMG itself is forming for leadership. That is what all the capabilities which the lower level people should have. The main partner, Rupesh will have a main partner. He is called as Hardik. He is sitting in Bangalore. This Hardik partner, who is the main person of KPMG, he is involved for all the southern operations for transfer pricing. So the policy and procedure for the firm will say that this Hardik, who is the partner of the firm for southern operations, he is the head, he is involved for all the leadership activities. He is only responsible for framing the policies and procedures. He is involved for the culture of the organization. But for each engagement, for the TP audit for Daimler AG in Chennai, for which it is happening, I was just an article. Can I have full responsibility? No, my partner Rupesh, who is sitting in Chennai, will have the full responsibility. Now we are able to understand the difference. If they are saying policy and procedure for the entire firm, then we are talking about SQC1. If we are talking about only for a specific engagement, then we are talking about SA 220. So in the leadership, there who has the full leadership, CEO or the partner will prepare the policy and procedure. Here, the engagement partner will have the full leadership. He is supposed to see whether all the people under his team are working as per professional standards, whether they are following all the legal and regulatory requirements, and that quality control policy which was done as per SQC1 and all of those things. Are you able to understand? And most importantly, the engagement team members, whether they are article or whatever they are doing, they should not have a fear to raise concerns. That means if I want to say this is wrong, I should be in a position to say this is wrong. Just because the client has more experience than me, doesn't matter. Whatever it is, I am an auditor. I am representing my audit firm and coming to your office to audit. So, my partner Rupesh has to see that I don't have any fear to raise concerns. Are you able to understand what SA 220 and SQC1 are saying overall? Yes? So, this is about leadership. The second one is about ethical requirements. What are they saying in ethical requirements? I told you in SQC1, they have to start with policies and procedures. Ethical requirements kaga SQC1 should have a policy and procedure for the firm as a whole and the persons in the firm. For all the firm and the personnel in the firm. They all have to follow one thing, the code of ethics. Who gives the code of ethics? The code of ethics is given by ICAI. Everybody has to follow the code of ethics. That this person has to see. Who is that person? Leadership again. The CEO or the partner has to see that all the firm and the personnel are following the code of ethics issued by ICAI. Now here, what should the engagement partner be responsible for? Is there a threat to independence? Threat to independence, now what is the meaning of that? Is the person really independent or not? Is he really a third party to the organization? All of these things the engagement partner has to check. Threat to independence, engagement partner has to check it out. Which standard is saying? SA 220 is saying that the engagement partner has to check for threat to independence. The next one, third one, is with regard to acceptance and continuance of the client. With acceptance and continuance of the client, we have to see what is the integrity of the client. Is there a news report saying he is not proper, saying he is doing all fraudulent activities, he is doing illegal business? So all of those things has to be checked even before acceptance or continuance of client. What is the competence to perform the engagement? Do we have the proper competence? Do we have team members? They actually require audit in 10 different places. We are only 2 team members. That means the firm does not have the competence to go ahead with the client. So the engagement partner or the CEO or the partner has to check whether he is competent to perform the engagement, whether his team members are competent. The third one is compliance with all the ethical requirements. So these 3 things are being told in SQC1 and also SA 220. The same thing for acceptance or continuance of client. What are the 3 things? The first one is integrity of the client. Second is competence to perform the engagement. Third is compliance with the ethical requirements. Fourth is human resource. For human resource in SQC1 you have to start with. There must be a proper policy and procedure for sufficient personnel. That means for the job, who has to be in the job, they should be in the job. It is a listed entity, extremely important, highly complex transactions. Only articles are going. Is that good? No. If it is highly complex, then at least 2 chartered accountants must be deployed in that engagement. So all of these things about the policy and procedures, about sufficient personnel, all of these things are being said in the SQC 1. What is SA 220 saying? He has to ensure that the engagement team and the experts people outside the firm helping the firm to operate. The engagement team and the experts are having appropriate competence. In transfer pricing itself, there will be TP audits and there will be TP assessments. Whenever there is an assessment, we have to go to the assessing officer. I hope you know what is assessment. Yes? Assessment. No? When the return is filed with the assessing officer, few companies will be picked for assessments based on the volume of transaction, or if they have any doubt that you've done some fraud, they will pick, assessing officer will pick. Then we chartered accountants have to go to the assessing officer and explain ourselves as to why this transaction has happened on behalf of the company. But as chartered accountants, if we are going and explaining, it will be better. Or some lawyer itself is coming and explaining, that will be better. Lawyer coming and explaining will definitely be better. So what big fours will do is they will have tie-ups with these law experts. So whenever we have to go and do the representation, that sir will come and do the representation. So he is also like he is part of the engagement team, but whatever said and done, he is an outsider to the organization. So engagement team and the expert should have appropriate competence that is being said in the SA 220. Now coming to the most important one, that is engagement performance. This is the fifth one, yes? Extremely important, very important, especially for JAN attempt. For engagement performance means there is something called as engagement quality control reviewer. So for listed entities, listed means they are listed in the stock exchange. For listed companies, when the auditor is preparing the audit report, they can't directly give the audit report to the company. It has to go through a review process. Even though the engagement team member is there, the person in the managerial level will be reviewing it, again sending it to the partner will be reviewing it, and partner will be putting his seal and signature and all of those things. But still there is one more level of reviewer. He is called as engagement quality control reviewer. EQCR partner approve panna mattundan the audit report will exit the organization. So these big fours and all will compulsorily follow this. How deep this EQCR partner will go is, once what happened for listed company, when I was doing the audit and I sent the report, TP documentation report that was. So I told you this SQC1 is for all engagements, not only audit engagement. So this documentation report, when I had to send it to the EQCR, get his reviewer and then only send it to the client, client is also putting pressure. I used that word that we will. EQCR partner rejected. He said, you can't use the word will. Will means you are giving 100% you will do it. But you please use we may or we shall. These words you can use, but we will word you can't use. Are you able to understand the depth in which the EQCR partner will go? So he rejected my report. He will give his comments in the report itself. We have to change as per his comments. Or if we feel whatever we wrote is only correct, then we can reply there itself to his comments, send it back to him. He will approve. Only after getting that approval, that document or that report or whatever will exit the audit firm to the client's office. Are you able to understand? So this engagement performance nale, you should remember EQCR, that is engagement quality control reviewer. For listed companies, EQCR is mandatory. Now in SA 220, what are they talking about? In SA 220, if EQCR is required for all listed entities, then the engagement partner role, what should it be? The engagement partner should make sure that any report or document which is going to the client is approved by the EQCR partner. Only after that it has to go. First of all, for every listed company, Engagement partner will go and get the client and come. Yes or no? Engagement partner is getting a new client. As soon as he gets a new client, and if the new client is listed, it is the duty of the engagement partner to ensure that EQCR partner is appointed for this specific client. So first one is, he has to ensure that EQCR partner is appointed for that specific client, and if EQCR partner is giving his review or his opinion, then we have to discuss all the important matters with the EQCR partner, and engagement partner should ensure that no item leaves to the client's office without the approval of the EQCR partner. I am spending so much time here. I don't want you to make any mistake in EQCR. Are you able to understand? The last one is monitoring. Monitoring means in SQC1, they always start with policies and procedures. They should have policies and procedures for periodic inspection. That is all they are saying in SQC1. What are they saying in SA 220? The engagement partner should document a few things. What should he document? The first one is, if there is any issue identified in the monitoring process, he has to document that issue. And based on complaints, if there are any conclusions which are there, or if the complaints is not done properly, he has to document that also. And regarding the continuance of the clients, acceptance of clients, we saw how many points? 3 points we saw. That also he has to document. All these 3 he has to document. Now monitoring they are saying for SA 220. Are you able to understand? That is all is SQC1 and SA 220. We will just go through the document, so PDF, so that we will have better understanding. In the PDF, both of these standards are talking about audit quality. Both are talking about audit quality. SQC1 is firm level, SA 220 is engagement level. Here, leadership. What did we see in leadership? Who has the full leadership? Here it is the CEO of the organization or the partner, and here the engagement partner takes the overall leadership. What and all he has to do, whether they are properly complying with the professional standards, whether they are complying with the legal and regulatory standards, whether all the quality control policies which is done by the SQC1 has been followed, all of those things he has to check. Second one is ethical requirements. SQC1 starts with the policies and procedures for the firm and personnel to follow the ethical requirements. That is nothing but the code of ethics issued by ICAI. Can you see code of ethics issued by the ICAI? Yes. SA 220, they are saying engagement partner is responsible for any identification of threat to the independence. Independence should never get affected. If there is any identification of threat to independence, then engagement partner should immediately get involved. And based on that, whatever reporting has to be done, he has to report also. The next we saw was acceptance and continuance of client. We saw only 3 points, that is, we have to check the integrity of the client, competence to perform, and compliance with ethical requirements. Here also, it is the same thing as SQC1. Human resources, we should start with policies and procedures for what? For sufficient personnel in accordance with legal, regulatory standards, professional standards, and all of those things. In the other side, SA 220, they are saying engagement partner should ensure that the engagement team along with the experts are outside of the organization, but still it is like they are part of the engagement team. Engagement team along with the experts should have appropriate competence, they should have professional knowledge and all of those things. Engagement performance, I told, is the most important one for JAN attempt, that is EQCR partner, engagement quality control reviewer. He should be there for all the listed entities. For all the listed entities, if they are having a difference of opinion between engagement team and the EQCR, then first they should resolve the difference, then only they can give the report outside. Issue should be resolved, then only they can give it. Here the engagement partner should make sure that that EQCR partner is appointed once he gets the client itself. He has to discuss all the important matters, and he should make sure that the audit report is first reviewed by the EQCR partner and then only sent outside. Are you able to understand? The last one is with monitoring. Here, policies and procedures with regard to periodic inspection should be there. Here, the engagement partner should document the issues identified, all the conclusions on the complaints, and acceptance and continuance of the client. Clear, guys? With this, SA 220 and SQC 1 is also over. Clear? I don't want you to miss this chapter. It's a small chapter. If they ask any question, easy to score chapter. So let us finish it. I want to start off by asking, what is SA 550 related parties? Why do we have this standard called as related parties? Why? Related parties means who? Who are our related parties? Father, mother, brother, sister, father-in-law, mother-in-law, brother-in-law, sister-in-law. All of these people are our related parties. People who are related to us in some way or the other, we called them family or relatives. Yes or no? So what is the problem with these related parties? Say for example, you want to sell a car. Sell a car. Say just one car you are selling for 10 lakhs rupees. The cost of the same car is around 3 lakhs rupees. How much is your profit? 7 lakh rupees. The tax which you will be paying on this specific car is 30% on 7 lakhs. 2.1 lakh, not 21 lakhs. 2.1 lakhs is the tax which you will be paying only on selling of this one car. Imagine the same scenario. You are the owner of a car company now. Now your father wants a car. Now how much will you sell the same car to your father? Remember, உன்னை சின்ன வயசுல இருந்து படிக்க வச்சு ஆளாக்கி, now whatever you are, all the fees, everything, calculate all of that and tell how much can you ask your father. How much? How much? 3 lakhs. If you ask him, he will slipper you. Ena, did I see all these calculations when I made you study? When I gave you pocket money, monthly you will ask pocket money, still you will steal from my pocket. You think I don't know all these things? Now how dare you ask me for money? So you will be selling for 0 rupees. What is the loss made here in this transaction? 3 lakhs is the loss made here. What is the tax paid to the government? Nothing. So here the government is losing some money because you are making some transactions with your related party, and that is why related party transactions are important. Are you able to understand? Yes. Now for this standard, father, mother, brother, sister, they are also relative, but also they are giving a few definitions of what is called as related party. What is that definition? The first one is the related party as per AFRF. What is as per AFRF? Accounting standard. Accounting standard 18 talks about related party transactions. In that, whatever is your related party, that also will become your related party here. If the related party is not defined under AFRF, then you please come to this SA 550 and see the definition. What is given in this SA 550? Any person or entity who has control or significant influence directly or indirectly through one or more intermediaries over the reported entity. That is called as related party. Now listen to this. See, your reporting entity is your client. Okay. Now what are they saying is, any person or entity who is having a control or significant influence over your reporting entity. Any person or entity who is able to control your client's entity or having a significant influence on your client's entity, then both these people are called as related parties. The transactions between them is called as related party transactions. Are you able to understand? Now this person or entity, directly he can have a control, or company 1 he will have control, company 2 will have a control, then this company 2 will have a control on your reporting entity. That is what is directly or indirectly. Person or entity has control or significant influence directly or indirectly through one or more intermediaries is called as related party. This is the first part. The second part is another entity over which the reporting entity has control or significant influence directly or indirectly. I told you reporting entity is your client. Your client is having a control or significant influence over another entity called XYZ. This can be direct or again through C1, C2, and the C2 is having XYZ. So these two automatically become related parties and the transactions between them will be called as related party transactions. Clear till here? Yes. Now the third one, they are saying that another entity over which, that is under the common control with the reporting entity, having common control ownership or common KMP. That means the same person, common person, is controlling this entity and also the reporting entity. Then the reporting entity will automatically become the related party of this company 1. Are you able to understand? Another entity that is under the common control with the reporting entity, having a common control ownership or common KMP. KMP is key managerial person, all the top level people. So if they are common, then we can say that company 1 and the reporting entity are related parties and the transactions between them are called as related party transactions. Now here it is the same person who is controlling company 1 and reporting entity. Imagine husband is controlling company 1, wife is controlling reporting entity. Then also company 1 and reporting entity both become related party transactions. Are you able to understand? That is another entity that is under the common control with the reporting entity, having owners who are close family members. That is husband and wife. Husband is having control over one entity, wife is having control over one entity. So automatically these two entities become related parties and the transactions between them become related party transactions. Now from the top, we saw that the related party means any related party as per AF, RF is your related parties and the transactions between them is RPT, that is related party transactions. Under this standard, they are saying that any person or entity has control or significant influence directly or indirectly through one or more intermediaries, or another entity over which the reporting entity has control or significant influence directly or indirectly through one or more intermediaries, or another entity that is under the common control of the reporting entity having common control ownership, common KMP, or owners who are close family members. Are you able to understand all the three? Yes. Now here we saw two words called as control and significant influence. What is the meaning of this control and significant influence? Control means that person is having the power to govern all the financial operations. If I have to translate this in percentage terms, they have more than 50%. That is control. What is the significant influence means? Significant influence means they have a share of ownership, share of statute, but they can't control the entire enterprise. If I have to translate it in percentage, significant influence is 20%. More than 20% if I am having, it is significant influence. Now, 60% is still more than 20%. Yes or no? Can I say that it is significant influence? No. More than 20% and less than 50% is called as significant influence. Anything above 50% is called as control. Very important. I want you to understand what is control and what is significant influence. Clear? Now, Any transaction I have with my holding or subsidiary company, is it bad? Is it bad? If I have a transaction with my holding company or if I have a transaction with my subsidiary company, is something bad? No, it is not bad if it is in the ordinary course of business. If it is in the ordinary course of business, or if they are forming arm's length principle, arm's length mechanism, that means the meaning of arm's length principle and arm's length mechanism is, if for a third party, if you are selling for 10 lakhs, then for related party also you are selling it for the same 10 lakhs, no problem at all. Are you able to understand? Transaction with related party itself, there is a problem. No. Transactions which is not in the ordinary course of business with a related party, or transactions which are not following the arm's length principles or arm's length mechanism, then only there is a problem. Are you able to understand? Sometimes in the related party transaction, we will say that ROM is very high. What is the meaning of ROM? ROM is the risk of material misstatement which is happening. Material means important, misstatement means mistake, and mistake can be intentional and unintentional. Intentional means fraud, unintentional means error. Hope you are clear with what is the ROM. ROM means the risk of mistake happening here is very high. For that they are giving 3 scenarios. The first one is A is holding in B, B is holding in C. C is holding in D, D is holding in E. E is again holding in A is holding in B, B is holding in E is holding in D, D is holding in A. What is happening here? Not able to understand anything. The complexity here is extremely high. If the complexity is extremely high, we can conclude that the risk of material misstatement is high. The second one is the same thing, all the holdings are selling to the subsidiary, all the subsidiaries are selling to the holding. Either holding, either subsidiary, there is a confusion. How can we find out all the holdings which are selling to subsidiary, all the subsidiaries selling to holding? Extremely confusing. How will you find the balance which one person is owing to the other person in this group entity? Extremely difficult, where information system itself will become ineffective. That is the second point. The risk of material misstatement will be high if the complexity is very high, or information system itself becomes ineffective to find the account balances due from or to the entities under the group. Are you able to understand? The third one is, I already told you, if it is for no consideration or low consideration. No or low consideration, that means it is not following the arm's length principle, then the risk of material misstatement is high. We saw 3 scenarios where the risk of material misstatement is high. The first scenario was the complexity is high. The complexity is so high that the information system is getting confused and it's unable to find the balances due or from the other entities in the group. And the third one was, it is not in the ordinary course of business. That means it is for no consideration or low consideration than to the third parties. So in that case, we can conclude that the risk of material misstatement is high. Are you able to understand? So now, the auditor, when he goes for audit, he has to ask the management about all the related party transactions, because he knows that here risk of material misstatement might be high. Yes or no? So what are the questions that he will be asking the management? The auditor will inquire with the management with regard to how the management is identifying the related party and what are the changes from last year. Sir, last year you had 5 companies, each having 20% ownership on you. Is there any change this year? Last year, you were 100% holding for one subsidiary company. Did you sell any of those shares? Or anybody else have you invested? All of these questions you will be able to ask. In case they are saying, yes sir, last year 5 people were holding, they sold between themselves. Now it has become 2 only. Then you can ask them, was there anybody who was having significant influence on you, now are having control? What is the nature of the relationship that you are having with the related parties? Are they your holding company? Are they your subsidiary company? Are they your joint venture? Are they your associate company? Are they your post-subsidiary company? All of those questions, the nature of the relationship that you are having with the related parties, you will ask. But the most important thing is not the relationship, but if some transaction is happening between them. Chumma they can have a relationship and not have any transactions also. So the third point is, what are the transactions that you have entered with the related parties? Are you able to understand? So the auditor wants to know all the details about the related parties because the risk of material misstatement might be high at this area. So here he will be asking, who are your related parties? Director, if you are asking who are the related parties, management might not tell. So you will be asking them, any changes from the last year? I already know your related parties from the last year because I have the previous year audited financial statement. So from there I am going to ask you questions. Are there any changes from the last year? What is the nature of the relationship you have between them? And what are the transactions which you have entered with them? If you are going to ask these questions, are they going to answer one by one? Is the management, sir, I will please mail all the information to you. You go home and sleep, don't worry. Are they going to tell like that? No. You have to go on field and somehow find out who are the related parties, what is the transactions entered by them and all of that. So how are you going to find out the related party relationships? How will the auditor find out the related party relationships? He can see the income tax return which was filed. Yes, he can see the income tax return which was filed. He can see the shareholders register no nirka. He will be able to see the shareholders register. He will be able to see the investment schedule, all the investments which the company has made. Any contract with the key managerial person or TCWG, he will be able to see. He will be able to see the contracts, and then when he reads the contracts, he will know that this contract is not in the ordinary course of business. Then he will be able to question the organization as to why this contract is not in the ordinary course of business. Then he will understand that it is his own mother. That's why he is not able to get any consideration for this contract. Then he can see the internal audit report. Internal auditor is somebody who is inside the organization itself full time. So he will know in and out of the organization. So all these points, to remember these points, what is the mnemonic? Short. Can you please tell me what is short lipstick? SH together. Shareholders register. O. Lakshmi Priya. O. Not in ordinary course. R. Any documents which is submitted to the regulatory authorities, say SEBI, they have submitted some documents, then that also you can ask. T. Income tax returns which are filed. L. Life insurance policies. Normally these life insurance policies will be taken for the family as a whole. Yes or no? Then premium will reduce. So life insurance policy pata, yaro wife, yaro father, yaro mother, all of those details they will be able to get. I. Investments made. With these investments, we will be able to find the subsidiary companies, relationship with the subsidiary companies, whether there is control, whether there is significant influence, and all of those things. P. Professional advice. S. S. Which one? SSS. Specific invoices and correspondence from entities. Professional advice was only P. SEBI. Any documents which are filed with, specifically they are saying SEBI. T. Common TCWG, if it is there, then we will be able to find. I. Internal audit function, what report they have given, if we are able to see that, we will be able to know. C. Any conflict of interest report. Yes, there will be a conflict of interest report. If we are able to see that, then we will be able to get an understanding. So directly if we ask the management, they will not give us all the kind of information. For that, the auditor itself has to go and dive deep. Then only they will be able to find how and all they can find the short lipstick. Are you able to understand? This is Essay 550. From the top, Essay 550 talks about auditor's responsibility regarding related party relationships and related party transactions. So who are these related parties? Your father, mother, brother, sister, brother-in-law, father-in-law, all of these are related party in family members. But the standard is saying the first one as per AFRF, that is accounting standard. If it is not given under AFRF, then please take the person or entity who has direct or indirect control or significant influence over the reporting entity. Reporting entity is your client. That means all your holding companies become your related party. Another entity over which the reporting entity has control or significant influence directly or indirectly. That means all the subsidiary companies, they also become your related party. Another entity that is under the common control of the reporting entity, having common control ownership or common KMD, or even husband there, wife here, owners who are close family members, then also these two companies become related parties. Control means what? Significant influence means what? Control means in terms of percentage more than 50%. That means they have the power to govern the financial policy and the operational policy, and they will be in a position to even get benefits because of these activities. If they are able to get the benefits, that means what? The tax to the government will automatically reduce. So that means the risk of material misstatement there is automatically high because it will not be there in the ordinary course of business. Now coming to significant influence, this can be by way of share of ownership, share of statute, or by way of agreement. They can also participate in the financial and operating activities, but they do not have the power to control. Are you able to understand? In percentage terms, this is more than 20%, but something less than 50%. That is important. 20% order, don't stop. You also have to mention less than 50%. Now, any transaction with related parties, is that a problem? No. If it is the ordinary course of business, if they are following arm's length mechanism, arm's length principle, that means whatever I am paying to the third party, that only I am paying to you. Whatever I am receiving from the third party, that only I am receiving from you. So any transaction with the related parties is same as whatever the transactions is happening with the third party. If that is the case, then there is no risk. So when is the risk of material misstatement high? When the transactions are complex in nature, so that even the information system is struggling to find the balance which is due or from the related parties. Next, if it is not in the ordinary course of business, automatically the risk of material misstatement will become very high. So here we know that the risk of material misstatement is high, so the auditor will take the mic and go to the management and ask a few questions. What are the few questions that they will be asking? From the last year, what are the changes in the transactions that are happening this year? What are the changes in the holding and subsidiary companies which are happening in this year? If there are any changes, what is the nature of relationship? Are they your holding? Are they your subsidiary? Are they your co-subsidiary? Are they your joint venture? All of these details you should be able to ask them. Next, the most important thing is having a relationship itself is not a problem, but having a transaction with them, that only is the problem. So that is the third question you will be asking the management. But you even ask 30 questions. You think they are going to answer? No, the auditor has to get into the field, dive deep into the subject and get all the information. So he himself will go and see the IT return, see the LIC policy, see the shareholders register, see whatever is given to the SEBI, see whatever is given to other regulatory authorities, see whatever is there in the conflict of interest summary. All of these things we have a mnemonic called as short lipstick. Don't forget. Are you able to understand? This is Essay 550, related party transactions. Related parties is the name of the standard. Clear? Can we go to the next standard? Next standard is an easy standard. We shall do essay. Okay. Before we go to the next standard, I'll just show you. So I have this open. So this is Tata Steel's related party transactions. If you see this, you will never forget it. What are they saying? They are saying it is a subsidiary. They are saying it is associate. They are saying it is a joint venture. And all the transactions with them are also listed. Purchase, sale, services received, securitization, dividend received, sale of investment. All of these things they should be able to give. Are you able to understand? Once you see this, it will never go out of your mind. This is a real audit report of Tata Steel. Clear? Now going to SA 505. What is SA 505? How is the speed, guys? Is it okay? Speed is fine. SA 505 is external confirmation. Where did we see this word before? We saw this word in error, which is E stands for external confirmation, inspection, inquiry, re-performance, observation, analytical procedures and recalculations. These are your audit procedures. So in that, the first E is called as external confirmation. External confirmation means what? External confirmation means the auditor is not believing the company. They want a confirmation from somebody outside the company. Are you able to understand? And this confirmation must always be in written format. We saw in audit evidence chapter, remember, anything in documentary format is more reliable than oral or vision and all of those things. So here external confirmation means it is a direct written response to the auditor from the third party. Remember here, definitely you have to write only like this, direct written response from whom to whom? From the third party to the auditor. Are you able to understand? It is very important, this definition, because they might test saying auditor sent someone else or auditor asked the management itself to get the external confirmation and keep. The management got it properly only and management gave it off to the auditor. Is this a proper way of doing external confirmation? They will confuse like this. Because in your head you will be thinking external confirmation means it is a written response from third party. No. Direct written response from a third party to the auditor. Directly to the auditor he has to get. And in which form it can be? It can be in paper form, electronic form or any other medium. So for what and all they will be using this external confirmation, uses of this external confirmation. Can you please turn on the AC or reduce temperature, please? What are the uses of external confirmation? Now the auditor saw the rental agreement. The rental agreement was 50,000. They are paying in P&L 50,000. He saw the agreement. In agreement also it was written as 50,000. Now the auditor is getting a doubt whether this 50,000 is routed to one of his relatives only. So what he said, you please in your letterhead you send saying I am not a relative and they are paying me 50,000 rupees and all of these things. Are you able to understand? So for confirming the terms of the agreement, I can use external confirmation. For confirming terms of a contract means month on month I am going to sell so many kgs of sugar to him. If there is a contract like that, then for that also I can get an external confirmation from the person who is buying from me. For any kind of transaction, for any amount due to the lenders, that also they can have an external confirmation. Say I am having a fixed asset. I want loan. I don't have any other asset. I have to give this fixed asset to the bank as security, as collateral, and I will be getting the loan. Fixed assets, in whose balance sheet it will be seen as? The fixed assets. The rights and obligations of this fixed assets is actually now with the bank, but still it will be shown in my balance sheet. So I have a doubt whether this fixed asset is really there or not, because if I ask for physical verification, it is not available. So I want to ask the bank, really, are you having this fixed asset as collateral? For that also I can ask for external confirmation. Are you able to understand? There are different types as to how I can ask for external confirmation. What I can do is, say I want to confirm a specific debtor. Okay, debtor means the person who has to pay the money to the company, pay the money to the client. Say he has to pay 10 lakh rupees for the last 10 years. I am not believing this. Simply he made this sale. Simply he is showing this 10 lakhs as if it is a receivable for the last 10 years. I am not believing. So I want to ask this debtor whether he really owes the company 10 lakhs. So what are the ways I can ask this debtor? First thing I can ask is, I will send a mail saying, sir, you owe this company 10 lakhs, please respond if it is yes or no. That is called as positive confirmation request. What is negative confirmation request? Negative confirmation request is, sir, I saw that you owe this company 10 lakhs, respond only if you disagree. If this is not true, please respond. That means you are saying Maunam means Samadam. Maunam Samadam ni solra appadina. Only if there is a problem with my statement, you respond. So that is called as negative confirmation request. The third one is called as non-response. Most of the time, if you just send a mail and all, what will happen? Many people will not even open their mail. For me and all, if you see some 2,100 emails will be there at all points of time. So if they are asking some response to me over mail, I will not even open the mail, then only I can respond. So non-response means the failure to respond. That is a request returned undelivered. That means sometimes, have you noticed when you are sending a mail and if the mail is not going to the other person, it will bounce back to you itself. Mailer daemon. Have you seen this? There is this person called mailer daemon. If this person comes to your mailbox, that means the request has returned undelivered. It has not gone to that person. It has come back to you. Are you able to understand? Next is exception. When you are sending the mail itself, say for 10 lakhs you are asking the debtor might reply back to you, sir, you are correct, 10 lakhs I got, I was supposed to pay 10 lakhs, but that day itself I have actually paid 1 lakh. The remaining 9 lakhs is only still pending. Please don't mistake, sir. I will pay in the next 2-3 years. Give me some more time. I will definitely pay. Appdin solrana. That means this 1 lakh is the difference which you are expecting and what he is actually responding. That is called as exception. Are you able to understand? There are different ways in which they will be responding, in which you will be asking for the response. One is positive confirmation, negative confirmation. Non-response means our responde pannala. Exception means there is a difference between what you are expecting and what he has responded. Now coming to this negative confirmation request. I told you negative confirmation request means you are sending some figure and asking him to respond only if there is a mistake in whatever I send. That means Maunam Samadam appadinu you are saying. When can you use this negative confirmation request? If people like me, I will never respond. That means, am I accepting for whatever you are sending me? It is not like that. You cannot tell like that. So there are cases where you can use this negative confirmation response. Uses of the negative confirmation. When can you use this Maunam Samadam technique? When I know that this person will definitely reply. He is a person who opens his mailbox every single day. He has OCD. I know that this person cannot sleep without replying to all his mails for the day. If I know compulsorily that this person will not disregard my mail, if this person will definitely respond to my mail, then I will use this negative confirmation request. Or it's okay for me even if he does not respond. That means my risk of material misstatement in this area is extremely low. So I can take a chance by giving a negative confirmation request. The account balances and class of transactions, that is ABC. Account balances, class of transaction. What is the meaning of account balance? What is the meaning of class of transaction? Account balances means the balances in your balance sheet. Class of transactions means the transactions which are hitting your profit and loss account. So ABC is account balances and class of transactions. It is of small value and it is homogeneous in nature. Homogeneous, na everything is similar to each other. When it is similar to each other, this person I can leave off by way of negative confirmation. Somewhere else I will get a concrete confirmation. Are you able to understand? And I know that here I will have a low exception rate. I know if he is responding, the difference is not going to be so much. That means when I am very sure of the figure, when I don't have any doubts about the figure, only then I will go for negative confirmation itself. Are you able to understand? Negative confirmation means maunam samadam. He will be responding only if he disagrees with the information that you have provided. When can the auditor use negative confirmation? When he knows that this person will not disregard the mail. He will definitely reply. Definitely replying you can't write in your exam. The key word is will not disregard. Are you able to understand? For you to understand, I am saying definitely reply. When the risk of material misstatement is extremely low. When the account balance class of transactions are small and similar to each other. They are homogeneous. And when there is a low exception rate, he can go for negative confirmation. Now, what is the procedure that the auditor has to follow for going in for external confirmation? First of all, he has to find out what information he wants it to be confirmed. Next, to which person he wants this information to be confirmed from. Select the party. First is select the information. Second is select the party. Third is, you are drafting the mail. Sir, the debtor balance which is outstanding for the last 10 years, like that you are drafting one mail. You are designing the request. You are designing the request. After designing the request, will you keep it with yourself? You have to send the request. Sending the request is the fourth. Once if you send the request, if he is not responding, you will also be sending follow-up request. Are you able to understand? So all of these four procedures auditor has to do if he is following the external confirmation. The first one is he will determine the information for which he wants a confirmation. He will determine the party from whom he wants the confirmation. He will be designing the request, that is he will be typing the email. Next he has to send the email. He can even send follow-up emails. So these are the procedures which the auditor has to follow for SA 505. Once he gets the results, now they have responded. He has gotten the results. Now what should the auditor do with the results he has got? He has to check whether the results are reliable or not. Are they really from independent sources? Are they really reliable? All of those things he has to see. If they are not reliable, then he has to go for further audit evidences. He will be doing further audit procedures. If he can confirm that this is not reliable 100%, not reliable, waste of asking them, waste of my time, waste of this designing request, sending follower, everything is waste. Not even 1% I can rely on this. That means you have to evaluate the implications on the risk of material misstatement. Evaluate the implications on the risk of material misstatement. Whether risk of material misstatement is high in this area, whether risk of material misstatement is low in this area. If it is high, what to do? You can do further audit procedures, go for any other procedure. All of these things you will be able to see. Are you able to understand? Now, can you directly go to any debtor and ask for any kind of confirmation? Can you keep disturbing these debtors like anything? Are you thinking I am a fool, the management? If you want anything, you are supposed to ask me. Who are you to send a mail to him? He is my client. For the last 10 years, I have this relationship with him. With just one mail, you have spoiled my relationship. I know he owes me 10 lakhs. How dare you go and ask him for that 10 lakhs money? Ego is hurt for the management. So first, you have to go and ask permission to the management. Sir, your debtor is outstanding for so many years. I want to know whether they are really outstanding. I am able to see that you have made this sale some 10 years back. But still I want to get an external confirmation. Can I please have his email ID? Can I please have his phone number? Like that you are supposed to ask the management. Nee management kita poi keta odane, will he say, okay sir, take the debtor's phone number, email ID. Do you want address also? You can go in person and take all the information. Is he going to tell like that? Management is not going to allow you to get the external confirmation. At that time, what should you do? You have to first see whether the reason they are giving is reasonable or not. Say they are saying, sir, there is a legal dispute which is happening between him and me. இப்போ போய் நீங்கள் அவன்கிட்ட கேட்டிங்கன்னா அது ரொம்ப மோசமாக இருக்கும். There is really a legal dispute. See here, sir, case papers, everything are there. So here it is reasonable. Yes or no? If it is reasonable, please go for alternate audit procedures, and through this alternate audit procedures you can obtain your sufficient and appropriate audit evidence. In the case where you are not able to perform your alternate audit procedures, then you have to use your weapon. Use your weapon SA 705, but before using your weapon, you please communicate to the top level people that this has happened. Sir, I was not allowed to go and get my external confirmation. I tried to do alternate audit procedures, but still I was not able to get any kind of information. That's why I am going for modification of my audit report. I have to qualify, otherwise it's not in my hand. Like that, you please communicate to those charged with governance. That is SA 260. SA 260 is communication with those charged with governance. After communicating, then you go for modifications. Are you able to understand? Or if it is not reasonable itself, the justification he is saying is, என்னால் முடியாதுன்னா முடியாது, லீகல் டிஸ்பியூட்லாம் ஒன்றும் கிடையாது, சும்மா சொன்னேன், அப்போ கேஸ் பேப்பர்லாம் ஒன்றுமே கிடையாது. முடியாது மீன்ஸ் முடியாது. You came to do my audit, you asked me information, don't disturb my clients. Like that, அவன் ஓவராக பேசும். That means what you have to do? Again modifications, but before the modifications, please put in a word to the people who are charged with governance. Those charged with governance are the people who govern the organization, who set the direction for the organization. They are all top level people. They will not be involved in the day-to-day operations and all of those things. Alright, so here what did we see? We started off with SA 505 external confirmation. SA 505 external confirmation means it is a direct written response from a third party to the auditor. It can be in paper form, electronic form, or any other medium, no problem. Then we saw where and all we can use these external confirmation. Uses can be for confirming for terms of agreement, confirming for the contract, any transaction which has happened between two parties, you can get an external confirmation. Amount due to lenders, all of these things you can get a external confirmation. Now what are the types we saw? A positive response. Positive means they will be responding whether they agree or whether they disagree. That is called a positive response. Negative response means maunam samadam. Only if he disagrees, he has to respond. If he does not respond, the assumption is that he has told everything is okay, he has agreed. Non-response means failure to respond or request has returned undelivered. That means our side he is not responding at all. Exception means the difference as to what I was expecting and what he has told me. That is called as exception. Next we saw the procedure to do this external confirmation. The first one is the information to be requested has to be first selected. Then from whom, the party from which we have to get the information, that has to be selected. Then we have to type, design the request, then send the request, also send follow-up request. Now we got the results from them. Now I am having the doubt about whether I can really rely on his answer or not. So I have doubts about the reliability. If I am having doubts about reliability, I have to go for further audit procedure. If I know 100% he is a fraud person, 100% I know this is not reliable, then I have to evaluate the implications on the risk of material misstatement. Now if I have to go and get the confirmation from the external party, can I directly go and get the confirmation? No, I need the approval of the management. So the management has to give me the mail address, management has to give me the phone number and tell me, okay sir, you can continue. I will also put in a word. But will they allow? No, they are going to give some reasons. You will hear that reasons and you will use your professional judgment to find out whether that reason is reasonable or not. That means whether it is properly justifiable or not. If it is properly justifiable, you will be saying, okay sir, எனக்கு A row இருக்கு, E ஒன்னு போனாலும் பரவாயில்லை, மத்தத வெச்சு I will do alternate audit procedures. In alternate audit procedures also, I am not able to get anything. Now then I will use my weapon, I will modify the report SA 705, but most importantly before that I have to communicate to those charged with governance, that is SA 260. If I am feeling that whatever reason he is giving is not reasonable, or he is not giving any kind of reasons, he is just asking me to get out of the office, in that case also I will be using my weapon, but before that I will have to communicate to those charged with governance SA 260. There are a few cases where I can use that negative confirmation. I missed that. When the risk of misstatement is low, when I know that he will not disregard my request, that means he will compulsorily respond to my request for small similar transactions in the ABC. That means small homogeneous transactions in the account balance class of transaction. Nothing but balance sheet and profit and loss. But if you write account balance and class of transaction, examiner will feel like, okay, she has studied and come. Are you able to understand? Then if the exception rate is low, that means the difference between what I am expecting and what he has given, that is also low, then in those cases I can use external confirmation. Are you able to understand? This is SA 505 external confirmation, please. Now let's start with audit of cooperative society. Who is a cooperative society? What is a cooperative society? What do they all do together? Cooperative society means autonomous association of person. Autonomous association of person. Autonomous means independently they themselves are coming together, forming a group, and they will work for the benefit of that group. They will be united voluntarily and they will have a common economic benefit, common social benefit, and they will have a common cultural need. So for these three things they can come together and they can form a cooperative society. When they are forming a cooperative society, say all the farmers are coming together and they are forming a cooperative society, their main aim will be to eliminate all the middlemen. That means the produce directly they will be selling in the market. That means they will be getting more profit when they are eliminating the middlemen. Are you able to understand? So I have a question for you. Is a cooperative society non-profit organization? Are they not working for profit? The answer is no. They are also a business organization only. Business organization with the motive that the people who have come together, they will be benefited at most. Are you able to understand? So that all the middlemen will be eliminated. Any exploitation from the outside force, if it is there, they will be eliminated because they themselves are forming a group for themselves. Are you able to understand? Example for cooperative society is Amul, Co-optex. Have you seen Co-optex? Anybody bought from Co-optex? They sell textiles, bed sheets, clothes and all of those things. Avin, all of these things are examples of cooperative society. Cooperative societies are governed by acts. What are the acts governing the cooperative society? We have the Cooperative Societies Act 1912. That is the main act where all the cooperative societies will come under this act. The next one is the Multi-State Cooperative Societies Act that is formed in 2002. The next is the State Acts. That means each and every state can have their own acts for this cooperative society. Multi-state means any cooperative society which is operating from more than one state will automatically come under the Multi-State Cooperative Society Act 2002. If they are operating only in one state, so they should need to follow only the Cooperative Societies Act 1912 and also the state laws of that respective state. Are you able to understand these three laws? There are three laws for any cooperative society. If they are only in one state, then the Cooperative Societies Act of 1912. If they are operating from more than one state, then the Multi-State Cooperative Societies Act 2002, and each and every state can have their own laws. So whichever state the cooperative society is operating from, that state law also they have to follow. The first one, we will finish off the Cooperative Societies Act 1912 laws. What and all they are saying. So first, before going into that, I want to talk about this big person called as registrar. Who is this registrar? This registrar has so much powers that he himself can conduct the audit of the cooperative society. Can you think of it that the registrar can conduct the audit for a company? The registrar of companies registration da pannuvom. How can they conduct the audit? Only a chartered accountant can conduct the audit. But this registrar of the cooperative society has so much power that they themselves can come and conduct the audit itself. Or they can appoint any other person to conduct the audit. Are you able to understand? Now we are going to see who is this any other person. This any other person can be a chartered accountant, can be just a government diploma in cooperative accounts, or he was in the audit department in the cooperative government. That means in the government's cooperative department, he was in the audit department. Are you able to understand? So if he is a chartered accountant, or if he is a person who is having government diploma in cooperative accounts, or if he is in the cooperative department of the government and he is in the audit sector of that department. Are you able to understand? If he is either of these three, then he becomes this any person. The registrar will be appointing him and he will be conducting the audit. I told you, whoever appoints, to them only the report should go to. For company, who appoints? Company, who appoints the auditor? The shareholders appoints the auditor. In the report, in the contents, addressee, to whom are you addressing? To the members. So here, who is appointing? The registrar is appointing. So the report has to be to the registrar only. Report to registrar. Are you able to understand? In a firm, who is appointing the auditor? The partners are appointing the auditor. So the report goes to the partners only. The government company, who is appointing the auditor? Comptroller and Auditor General is appointing the auditor. So the report has to go to the Comptroller and Auditor General only. Here same way, the registrar is appointing the auditor. That is why the report has to go to the registrar only. So fees of this auditor, who has to pay? Registrar only is appointing. So who has to pay the fees? Registrar will not be paying at all. In company also, shareholders are appointing, but who is paying? The company is paying. So same way here also, the cooperative society will be paying as per the registrar statutory scale. They have that scale. As per that scale, they will be paying the fees to the auditor who is getting appointed. Are you able to understand? Now, what about the records, books of accounts and all of those things which has to be maintained by the cooperative society? The law is saying that it is at the discretion of the state government. Now we are in the third law. Each state will keep changing their own requirements. In your study material, they have spoken specifically about the Maharashtra state government because it is a little different. So we will see what they are saying in the Maharashtra state government. They are saying you have to follow and keep receipts and expenditure account. You have to follow and keep purchases and sales separately. Next you keep assets and liabilities separately. These three books mandatory in Maharashtra state government they are saying. Because in your study material they have specifically given Maharashtra state government, we will study that. Are you able to understand? Next, is there any restriction on shareholding? Yes, there is a restriction on shareholding. Remember, this act was made in 1912. So the restriction they have given is 20% or up to rupees 1000. So 1000 rupees kumela, nobody can hold the shares in a cooperative society. Are you able to understand? This is applicable when the liabilities of the members are limited in the cooperative society. Restriction on loans. Is there any restriction on loans? The cooperative society, for whom is it formed? For whom is the cooperative society formed? For the members. The members are coming together voluntarily and they are forming an autonomous body, and that is why it is a cooperative society. So loan, if it is formed for the cooperative society, can you give the loan to anybody and everybody? No. The loan has to be given only to the members of that cooperative society. But there is an exception to this. They can give to any other registered cooperative society also if they are having a special sanction from the registrar. Are you able to understand? Normally, the loans should be ideally given to the members only, because the members only are coming together and forming the cooperative society and all. But in special circumstances, if they are having a special sanction from the registrar, they can give to any other cooperative society provided that cooperative society is registered. Are you able to understand? Now, coming to the borrowing part. Is there any restriction on borrowing? Can I say that cooperative society should borrow only from the members? No, then how are the members benefited? So, there are no restriction on the borrowings. You can borrow from anybody, but every cooperative society will have bylaws. Please check the bylaws before you go for this borrowing. Are you able to understand, guys? If you are giving the loan, you want to favor the members only. So, you will get from everybody else and you will give the members only. If you are having a special sanction from the registrar, you can support other registered cooperative societies also. Are you able to understand, guys? Yes, the cooperative societies will make investments of funds. Where and all they can make the investments? They can make the investments in a central or state cooperative bank, or any securities under the Indian Trust Act, or any shares, securities, bonds, debentures of any other society who is having a limited liability, or a cooperative bank, or any other monies as permitted by the central government or the state government. They can invest in all these places. Let me repeat. In a central or state cooperative bank, securities under the Indian Trust Act, any shares, securities, bonds, debentures of any other society who is having a limited liability, any other cooperative bank, or any other monies as permitted by the central government or state government. That means they can invest in all these places. Are you able to understand? Now you have the profit of the cooperative society. Compulsorily from this profit, reserve fund, it has to go. It has to be a appropriation from the profit. This reserve fund is a appropriation from the profit. What is the meaning of appropriation and what is the meaning of charge on profits? Appropriation means profit if profit is there, you will be appropriating some money from the profit. If it is a charge, that means even whether profit is there or not, you definitely have to make the charge. Salaries, wages, all of these things are charges on profit. Rent, charges on profit. But this reserve fund transfer is an appropriation from the profit. That means only if there is a profit, you have to make this reserve fund transfer. For what can you use this reserve fund? What are the uses of this reserve fund? This reserve fund can be used like a working capital itself. Working capital means for day-to-day operations of the cooperative society. That is for the business of the cooperative society. That is called as working capital. So for the working capital itself, they can use the reserve fund money. Or any other way where they want to promote the objective. Every cooperative society will have an objective. What will be the objective of Amul? Amul giving dairy products. To give proper quality dairy products, not harming the dairy animals, giving the animals also a good life, humans also a good life. That will be the objective of Amul. Yes or no? So if it is promoting the objective, then they can use the money from the reserve fund. Here we spoke about few investments. Oh, I did not write. Here we spoke about few investments. Securities under Indian Trust Act, all of these things, investment, central or state cooperative bank. And the investment also, this reserve fund can be used. So basically, the reserve fund can be used in 3 places: to make any other investments, for any purpose, for promoting the objective, and for the working capital. Working capital means it is promoting the objective only, for day-to-day operations only. So for these 3 purposes, the reserve fund can be used. Are you able to understand? Now we have profit after transfer to reserve fund. What should I do with this profit? Is this fully for me? No. 100% you have to follow this, that the 10% of the profit after transfer to reserve fund has to be used for charitable persons. It has to be used for charitable persons. This 10% will be calculated only after transferring to the reserve fund. Are you able to understand? Clear till here? Yes? Shall I go to the special features? Now these are the general features. Now going to the special features. Let's just, for clarity purpose, I shall show you in the PDF also. We saw qualification of auditor. 3 people can be there: CA, government diploma, or person who is in the audit department of the government cooperative societies. All those things we saw. Appointment by the registrar, so report to the registrar. Records, books and accounts. Maharashtra, what they are specifically telling. Those 3 things: receipts and expenditure, sales and purchase, assets and liabilities. Restriction on shareholding, 20% up to ₹1,000. Remember that this act was done in 1912. That's why it is just ₹1,000. Restriction on loans, it cannot make any loan. That means it cannot give any loans to anybody else other than the members of the cooperative society, or with the special sanction of the registrar, he can give to any other society provided that society is a registered society. Restriction on borrowings, they can borrow money from any person provided the bylaws. You have to check the bylaws whether they are allowing that. Investment of funds, they can invest in all these places. Appropriation of profit, a percentage of profit has to be transferred to the reserve fund, and after that is transferred, that profit, the 10% has to be transferred for charitable purposes. Are you able to understand? And education fund also. Some states can say that annually you have to contribute to the education fund, and this will be a charge on profits and not an appropriation. That means this education fund transfer, if the state law is saying charge on profit, means whether or not you have profit, you have to transfer some funds to the education fund. If the state law is saying, you have to follow. If they are not saying anything, no need to follow. Next, coming to the special features of cooperative audit. First one is overdue debt. Overdue debt means what? The debt which is outstanding for a long period of time. The auditor has to make sure that this overdue debt has been split between 6 months to 5 years and more than 5 years. 6 months to 5 years and more than 5 years. They also have to comment whether this is affecting the day-to-day operations of the cooperative society, whether it is affecting the working capital, and what is the mode of recovery that they are having to get this money back, because for so many years it is being outstanding. All of these things auditor has to check with regard to examination of overdue debt. If there is a debt, then definitely there will be a interest on that debt. That is the second one. Overdue interest, you please take interest which is outstanding. and you add all the interest which is accrued and you subtract the overdue interest. Overdue means it might not come to you itself. Yes or no? If it is overdue for 10 years, it might not come to you itself. Then why are you still showing that interest? So you please subtract the interest overdue from the interest. Are you able to understand? Next comes certification of bad debts. Have you heard of this term? Certification of bad debts. Normally we don't follow the certification of bad debts. But in this Maharashtra state government, again in your study materials specifically they have used this state law. So we are seeing the Maharashtra state law with regard to certification of bad debts. They are saying bad debts can be written off only if it is certified by the auditor. Basically, auditors should check everything and be able to sign and tell, yes, sir, this debtor is waste, this debtor is not going to give the money forever. Only then it will go as bad debts. So, before you classify something as bad debts, you have to get it certified by an auditor. The Maharashtra state government is saying. Other states, they don't have any such law. At that time, can you directly keep increasing your bad debts? No. In that case, the managing committee, which is inside the society itself, they will be authorizing for the bad debts. Are you able to understand? So somebody has to certify for your bad debts, only then it will actually become a bad debt. Valuation of assets and liabilities, same as your normal valuation. Fixed assets, with your cost you will add all your acquisition, subtract all your depreciation. Current assets, inventory you will see cost or NRV, whichever is lower. Liabilities, whatever is known you will bring it into account, and whatever it is unknown you will take it as contingent liability and put it in the notes to accounts. Cooperative principles, the auditor has to say how far the objectives are achieved. Are you able to understand how much the members are getting benefited because of this cooperative society? Means only that you don't want exploitation from outside, so you all came together and formed an autonomous organization. Are you really working for the objectives? All of those things they have to see. Provisions of the act and rules, the auditor has to check whether they are following all these acts, if they are having more than 2 states, whether they are following that act, all of these things they have to check. This is an important point. Members register and passbook. What is a passbook? Passbook. You all have gone to the bank and get your passbook updated. In those days, we have to get the passbook updated. Nowadays, just a click of a button, we can get the entire bank statement even on our phone. Because this is 1912 Act, they are talking about passbook and all. What are they saying? Members, they will be getting benefits. I want to know exactly what money they are receiving. So you can see the statement of the members also, if they have received some loan from the cooperative society, if they are paying interest to the cooperative, all the details will be there in the passbook. So you have access to the passbook as an auditor of that cooperative society, and you can check the members' passbook also. Are you able to understand? Next is special report to the registrar. When the auditor is going for audit and he is finding that there is personal profiteering, that means only some people in that are getting benefited. There are 1,000 members, but only 10 people are getting benefited. Only the managing committee is getting benefited because of this whole society. That is wrong, no? You all came together because you all want to get benefited. So if there is personal profiteering, or if there is some kind of a fraud, or if there is a mismanagement which is happening in the society, or if there are disproportionate advances given. Disproportionate advances means what? Normally, if you are giving an advance, you should get a security. If you are getting a security for 10 lakhs, how much advance will you be giving? Advance. More than 10 lakhs equal to 10 lakhs, less than 10 lakhs. Something less than 10 lakhs, you will be giving around 8 lakhs money. But for security of 10 lakhs, he has given 50 lakhs. That is called as disproportionate advances with regard to security. With no security or low security, they have given some kind of advances. In these situations, the auditor can conclude that it is detrimental to the interest of the society as a whole. There is a serious irregularity at this point. அப்படின்னு சொல்லி, he will make a special report, and this special report will directly be given to the registrar. So in what cases this special report will be made? If there is a personal profiteering, if there is a fraud, if there is a mismanagement, if there are disproportionate advances, that means they have not collected any security or the value of the security is too low when compared to the advances which is made. In that case, there is a serious irregularity which is happening, and they can conclude that this is detrimental to the interest of the society at large. In this case, they will be making a special report and they will be giving it to the registrar. The next one is audit classification, extremely important. So every society auditor has to award a class to the society. When the auditor is awarding a class to the society, auditor has to be extremely careful, because if the society is not satisfied with that class, it is possible for them to go and appeal to the registrar. They can tell, on what basis he has given me this low class. I am actually a high class society. See all my profits, see all my appropriations, see all my charges on the profits. I am a high class, but how dare he gives it? Then ego of the auditor will get hurt. That is why auditor has to be extra careful when he is awarding the class for the society. Are you able to understand? Next is draft audit report. The auditor, once he prepares the audit report, he should ask the secretary of that society to call for a managing committee meeting. When the managing committee, everyone comes, then they will discuss the draft audit report. See here, there was personal profiteering. So for that, I had to make a special audit report, and this audit report I have to submit to the registrar. Like that, first you have to discuss with the managing committee. And for discussion with the managing committee, you have to go to the secretary of the society and ask him to convene the meeting with the managing committee. This report will never be finalized without the discussion with the managing committee. Only after finalization it can be circulated. Are you able to understand? This is the first act, that is Cooperative Societies Act 1912. The next is Multi-State Cooperative Societies Act 2002. All of you okay? All right? Too much information? Overload already? Yes? Yes. We'll finish the Multi-State Cooperative Society Act, then go for short commercial break. Okay, ma? What is given in the Multi-State Cooperative Societies Act 2002? Here, only a chartered accountant can conduct the audit of the Multi-State Cooperative Society Act. In the previous one, we saw that the cooperative society was operating only in a single state. At that time, no problem. Whoever wants, do the audit, finish it. But here it is very important. It is a big cooperative society. It is operating from multiple states. Amul initially started off as a single state cooperative society. They started in where? Gujarat. They started in Gujarat, but now they are everywhere. Now they have become multi-state cooperative societies. Are you able to understand? So here, if it is a multi-state cooperative society, who can become the auditor? Only a chartered accountant within the meaning of the Chartered Accountants Act in 1949. That means he should have finished inter, he should have finished final, he should have finished GFCS, ITT, all of those things. After he finishes, only then he becomes a CA. Are you able to understand? Now here, who are the people who are not eligible for appointment for auditor as a multi-state cooperative society act? Who are the people? Any body corporate or any officer or employee of that society itself, or person who is a member or who is in the employment of this officer or employee, or a person who has given a loan to the multi-state cooperative society or has signed any guarantee exceeding rupees 1000. If he has given a loan, then he is no more independent. So that person cannot be an auditor. Are you able to understand? Say I became the auditor. After I became the auditor, I gave a loan of 2000 rupees. Automatically, I am deemed to vacate my office. Automatically, I am deemed to vacate my office because disqualification is coming to me. Are you able to understand? So, coming to appointment, the first auditor will be appointed by the board within 1 month of its forming. The subsequent auditor will be by the multi-state cooperative society itself at the AGM, and they will hold the office only for 1 year till the conclusion of the next AGM. Remember, important, till the conclusion of the next AGM they will hold the office. First auditor who will appoint? The board of directors will appoint within how many months? Within 1 month from the registration of the cooperative society, the first auditor has to be appointed. The subsequent auditor, subsequent means second, third, fourth, after the first auditor, whoever is appointed, they have to be appointed by the multi-state cooperative society itself at the annual general meeting, and they will hold the office only for 1 year till the conclusion of the next AGM. They will be holding the office. What are the powers, what are the duties of these auditors? They have access to all the books of accounts, vouchers, invoices and all other financial information. They can request the employee of the cooperative society to give any such information, and they can conduct an inquiry under section 73 subsection 2. What is this 73 subsection 2? Under 73 subsection 2, they are saying that whether loans and advances on the basis of security are properly secured. That means whatever loans and advances are there, whether they have a base called as security, and the security is proper value, all of those questions we can make an inquiry. Inquiry under 73 subsection 2. In your law you would have read, yes, you read that all the loans and advances on the basis of security are properly secured. Whether any transactions are merely represented by way of book entries only. Whether personal expenses have been charged to revenue account. That means, அவன் வீட்டுக்கு வாங்கின fridge இந்த accountல போட்டுருக்கான். So just to show more expenses, reduce the profit, reduce the tax, he is showing all the personal expenses in his office accounts, that is revenue accounts. Whether personal expenses have been charged to revenue account. Whether shares have been allotted for cash. If it is allotted for cash, whether such cash has been actually received. All of these things, he will be able to make an inquiry under 73 subsection 2. The powers and duties of the auditor starts off with having the access to the books of accounts, vouchers and all other financial information. He can ask the information from the employees of the society. He can ask for any other additional information also if it is required, and he has the power to make the inquiry under section 73 subsection 2. Inquiry under 73 subsection 2 are these 4 points. That is whether loans and advances are properly secured, whether entry is merely represented by way of book entry, whether personal expenses have been charged to revenue account, whether shares are allotted for cash, if the shares are allotted for cash, whether such cash is actually received by the society. All of these things, they have the powers to do. Are you able to understand? Now coming to contents of audit report. The financial statement should present a true and fair view as per the information and explanation given to the auditor. All of these things are same as your companies. They should represent true and fair view. For balance sheet at the end of the financial year, in the case of profit and loss account, how should it be? Whether he has obtained all the information and explanation he has to see. If he is unable to go to some branch, that means he is not able to visit that branch, then how is he getting the books of accounts from them? Or if that branch is audited by some other person and that report has been forwarded to him, how he is taking that report from that some other person? And the last point is the balance sheet and the profit and loss is only a translation of the books of accounts. Are you able to understand? The first one is whether he has obtained all information and explanation. The second one is if he has not visited the branch, whether the books of accounts have been sent to him. The third one is he has not visited the branch, the books of accounts also not sent to him. It is audited by some other person, so that audit report has to be sent to him. And the last point is whether balance sheet and profit and loss equal to the books of accounts only, whether they are translated from the books of accounts only. Are you able to understand? Yes. The last part is yes. The third and fourth one, in case if it is not there, that is if the audit report has not been forwarded to him and the balance sheet and profit and loss is not as per the books of accounts, then reasons for the same has to be there. Are you able to understand? Reasons mandatory. இதை வச்சு ஒரு question கேட்டிருக்கான். Reason வாங்கணும்னு you have to write. The question is framed that way. Are you able to understand? The third and fourth one, reasons are mandatory. Now coming to special audit. What is the meaning of special audit? Special audit means if the affairs are not as per sound business principles. That means you formed for some objective, but for some reason you are not following your business principles properly. You are causing an injury to your trade or causing an injury to the entire industry. Or it is endangering insolvency. Insolvency means no funds to pay off. No money is there with me, I have to close down. In these three cases, they will go for special audit. What is the meaning of they are not following sound business principles? Injury to industry or injury to trade. What is the meaning of that? So what happens in these cooperative societies? Just an example, I am not saying Amul is doing like that. When the cows are there, they will torture the cows like anything. அதாவது ஒரு மாடு அப்படின்னு சொல்லி ஸ்டார்ட் பண்ணா போயிட்டே இருக்கும். They will torture like anything. And the way to take the milk, there is proper methods to take the milk. Yes or no? You can put the pump, no problem. But if you are putting the pump, you have to put only for 20 minutes. You have to put only for half an hour. But if you keep the pump and go to eat, take bath and come 3 hours, and the cow pavam illaya. Like that, you can't torture the cows. So it is causing injury to the trade. It is not following sound business principles. If the auditor sees that the cows are being mistreated, if they are not following these business principles and all of those things, then they will do this special audit. Are you able to understand? This special audit has to be by an order. Who has to give the order? The central government, by order, direct for the special audit of this multi-state cooperative society ku mattumda special audit. Are you able to understand? The central government will direct only for the multi-state cooperative society. In 1912 Act, we saw that if there is a fraud, if there is a mismanagement, if there is personal profiteering, automatically the auditor will give a special report to the registrar. But here, the central government has to order for the special audit. For this purpose, he can ask the same auditor itself to do the audit, or he can appoint any other auditor only for this special audit purpose. Are you able to understand? So when can the central government, suddenly what ma'am, you are talking only about registrar, suddenly you are saying central government. So when can they order for central government? When can the central government come into picture? The central government can come into picture only if this cooperative society is held by state government or central government or both. If they are holding 51% or more, then only they can ask for this special audit itself. Now, okay, they have asked some other auditor in this case to do the special audit. Here, who will bear the expenses for that auditor? The multi-state cooperative Cooperative Society only will pay the fees for the auditor, but the amount of fees will be determined by the central government. Are you able to understand? Now, the report has been given to the government. The report was done by that auditor itself or another auditor itself, and the report has been given to the government. How much time the government will take to take action? Forever they will take. Yes or no? How government employees will work, you also know, I also know, everyone knows. So they have given a time limit specifically. Once the report is given to the central government, 4 months time. And the 4 months kulla, you take any action. If you are not taking action, I will take the action. I will circulate to all the members of the cooperative society. Are you able to understand? This is the end of the Multi-State Cooperative Societies Act 2002. Either a full chapter is not completed. After this we have one small part called as inquiry or inspection. Inquiry or inspection can be done by the central registrar, not by himself, if he is getting a request for that inquiry or inspection by these people. Who are these people? A federal cooperative to which a multi-state cooperative society is affiliated, or from any creditor, or at least 1/3 of the board members should go to the central registrar and ask him to conduct the inquiry or inspection, or at least 1/5 of the members of the multi-state cooperative society itself can go to the central registrar and ask them to conduct the inquiry or inspection. The central registrar, on a request from these 4 people, will hold an inquiry by himself, or he can direct any other person by order in writing to hold the inquiry into the constitution, working, financial condition, basically everything of the multi-state cooperative society, but there has to be an order for the same. Either it can be a general order or it can be a special order. Once it is done, directly can you barge into the office of the cooperative society? Please give some time, sir. 15 days notice is compulsorily required. Now this person who is doing this audit, the inquiry or the inspection, they have a few powers. For inquiry, they have access to books, accounts, documents, securities, cash, property and all of those things. He can ask any person to come to his office and get all the information. That is, summon any person at any place specified by the person who is conducting the audit. He can require the officer of the society to call for general meeting and discuss with everyone. For that general meeting, notice is again there. For that notice, not less than 7 days has to be there for that notice. For inspection means you are just going and seeing, yes or no. Inquiry, you are asking so many questions. So, toothpaste lo uppu irukka. You are going with a mic and asking. Inspection na, you are just seeing. For inspection, you will have access to books of accounts, paper, vouchers, security, stock, all of those things. Then, if there is something wrong, you can take those books of accounts and keep it with yourself. Because if you leave it there, they may change it tomorrow itself. So you can take custody of that books of accounts. He also can call for a general meeting, but there has to be a general or special order. Are you able to understand? Now, there is a timing. The central registrar, within a period of 3 months of the date of the receipt of the report, communicate the report. If it is not done, then it will be circulated directly to the members. Here we saw timing was 4 months. For inquiry or inspection, small work only. No, here it is big work. Special audit itself you are conducting. Audit will involve again inquiry, inspection, external confirmation, everything it will involve. Here only inspection, inquiry, so lesser number of months. Like that you remember. Alright, inspection, inquiry only 3 months. For special audit it is 4 months. Are you able to understand? So from the top, in this we saw audit of cooperative society. We started off by saying that cooperative society is an autonomous association of persons who are united voluntarily with a common economic, social and cultural needs. For that they can come together for their own benefits. Okay, one small thing I have missed here. What are the professional services that can be rendered by a chartered accountant? This is given in a dappa in your study material. I have just snipped it from your study material and given here. A chartered accountant can help not only for audit but also for accounts writing, also for installation of accounting system, also for internal audit, also for management accounting services, also for taxation. Basically, chartered accountant can do anything, etc. is also there. Enna vela vada pannalam chartered accountant. Are you able to understand? Remember, the word used here is chartered accountant, not auditor. What is the difference between CA and auditor? In India, we are using the terms interchangeably. Yes or no? If I go and tell I am a CA somewhere, they will ask, owning auditor. I am not an auditor of any company, I am a teacher. I am a chartered accountant, but I am not an auditor, I am a teacher. Auditor means you are appointed as the auditor of a specific company. A chartered accountant can be appointed as the auditor. A chartered accountant can also be a teacher. A chartered accountant can also be an internal auditor. A chartered accountant can also be a taxation consultant. A chartered accountant can also be just an employee of a company. A chartered accountant basically can be anything, but an auditor cannot be an internal auditor. An auditor cannot be a tax consultant because his independence will get affected. That is the difference between a chartered accountant and an auditor. Don't get confused here. Here they are saying professional services rendered by a chartered accountant. So I can render these services, all these guidance in accounts writing, internal audit, taxation, any service I can give. But if I am appointed as auditor of some company, I can't do these services. If I am appointed as auditor of this cooperative society, I can't do this. Clear guys, difference between CA and auditor? Yes? Now, we started off by saying there are three laws which are governing the Cooperative Societies Act 1912, Multi-State Cooperative Societies Act 2002, and each state might have separate state laws also. Next, we started off by saying the registrar here has so much powers that he himself can conduct the audit, or he will appoint any other person to conduct the audit. Who is that any other person? A chartered accountant can be that any other person, or a person having a government diploma in cooperative accounts, or a person who is in the cooperative department of the government and he has to be in the audit department of that. Then only he will be qualified to become the auditor of the cooperative society. Who is appointing? The registrar is appointing. So to whom the report will be given to? To the registrar only the report also will be given to. The fees, who will pay the fees? The cooperative society will be paying the fees as per the registered statutory scale. As per that, they will be paying, they will be making the fees to the auditor. Records, books of accounts pati, they have not told anything. They are saying as per the state laws you follow, but Maharashtra state law little different, so they are giving importance to Maharashtra state law. What is the Maharashtra state law saying? All the purchase and sales books, all the receipts and expenditure account, and assets and liabilities account. In the moon account you have to have. Appdin solli Maharashtra state government is saying. Is there any restriction on shareholding? 20% or up to 1,000 rupees only. Restriction on loan. Can I give loan to anybody and everybody? Loan only to the members of the society. They can give to any other society provided they are registered, but special sanction of the registrar is required. Is there any restriction on borrowing? No restriction on borrowing. I can borrow from anybody and I will give the loan only to my society members to benefit the society members. But if I am borrowing from everybody, I have to check something. What is that? I have to check the bylaws of the society. Where can I invest my funds? I can invest in a central or state cooperative bank. I can invest in securities under the Indian Trust Act. I can invest in shares, securities, bonds, debentures of any other society who is having a limited liability. I can invest in a cooperative bank or any other money as permitted by the central government or the state government. Now I have the profit of the cooperative society. From the profit I will be subtracting the reserve fund. That reserve fund can be used only for few purposes. What are those purposes? For promoting the objective, or for the working capital, or for making any of those investments which we saw above, it can be used. Now I have the profit after transferring to that reserve. With that profit, I will calculate 10% and it has to be transferred for charitable persons only. Some state laws will say that transfer to education fund is compulsory and that will be a charge or an appropriation. That will be a charge on profit and not an appropriation. If state law is not saying anything, no problem, no need to follow. Then we came to special features. Overdue debt. The auditor has to comment whether it is affecting the working capital itself. What is the mode of recovery of these overdue debt? And classification is important. How are they making the classification? From 6 months to 5 years and more than 5 years. Overdue debt automatically overdue interest will come. What are they saying? In the interest, you add the outstanding interest and you subtract the overdue interest because it is overdue for so many months. Why are you still showing as if you are supposed to receive this interest and all? You subtract this. Next is certification of bad debts. Never we've seen that bad debts has to be certified and all. But Maharashtra state government is saying that if you are classifying a debt as bad, it has to be certified by a auditor only. If the Maharashtra state government is not, if it is any other state, then it has to be certified by the managing committee of that society itself. Next is valuation of assets and liabilities. Same. We have to follow all the acts, provisions, cooperative societies principles and all of those things. Next one, the auditor has access to the member's passbook. In that member's passbook, he will be getting information whether any loans are given, whether loans are repaid, whether interest is given and all of the confirmation of balances. All these details he will be able to get from the member's passbook. Next comes the special report. When can he give a special report? In case of personal profiteering, mismanagement, fraud and disproportionate advances. That means security advance கொடுத்திருந்தாலோ இல்லனா ரொம்ப கம்மி securities வெச்சு advance கொடுத்தா, that is called as disproportionate advances. In these cases he can conclude that there is a serious irregularity and it is detrimental to the interest of the society as a whole. Next important thing, auditor has to be extremely careful when he is awarding a class for the society, because the society has an option to ask for appeal to the registrar saying he has awarded a wrong class to me. So when the auditor is awarding the class, he has to be extra careful. Now the report is prepared, everything is done. Can the auditor directly circulate to the members? No, he has to first call for a meeting with the managing committee. Can he directly call for a meeting with the managing committee? He should ask the secretary of the society to call for the meeting with the managing committee. Draft audit report they will be discussing there and then only it will get finalized. Next comes the audit of multi-state cooperative societies 2002. There we saw only a chartered accountant can be a auditor of the cooperative society. Who and all are not eligible if he is a body corporate or if he is an officer or employee of the multi-state cooperative society, or a person who is a member or an employment of that officer or employee of that multi-state cooperative society, or a person who has indebted more than 1,000 rupees, or a person who has given a guarantee more than 1,000 rupees. These people and all cannot be appointed. The first auditor has to be appointed within 30 days by the board of directors, and the subsequent auditors, that is the second, third, fourth, fifth auditors, has to be appointed by the multi-state cooperative society at the AGM, and they will hold office till the conclusion of the next AGM. That means for period of 1 year. Next is powers and duties. They have the powers and duties to access all the books of accounts. They can ask for all the information. If they want additional information, they can ask for that also. Importantly, they can make inquiry under 73 subsection 2. What is this 73 subsection 2? Whether all loans and advances are properly secured, whether all entries are whether any entry are represented merely by way of book entry. That means அது நிஜமா எதுமே ஆகல, சும்மா entry போட்டு வச்சிருக்கான் book entryல. Whether personal expenses, fridge வாங்குனதெல்லாம் charged to revenue account, whether shares are allotted for cash, whether such cash is actually received. This is the inquiry under 73 subsection 2 which they can make. What are the contents of the audit report? Normally we saw it has to have a true and fair view of the state of affairs. All information and explanation has to be received. For the books of accounts, if he can't visit any branch, then that books of accounts has to be given to him. If that books of accounts cannot be given to him, then another auditor will be appointed for that branch. That report of that another auditor has to be forwarded by him. And the last one is the balance sheet and the profit and loss should be translated from the books of accounts only. Are you able to understand? Next comes the special audit. Special audit means if the affairs are not managed by sound business principles, or if there is any injury to industry or injury to trade, or if it endangers insolvency. In these three cases, the central government will order for a special audit. He can appoint the same auditor who has been doing, or he can appoint any other person to conduct the special audit. How ma'am, central government is suddenly coming to the picture? They can't do for every multi-state cooperative society. They should hold at least 51% either by themselves or by way of state government, or a combination of central government and state government. If they are holding more than 51% of paid up share capital, then they can ask for special audit. The expenses for this special audit has to be paid by the multi-state cooperative society only, but it will be determined by the central government. Once the report is given to the government, how much time is there for the government to take action? 4 months time is there for the government to take action. Next we saw inquiry and inspection. Inquiry and inspection, who conducts? The central registrar on a request from the below people will conduct the inquiry or the inspection. Who are those below people? Either federal cooperative, multi-state cooperative society is affiliated with this society, they can ask. Or a creditor can ask. Or not less than 1/3 of the members, at least, that means at least 1/3 of the board members they can ask. Or at least 1/5 of the members of the cooperative society, they can ask for an inquiry or a inspection. For inspection, a general or a special order is required. Inspection mattumda general or special order is required. Can I directly go to the multi-state cooperative society? Okay sir, I am appointed, please give all the details. No. Notice has to be given. That notice is for 15 days notice has to be given. Now coming to the powers of the person conducting the inquiry or the inspection. For inquiry, he has access to all books of accounts, documents, securities, cash, everything. He can ask any person to come. He can summon any person at any place specified, or he can request the society to call for a general meeting, and for that notice has to be given not less than 7 days. If the officer fails, then he himself can call for a meeting. For inspection, what is his power? He has access to books of accounts, papers, vouchers, securities, cash, everything. And if there is any irregularity in that, he can take them into custody. I told about custody, yes, because they will change off if I leave it there. So I will keep it with me. So I will take into custody. For this, the report will be given to the central registrar. How much time is there for the central registrar to act? Here it is only 3 months. Inspection or inquiry na 3 months. Anga special audit na it was 4 months. Are you able to understand? This is audit of cooperative society. If you study this, it is more than enough. We have covered everything. Definite marks will come. Are you able to understand? Bank audit, definitely 4 or 5 marks. Cooperative society or government audit, 4 or 5 marks. So all three we will be covering fully without omitting any single word. Are you able to understand? Clear? Is the speed okay? Yes? Now we go for a short commercial break. Let's start with essay 520, analytical procedures. This is also a part of audit procedures only. In A row, external confirmation, inspection, inquiry, re-performance, observation, A stands for analytical procedures, then only recalculation. Are you able to understand? So how to do that analytical procedures? Separate standard is there. That standard is called essay 520. This is analytical procedures. What is the meaning of analytical procedures? The meaning is, it is the evaluation of financial information. Basically, the financial statements are given to the auditor. Yes or no? You are evaluating that financial information by analyzing plausible relationship between financial and non-financial data. Plausible relationship meaning what? Plausible is nothing but possible. Possible relationships, whatever I can make between the financial and non-financial data, that is only called as analytical procedure. Whatever financial information is given to me, I am making some kind of relationships between the financial and non-financial data. Are you able to understand? Now, the total wages in my profit and loss account is given as, say, 1 lakh. How do I verify this? I will take the average salary as 50,000 and number of employees. Is this a financial data? No, non-financial data. So basically I am multiplying the number of employees into the average salary per employee. I am finding some kind of a relationship between financial data and non-financial data to verify the financial information which is given to me. So the meaning of analytical procedures is evaluation of the financial information through analysis of plausible relationship. Plausible is nothing but possible. But me plausible, they will understand that you have read the study material. Extra or half a mark you make it. So plausible relationship between financial and non-financial data. Now you understood here what was the financial data and what was the non-financial data. Here, what is the objective of the auditor? The objective of the auditor is to do the audit procedures to get what in return? To get audit evidence in return. This audit evidence is what is the objective of the auditor. The first objective is to get relevant and reliable audit evidence. For getting the relevant and reliable audit evidence, he has to design the audit procedures, that is this analytical procedures, to form the overall conclusion. What is this conclusion? To form the opinion, whether I have to use my weapon, whether I have to give a clean report, modified report. So whatever opinion he has to give, that is called as conclusion. So the first one is to get the audit evidence, and based on the audit evidence, he has to give his conclusion, which is nothing but the opinion. Now, when should he do this analytical procedure? Should he do at planning stage? Should he do at testing stage? Or should he do at completion stage of the audit? When should he do it? He should be doing the analytical procedures at all the stages of the audit, whether it is planning, testing or conclusion. At the planning stage, when he is doing the audit, he will be able to know that if there is any further audit procedures which is to be done. Yes or no? At the completion stage, if he is doing analytical procedures, he will be able to know whether the opinion he is giving is correct or wrong. Yes, basically he is trying to find some kind of relationship between the data, and he is able to tell whether the financial information which is given to him is correct or incorrect. For that, we will be comparing different kinds of data differently. The first one is comparing the client data with industry data. Have you all been to this mall? Yes? Express Avenue. You have all been to this mall. In the first floor of this mall, if you see, there will be so many sports shops. Yes? There's Adidas, there's Puma, there's all of these shops. Reebok, all these sports shops, if you see, they are in the same place of the mall. Say you are the auditor of Adidas. You went for audit. Adidas is paying a rent of 50,000 rupees. How much? Adidas is paying a rent of 50,000 rupees. You are again appointed as the auditor for Puma. Puma is paying a rent of 5 lakh rupees. What are you doing here? When you are getting appointed as the auditor of Puma, you are seeing the size of the shop. Even if it is little bit bigger, you can't exactly measure the square feet and all. Even if it is little bit bigger, 50,000, if it is 1 lakh, okay. But if it is 5 lakh, same floor, same place it is there. So what are you doing here? You are comparing this data with the industry data which is in the same place. Are you able to understand? So comparison of the client data with the industry data is the first thing you will be comparing. The second one, the sales. You are comparing the sales. Sales of the last year was 1 lakh. This year, what percentage it can increase? Maximum. Without they have not spent anything on marketing, they have not done any other introduction of new product, nothing. The same expenses are there. Sales, how much increase organically we can expect? Maximum 10 to 20%. 20% increase now, it should become 1,20,000. Here sales has become 5 lakhs. Now you are getting a doubt. In the figure tappa, illana, the previous figure tappa. Because there is a sudden increase from 1 lakh to 5 lakhs. What are you comparing here? You are comparing the client data with the previous year data, that is the prior period data. First one you compared the client data with the industry data. The second one you are comparing the client data with the prior period data. Now they are saying that, sir, you see the marketing expense. Marketing expense in this year is only 10,000 rupees. Nowadays, you can do marketing on Instagram itself, sponsored ads, sponsored ads, nowadays scrolling culture, yes or no? We'll keep doing this and we'll sleep off. Morning, as soon as we wake up, we want to start scrolling our phones. Either YouTube Shorts or Instagram Reels. That is the culture now. So they understood the market. Okay, all their eyeballs are denoted for this phone scrolling only. So now I will do marketing on Instagram. Now he did marketing on Instagram for 1 lakh rupees. Because he did this 1 lakh rupees on marketing, he increased his sales from 1 lakh to 5 lakhs. Are you able to understand? Yes. So client is making an expenditure for getting this result as 5 lakhs. That is client determined expected results. You are measuring the client's data with the client determined expected results. That is because of marketing, I am expecting an increase in sales. Are you able to understand? This is a financial expected result. There can also be a non-financial expected result. You will be comparing the client data with the client determined expected results non-financially. What is that? For example, he is doing this 1 lakh sales. When he was doing 1 lakh sales, he was in an apartment. On the apartment, he had a terrace. In that terrace, permission he just put one shield on top. What is that? Asbestos sheet. He put that. He kept all his goods there only. In the terrace, one small part, he put his goods. This is only, some say 500 square feet. That's it. This 500 square feet, now he has a proper godown. This is changed to 5,000 square feet. Proper godown, so he can have all his products there itself in the 5,000 square feet. So all his logistic cost and all will get reduced. Here, if he has to keep 500 square feet terrace now, to keep all his goods, he needs 5 terraces like this. Then movement from one terrace to another, again increasing of logistics cost and all of those things. Because he increased his square feet, he was able to increase his sales. So I am comparing the client data with client determined expected results, non-financial data. Are you able to understand? The next is Comparison of the client data with auditor determined expected results. Okay, you are saying sales 1 lakh, it became 5 lakhs. You are saying marketing expenses, you did 10k here, 1 lakh here. Okay, gross profit, here it is 30,000. How come the gross profit here it is 50,000? Here you are showing a gross profit ratio of 30%. Here you are showing a gross profit ratio of only 10%. Okay, your marketing increase, sales increase, all of those things. What happened here? Like that, auditor is able to ask a question. Here, what is he doing? He is comparing the client data and auditor is having an expected results. He saw 30% here. So he is expecting the gross profit to be 1.5 lakhs. But actually 50,000 is only there. That is auditor determined expected results. Are you able to understand? These 5 I will just repeat. The first one we saw comparison of the client data with the industry data. Example for that was Puma, Reebok, Adidas and all of those things. Second, we compared the client data with the similar prior period data. Previous year 1 lakh, why this year 5 lakhs. Next we compared the client data with the client determined expected results for financial data. That means they were able to say exactly this much marketing expenses I did. I increased my marketing expenses. That is the reason as to why my sales also increased. The next one, we are comparing the client data with the client determined expected results for non-financial data. I am expanding my square feet, my warehouse square feet. Because of that, my sales are increasing. That is client determined expected results, non-financial data. The last one is we are comparing the client data with the auditor determined expected results. That is auditor saw the gross profit ratio and he expected a gross profit ratio to be 1.5 lakhs, but it was only 50,000. So he was able to ask the client, why is it like that? Are you able to understand? Clear? Now, what are the factors to be considered for analytical procedures? Factors to be considered. First of all, what is the base for all these 5 things? The base is client data. First, data should be available. Availability is the first factor. ஒண்ணுமே available இல்லைனா you can't do this analytical procedures, finding relationships, all of these things are not possible. First, the data should be available. The second one, how much you are able to disaggregate the data. Disaggregation means what? Aggregation means you are able to collate everything and put it into one. Disaggregation means one figure is given to you, you are able to separate all the data. How much ever you are able to separate, you will be able to tell exactly the problem is here only. For example, cost of goods sold, suddenly it is very high. Why is the cost suddenly very high? If you are able to disaggregate the data, you will be able to tell that in this geographical location, this raw material price has increased. Onion price at this location has increased. That has contributed to the entire COGS to be high. Like that, you will be able to analyze the relationship between the data if you are able to disaggregate the data. Disaggregation means the opposite of aggregation. Disaggregation means opposite of aggregation only. The third one is what account type. Account type now, whether it is a profit and loss account, whether it is a balance sheet, what account type it belongs to. If it is a profit and loss account, that means there are so many transactions collating into one. So, automatically the disaggregation can happen easily. If it is a balance sheet item, the balance is just a transfer to that balance sheet. So, where is it easy? In the profit and loss account, it is easier. So, based on the account type also, you can have the analytical procedures to be done. What is the source of the data? Whether it is from an internal source, whether it is from an external source. How are you able to predict the data? How can you predict? There is a possibility that I do my Instagram ads, but I don't end up with any sales. Because in Instagram ads, when you are doing, you have to correctly put, this is my target audience, women are my target audience, women in the age group of this is my target audience, women in the geographical location of this is my target audience. Properly, if you are able to put everything, your sales will increase, you can predict it properly. But if you are not putting all these things properly, your money will keep going for marketing, but sales will not increase at all. You will not be in a position to predict the data. The last one is nature of assertion. What is the meaning of assertion? I will just divert a little bit from SA 520 and we will do what is the meaning of assertion. Normally these are topics which you will omit. That's why I am doing it inside the standard itself. Assertion means these are representations made by the management. You would have heard these terms called existence, occurrence, valuation, cut-off procedure. We will see that in assertion. Assertions means representations by the management which are embodied in the financial statements. It is already there in the financial statements and the management is just representing that. For example, if there is a balance sheet item called land and building, which side it will come? Asset side or liability side? Asset side, you are seeing land and building of 10 lakhs. What are the assertions that you are making here? You are making the assertion that this land and building is actually existing. It is actually there. If you go to their office and see, you should be able to see that land, you should be able to see that building. Are you able to understand? You are making an assumption that it is actually there. That's why it is getting represented in the balance sheet. And you are making an assertion that they only own that land and building. And the land and building angada irukkom. But he will actually be paying rent to that land. Then why is it coming as an asset for him? Only if he purchases that land and building, he has to show it in his balance sheet item. So here the next assertion is, he has full right over that land and building. If it is a liability, he has full obligation for that liability. This land and building, you are saying it is 10 lakhs. Whether it is properly valued, whether this is the proper carrying value after proper rate of depreciation, correctly for the correct months, you have calculated the depreciation. The valuation is correct. Appdi you are making a assertion. And the land and building 10 lakhs na irukku. Ore oru land and building na irukna. You are assuming that this is complete. Yes or no? If he is having one more land for 2 lakhs, then if it is not represented here, that is wrong. So whatever is given in the balance sheet, you are making an assertion that it is complete also. So for any account balances, that means balance sheet items, you are making these 4 assertions, that is valuation, existence, rights and obligations and completeness. These 4 assertions you are making for every item in your balance sheet. Now coming to your class of transactions. In your class of transactions means what? I told you A, B, C. There is actually D also. A, B, C, D. Account balance is nothing but the balances in your balance sheet. C is nothing but class of transactions, the transactions in your P&L. D is nothing but disclosures. So A, B, C, D, you will be having assertions. A, B we finished. What are the assertions for class of transactions? When there is a transaction which is happening, you are first seeing the transaction. Say in P&L, rent 5 lakhs. He has paid the rent of 5 lakhs. You are assuming that this 5 lakhs is actually being paid. Yes or no? So the first thing is occurrence. Say he has purchased something worth 1 lakh. You are assuming that the purchase has actually happened. The stock has actually come inside. He has actually paid payment for that 1 lakh. You are assuming all those things. Yes or no? That is the assertion with regard to occurrence. It also means that it has occurred to this entity only. For example, say some other entity purchased 1 lakh, but I am showing in my profit and loss. The That is wrong. If you are showing in your profit and loss, I am making an assumption that actually you have only purchased it. Are you able to understand? So that is occurrence. The second one is completeness. The same thing. Whatever transactions has happened, we are assuming that it is complete in nature. Accuracy, it is exactly given. If it is 5 lakh point 96, that means it is 5 lakhs point 96. It is accurate. I am not missing 1 rupee or 2 rupees this side or that side. Cut-off procedures, this is important. Cut-off procedures means whatever is happening before 1st April, I am not taking. Whatever is happening after 1st March, I am not taking. Exactly in this period, whatever transactions has happened, only that I am taking. That is called as cut-off procedures. The auditor will perform few audit procedures to check if the cut-off procedures is correct or not. What he will be doing is, he will take few invoices from the start of the year. He will take few invoices from the end of the year. He will check whether it is really falling into this accounting period only. That is called as cut-off procedures. Next one is called as classifications. Classification means it is recorded in appropriate accounts only. That means salary no pay pannirukena adu salary account la da iruka illa vera edavadhu account drawings account poicha. That is wrong. So it is properly presented. That is called as classification. Are you able to understand? Clear with the differences? Now, account balance na idu 4 dana ma'am. Class of transactions na idu 5 dana ma'am. Your study material has actually given class of transactions ko only these 5, account balances ko only these 4, and down they are saying by using the professional judgment of the auditor, they can mix and match. Are you able to understand? So if they are going to give you a land and building depreciation and say closing carrying value of the land and building, you will be mixing both, because depreciation will come to P&L, land and building will come to balance sheet. You can mix both. This is not a set rule that these 4 should come for balance sheet. These 4 additionally, anything you want, you can keep it as an assertion. For example, in your profit and loss account, say as per legislation, I have to pay the tax. So tax is paid at 1 lakh rupees. This is shown in your what? This is shown in your profit and loss account. Yes or no? If this is shown in the profit and loss account, you are making an assertion that tax has been calculated at this percentage only. Tax has been calculated as per the legislation only, as per the tax provisions only. You are making an assertion for that also. Yes or no? Yes. So, not only these, but also other things based on your professional judgment, you can add for assertions. Now, whatever I told till now for account balance, class of transaction, disclosure, whatever I told till now, all the assertions are implied in the financial statements. Yes? When I am saying the land and building is 1 lakh, I am implying that it is existing. I am implying that the rights and obligations is that of the company. I am implying that it is valued correctly. Yes or no? It is implied in the financial statements. Can it be explicit also? Yes. Assertions are of 2 types. Implicit, explicit. In implicit, there is positive assertion, negative assertion. In explicit, there is positive assertion, negative assertion. Very, 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 very important, guys. So, whatever we saw till now was implicit assertion. Next, coming to explicit assertion. What is the meaning of explicit assertion? Explicitly I am telling means you are a bad boy. Explicitly I am telling. I am opening my mouth and actually telling you what is there. For example, there is secured loans. Secured loans of 1 lakh is there. If they just give you this information, you will not be able to understand what is this loan, what is the security. So down they will write this loan is for the percentage of 10% and the security received is 1,50,000. Value of security is 1,50,000. Explicitly they are able to give you this information in the notes there itself. So this is called as explicit assertion. I told you assertions are of two types, implicit and explicit. Implicit is split into positive and negative. Explicit is again split into positive and negative. Whatever we saw now is positive. Positive na irukku solra. I am telling you that it is there. If you see land and building 1 lakh, I am telling you that it is there. That is called as positive. Now what is the meaning of negative assertion? Negative assertion means, what is contingent liability? Something might affect my future. That means there is a contingent liability. I am a user of the financial statements. That means I am a stakeholder. I want to know something from the financial statement. So what I have to do? I have to go down and go and search for this contingent liability. Say for example, they have written, there is no contingent liability. They have specifically written like this. This is a negative assertion that they have made and they have specifically written. That means so it is implicit or explicit? It is explicit and it is a negative assertion. Are you able to understand? Now in your balance sheet, if you come, there is furniture, there is land, there are other fixed assets. They are giving. Are you able to understand? Here, there is nothing told about building. That means building is not there. There is a negative assertion, but specifically have they spoken anything about building? No, this is an implicit negative assertion. Are you able to understand? Assertions are of two types, positive and negative, and each positive and negative will have implicit and explicit. Are you able to understand? Clear? Now we were in Essay 520, analytical procedures lab. Factors to be considered lab. We saw availability, disaggregation, account type, predictability, nature of assertion. The last one is inherent risk. What is the meaning of inherent risk? Inherent risk. If the industry is falling, then this company also will fall. Nobody can save them. Inherent risk is a risk which will always be there with the company. Are you able to understand? So based on the inherent risk also, analytical procedures can be done. Clear? There are methods for analytical procedures or techniques for analytical procedures. The first technique is called as trend analysis. What is the meaning of trend analysis? For my sales, I compared it with my previous year and I was able to tell you that it is supposed to increase only 20%. What am I doing? I am seeing the past trend. Past trend line has increased only 10 to 20%. So this current year also I am expecting it to increase to only 10 to 20%. So here I am doing a trend analysis. The second one is called as ratio analysis. What did the auditor determine expected results to? He compared the gross profit ratio of the sales and he was able to tell that previous year it was 30%. So this year also it is supposed to be 30% only. That is called as ratio analysis. The next one is called as reasonableness test. In the marketing expenses, because he increased the marketing expenses to 1 lakh, we were able to say that the sales increased to 5 lakhs. But imagine the marketing expenses was 25 lakhs. Sales increased to 5 lakhs. Is this reasonable? No. பார்த்தாலே தெரியுது இது அநியாயமா இருக்கு. இது நம்புற மாதிரியே இல்ல. அப்படினா it is not reasonable னு அர்த்தம். So if the auditor is doing a reasonableness test, that means he is seeing அது நியாயமா இருக்கா அநியாயமா இருக்கா. That is called as reasonableness test. The fourth one is called as structural modeling. What is the meaning of structural modeling? It is a graphical approach. I am saying my sales started from here, my marketing started from here, my marketing kept going like this, my sales kept going like this. I am able to plot it in a graph and I am able to tell that I spent this much marketing, so my sales kept increasing. Now after this point, I will directly only spend so much marketing and my sales will keep increasing. Is this believable? Yes. Definitely. Why should I keep increasing my marketing expense? The sales will increase organically also. After a specific point, after I have gained some brand appearance and all, I don't need to spend on marketing expense. This much is enough for me. But my sales will shoot up like anything. Like this, if you see some graph, you are able to make some comparison and you are able to tell that this relationship exists and it is correct or not. Are you able to understand? So this is called as structural modeling. With the results of the analytical procedures, what are you going to do? You are making some relationships, okay? You are trying to find whether it is reasonable or not, okay? You are making some ratios, okay? You are having some expectations, okay? You are comparing as to what is actually there, okay? With whatever you are doing, with the results, what are you going to do? The first thing you will be doing is, you will inquire with management or TCWG. You will first go and ask them, sir, you spent 20 lakhs on marketing. Why is the sales still like this? Then he will give some answer. Sir, now only I spent on 1st March I spent. How is it possible that the sales increased so much in just 1 month? Please wait for the next year, sir. Sales will boost up like anything. So if he is giving some answer, then you will be checking whether it is reasonable or not and all of those things. Next, if he is not giving any answer, you are trying to do some inquiry, he is not giving any answer, then you will go for other audit procedures. Analytical procedure is one procedure. We have so many other procedures. So go for other audit procedures. Are you able to understand? So what is the purpose of the standard? The purpose of the standard is basically to see whether account balance, class of transaction, everything appear reasonable or not. Whether it is proper, whether it is reasonable. To see all of those things is the only purpose of the standard. The standard will help you identify if there is a material misstatement. The standard will help you identify if there is a fraud, if there is an error. It will tell you if there is any mistakes in the accounts and all of that. Are you able to understand? Clear? This is essay 520. The next standard which we will be doing is essay 580, written representation. What is the meaning of written representation? Who is making the written representation? To whom they are making this written representation? All of these things we are going to see in this standard. Essay 580 is written representation. Written representation that it is in written format only. It is a written statement given by whom? To whom? By the management to the auditor. It is a written statement by the management to the auditor. For what are they giving this statement? They are giving this statement for some kind of a confirmation or to support an audit evidence. The statement can be for confirmation or to support an audit evidence. For example, there is a debtor. A debtor is located somewhere. You are asking the management, sir, I want to talk to the debtor. I want to get an external confirmation from the debtor. I want him to just confirm the value which I will give. I don't want his ledger also. Just yes or no, that is enough. Management is saying, sir, if you want, you call him. But he can't talk. He went to coma. He went to coma. If you want, you call him and ask. Then as an auditor, you are very fresh. You read the external confirmation. You want to implement that external confirmation somehow. So you are saying he has a wife. I will ask the wife. She can confirm on behalf of them. Then the auditor, then the management is saying, sir, They are in hospital. He is in ICU, CCU and all. At this time, you will just call for this 5 lakhs and disturb them or what? Already she is in so much pain. The husband is in coma. Please sir, don't disturb him. Like that if they are saying, as auditors, we need some confirmation for this debtors. Okay, he can't give. Wife also you are not allowing. Emotional turmoil and all of those things. You give on behalf of them. So the management itself will confirm the balance for that party. Management itself will write and give, நான் சொல்வதெல்லாம் உண்மை, உண்மையை தவிர வேறு எதுவும் இல்லை அப்படின்னு சொல்லி they are promising something and giving it to the auditor. That is called as written confirmation. It can be for confirming a debtor and automatically it is supporting other audit evidences. Other audit evidences means what? How did he become a debtor? Debtor means he has to give me the money. That means I would have made some sale. Show me the sale invoice. So I am doing some other audit procedure. I am getting the audit evidence there itself. I am just using this written confirmation from the management to support that audit evidence. Are you able to understand? So a written confirmation means it is a written statement by the management to the auditor for two things. One is for confirmation. The second one is for supporting the audit evidence. Now what is the auditor's responsibilities? This is a small standard, very small standard. Auditor's responsibilities muchta standard over. Auditor's responsibility, there are only 3. The first one is a written representation about the management's responsibilities has to be gotten from the auditor. By the auditor, sorry. Written representation about the management's responsibility. In the word engayo pathame sir, where did we see this management's responsibilities? In the management's responsibilities. In the terms of engagement, in the engagement letter, that love letter will have, this is your responsibility, this is my responsibility. In the court thandi, neeyu varakudadu nanu varamate. Idella yesterday we saw in essay 210. So that written representation about the management's responsibility has to be considered as this written representation. Are you able to understand? Why sir, again and again you are asking for the same written representation from the management response? Oru vaati vaangna pattada. Engagement letter la you have gotten the written representation for the management's responsibility. There also you is writing only and giving. No, engagement letter I told you is prepared by whom? Or prepared by auditor. I told you, you all when you go for articleship, one of the first jobs you will be doing is preparation of this engagement letter if you are in a big 4 and all. Otherwise engagement letter கடைசியா தான் பண்ணுவோம். They will not follow the procedure properly in a small firm. But in a big 4, first thing you will have to do is this engagement letter only. After the engagement letter is signed by the partner and that side, after that only the engagement itself will start. So here in this engagement letter you have written the management responsibility. He has signed, but did he write? No. He has to write and give you. So that first written representation has to be with regard to management's responsibilities. Management, what is he responsible for? For the preparation and presentation of the financial statements. Sir, I am only preparing the financial statements. I am only presenting the financial statements. You are not involved in the preparation and presentation. I take full responsibilities. Appadina management is telling in this written representation. They are also saying that, believe me, I promise that whatever I am giving you is complete in nature. Idukku mela 1 rupee also is not missed in the financial statements. So this written representation about the management responsibility is only talking about the preparation, presentation of the financial statements and the completeness as to whatever is recorded in the financial statements. Why do we need this written representation? For example, say one person is there. He only signed on behalf of the management. After few days, he quit the organization and he went off. Now another person came on behalf of him. he will come and ask. They only signed, you go and ask him for whatever he told. Why are you coming and asking me? Did I sign? Kadayadu. We written representation kudutru. Ava sign panna okay, but for my audit, you give a written representation saying this is your responsibility. It is okay even if it is again. So the signed person is no more responsible. He has quit, or he has quit his position, he got promoted, or he moved to another department, or he quit the organization. It's none of our concern. Pudusa nee vandalla, nee tirpi, you make the written representation and you give it to me. Normally, engagement letter can be prepared for 1 year, or it can be prepared for 3 years or 5 years also, because auditor is appointed for a 5-year period, and after that he will be reappointed for another 5-year period. Then a cooling period will be there for 5 years. Are you able to understand? So engagement letter can be prepared for 5 years also. In that 5 years, what if something has changed? So if the engagement letter is prepared in the previous year, then again in this current year, instead of going for the engagement letter, I will just get the written representation from the management. Are you able to understand? Now they signed the engagement letter, gave it to me. Later when I went for audit, I am asking for all the details. He is saying access to books of accounts. இந்த ஒரு பேப்பர் இருக்கு, இந்த பேப்பரை வச்சு என்ன ஆடிட் பண்ண முடியுமோ நீ பண்ணிட்டு போ, get out of my office. They are saying only single paper. How you will do audit procedures, how you will get the audit evidence, how you can express your opinion and all. ஒண்ணுமே பண்ண முடியாது. Nothing is possible. So he has not understood his duties properly. சும்மா நீ ஒரு பேப்பர் கொடுத்தா, he has signed it and he has thrown it back at your face. He has not actually read the document. That means the person who is responsible from the management side has not understood, or the management has misunderstood his duties. Are you able to understand? The next one is, there is a change in circumstance. Change in circumstance now. Ownership has changed, equity has changed. Products, that time only single product was there. I was doing only one car, that was also 1 lakh. One car, 1 lakh. It was like nano. Now I have so many different types of cars, hybrid car, electric vehicle. Now my one car is 10 lakhs, even 20 lakhs, even 1 crore. Yes or no, 1 crore also car is available. I started selling so many things. I started expanding my operations. So there is a change in circumstances. So in that case also, written representation from the management has to be received by the auditor. 4 cases we saw. The first one was, the engagement letter was signed, but he is no more responsible. He moved out of the organization, out of the department. Second, the audit engagement was prepared in the previous year. The third one was, management has misunderstood. They just simply signed and threw it. The fourth one was, there is a change in circumstance. That means change in ownership, change in equity, change in product line itself. முன்னாடி கார் வித்துட்டு இருந்தா, இப்போ ஷிப் வைக்க ஆரம்பிச்சிட்டோம். So there is a change in circumstances itself. Whatever he was doing before doesn't hold good anymore. At that time also, you please get a written representation. Are you able to understand? The first thing, we will be getting written representation about management's responsibilities. The second one, we will be getting written representation to support other audit evidences. For this only, I told you that example, saying what? You already did other audit evidences, that is for a debtor, you already saw the same sales invoice, you already saw for what value it was sold, you already saw the amount which was collected, you already saw the amount which was pending, you already did all your audit procedures, you inquired, you inspected, everything you did, but this is just supporting that other audit evidence. Now we are in auditor's responsibilities. It is the responsibility of the auditor to get the written representation from the management with regard to the management's responsibilities. It is the responsibility of the auditor to get the written representation for supporting other audit evidences. Now he has received everything. He has to respond. It is the responsibility of the auditor to respond appropriately. Appropriately, if they have provided the written representation, how he has to respond. If they have not provided the written representation, how he has to respond. That is called as respond appropriately. If they have provided the written representation, check for how much I can rely on this written representation. representation. The first thing I will be checking is the reliability, how much I can rely on this written representation. The second I will be checking is, does it have any effect on other audit evidences? Now other audit evidences padi pata sales was so much, he already paid 10% of the sales, remaining 90% only he is actually due. But this company has shown us 100% as actually due. Now because of this written representation, I am able to find out how much is the actual value of due which is there. So the effect on other audit evidences also I will be able to make because of this written representation. If it is inconsistent, in our example, it was inconsistent, yes, because 10% already received was not accounted for. If it is inconsistent, then the auditor has to do what? Alternate audit procedures. In the alternate audit procedures, after the auditor has done, still he is finding some mistakes. The mistakes are still unresolved. If the mistakes are still unresolved, then he has to find the effect on the audit evidence. Then finally, if nothing எதுவுமே விளங்கல, அவன் கொடுக்கிறதுக்கும் இருக்கிறதுக்கும் சம்பந்தமே இல்லை, நானும் alternate audit procedures பண்ணி பார்க்குறேன், எனக்கு எதுவுமே விளங்க மாட்டேங்குது அப்படின்னா, that means he is giving some audit evidence, but it is not sufficient or appropriate. If there is no sufficient appropriate audit evidence, and if it is material misstatement, and if it is pervasive, then I should be giving a disclaimer of opinion. Are you able to understand? Yes? Now, this was the case where he has provided and it was not reliable. If he has not provided at all, then what should I do? First thing I should do is direct disclaimer. First you discuss with the management and TCWG. You ask them, sir, I asked so many times, they are not even writing and giving format. He just has to fill in the numbers. But still he is not giving, he is refusing to give. When you discuss with the management and TCWG and they are giving some response. So you see how the response is reasonable or not. If they are able to give, if the TCWG is saying, okay sir, sorry, by mistake, chinna paiyan nethu dhaan vandhaan, so sign podradhukla bayandirupaan, avanukku badala I will give the sign appdin sonnanga, no problem. They are giving the written representation. Then we will see whether it is reliable and all of these things. But they are also saying, unakku enna venum? Financial information we get. Financial statements kudukumbodhu kuda what you told, I didn't study that I have to see financial statements, I studied that I have to see the financial information. That means all the journal entries, ledger, invoices, everything I have to check. I gave everything for you. Now again you are giving me some format and asking for some written representation. Essay 580, you think we are fools? Appadina management is asking. Now, is there audit evidence here? No. Again, no sufficient appropriate audit evidence. Now, please use the weapon, that is disclaimer of opinion. Are you able to understand? In both the cases where they are giving something and if it is not reliable, it is not correct, do alternate audit procedures and see if you are able to get some kind of relevant information. If you are not able to get some kind of relevant information, directly disclaimer of opinion, because there is no sufficiency or appropriateness in that audit evidence. If they are not giving the written representation itself, then also there is no sufficiency and appropriate audit evidence and sufficiency and appropriateness. There is no audit evidence itself. So, disclaimer of opinion. Are you able to understand? Now, what should be the date of this written representation? Audit report date is 21st June. Can I have the written representation date on 25th June? No. The date of the written representation should always be before the date of the audit report. After you have given your opinion in the audit report and all, don't go and ask the management for written representation. It has to be before you represent your opinion, before you represent your audit report. It can be as close to the audit report as possible. It can be 20th June also. No problem. One day before your date of audit report. No problem. But never after the date of the audit report. Now you guys tell me, who is preparing the books of accounts? Who is preparing the financial statements? Management. Management is preparing the financial statements. Management is preparing the books of accounts. They are writing, correct? Management writing the books of accounts. Management writing the financial statements. Can I consider these books of accounts, financial statements, as a written representation as per SA 580? No. These books of accounts and financial statements will not constitute as a written representation. Written representation means it is a written statement by the management to the auditor for confirmation or for supporting an audit evidence. What are they confirming here or supporting any kind of audit evidence? Just because it is written by them does not mean it is a written representation. It has to support an audit evidence, or it should be some kind of a confirmation. For confirmation only example was debtor coma. Yes, next we saw auditor's responsibility with regard to the written representation. The first one was the written representation has to be bought for management's responsibilities with regard to preparation of the financial statements, which is, and completeness of the financial statements. Why again and again we need to get the management's responsibilities? The first point, the signed person of the engagement letter is no longer in the job. Engagement letter was signed in the previous year. Management has misunderstood for what they have signed itself, or there is a change in circumstances. These 4 reasons. For these 4 reasons, the management will be giving a written representation, or for supporting any other audit evidence also. This written representation can be given. The third auditor's responsibility is to respond appropriately. After they receive the written representation, check if this written representation is reliable. Check what effect it has on the audit evidence. If it is not reliable, try to do alternate audit procedures. Nothing is matching, then you can't do anything. There is no sufficient appropriate audit evidence, so you have to give a disclaimer of opinion, assuming it is perversive. The next one, if they have not provided any written representation, then you please discuss with the management at ECWG. If the management at ECWG is giving the written representation, again you will check for reliability and all of those things. If they are also not giving, there is no audit evidence itself, then also you will be using your weapon, which is disclaimer of opinion. Small standard, kutti standard. Yes? Clear? This is SA 580 written representation. Settle down fast and we'll start SA 315. SA 315 is identifying and assessing the risk of material misstatement through understanding the entity and its environment. That means how much content is there inside. So first I want to start off with the topic of audit risk. What is the meaning of audit risk? Audit risk means the risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. That means what? That means risk that auditor gives an inappropriate audit opinion when financial statements are materially misstated. Materially misstatement means there is a mistake and that mistake is important. Yes or no? Yes. The financial statements, there is a mistake and the auditor gives a inappropriate audit opinion. Inappropriate means auditor has made a mistake when the financial statements are materially misstated. So financial statements if the auditor says everything is correct, this is called as audit risk. Are you able to understand? Now tell me if this is an audit risk. Financial statements, everything is correct and auditor is saying it is wrong. Is there an audit risk here? No, there is not an audit risk here. Audit risk is only when the risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. Financial statement, there is a mistake and auditor has told that it is correct. That is only an audit risk and not vice versa. Why? Why? Because if the financial statements are correct and auditor has told it is wrong, nobody is going to rely on the signature and going to invest the money, give the loan and all of those things. But imagine this scenario, the financial statements are all actually wrong, but the auditor has told perfect, everything is representative of whatever has happened in the company. The auditor, if he is telling like that, that means bankers will give the loan, investors will give their money, shareholders will think it is the best company and invest all their money in the shares. So many people are relying on this signature and getting into transactions with the company. So the risk is only here and not here. That is the first thing about audit risk. Are you clear? So audit risk is the risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. Only when the financial statements are materially misstated, then only audit risk itself will arise. In the other case, it will not arise. Now comes the concept of risk of material misstatement. I already told you this. Material misstatement means material na important, misstatement na mistake. This can be for two things, by way of fraud or by way of error. If it is an intentional mistake, then it is a fraud. If it is an unintentional mistake, it is an error. The risk of this mistake happening, that is called as risk of material misstatement. Correct? Now you forget all these things because now I am going to tell you what is actually material misstatement. Material misstatement means it is the difference between amount classification, presentation and disclosure of a reported financial statement item and amount classification, presentation, disclosure as required for that item to be in AFRF. What is the meaning of that? Idella, it is not wrong. Whatever I told here, it is not wrong. But it is not representative of the definition. The definition of material misstatement is, now see here, I am going to disaggregate the definition. What I am going to do is the difference between amount, classification, presentation and disclosure as per AFRF. I am comparing with what is actually there in the financial statement. As per AFRF, I am supposed to do depreciation at 10%. But I did a depreciation of 20%. So the amount becomes wrong. As per AFRF, I am supposed to classify what? Current assets under assets only. But if I am classifying current assets under liability side, that is wrong. So proper classification as per AFRF must be there. If there is a difference between AFRF and the financial statement reported item, that is called as misstatement. Presentation. Proper presentation as per AFRF must be there. For that, my favorite example is debtors if it is 1 lakh. Now just looking at this figure, we will be thinking that the company is supposed to get 1 lakh. So based on this, I may even give the loan to the company of, say, if they are asking only for 20,000, because I will be assured that once they get that 1 lakh from outside, they will repay the money back to me. But here they have put the provision for bad and doubtful debts as 95,000. That means what? Actual debtors is only 5,000 rupees. So how is the right way of presenting? They are not supposed to put the provision here. They are supposed to reduce the provision here and show only 5,000 as the debtors. This is the right way of presenting as per AFRF. So if there is a difference in the presentation as per AFRF and what is actually there, then there is a misstatement. Next is disclosure. They are supposed to disclose about. Where did I use this example? Where did I use that example is what I asked. I didn't ask what is this. Where did I use this example yesterday? For going concern. If the going concern is getting affected, as per AFRF, a disclosure must compulsorily be there. As per AFRF, if it should be there, and in the financial statements, it is not there, there is a difference. That difference is called as misstatement. Now see the definition again. The difference between the amount classification, presentation and disclosure of a reported financial statement item. That means financial statement la the item irukku and amount classification, presentation and disclosure as per AFRF. Now are you able to understand? Very easy. So material misstatement na enna we saw, audit risk na enna we saw, risk of material misstatement. The components of risk of material misstatement is inherent risk and control risk. Yesterday itself I touched upon this wrong. Inherent risk means the company cannot do anything. It is not in the control of the company. If the entire industry is falling, then OYO rooms will also fall. Hospitality industry, tourism industry will definitely fall if there is COVID. Yes or no? That is called as inherent risk. Control risk means the control which is there in the organization is not operating effectively or efficiently. That means it is unable to prevent, detect or correct an error or a fraud which is happening. Or the internal control which is designed, adile or mistake irukku. Control risk na, the controls are not effective and efficient. Are you able to understand? Yes, so risk of material misstatement components are inherent risk and control risk. There is something called as detection risk. Detection risk means what? Detection risk means the auditor is unable to find any error or fraud. Detection risk is again of two types. The first one is called as sampling risk. The second one is called as non-sampling risk. Sampling risk means the sample is not representative of the population. You are thinking that the sample is representative of the population and you are doing all your audit procedures, getting all the audit evidence and giving the opinion based on the sample. But actually sample is an anomaly. It is a one-off incident. You've taken all the anomalies and you've considered that as your sample. So that means it is not representative of the entire set of data. That is called as sampling risk. What is the meaning of non-sampling risk? Non-sampling risk means inappropriate audit procedure. If you are not studying auditing properly, if you don't know A, roar and all, you just came only for this class, analytical procedure. Anything they are giving, you are going to do only analytical procedures. Yes or no? You should know exactly where to use which procedure. Where you have to use inquiry, you have to go with a mic and ask them about toothpaste lo uppu irukka. Appadinu kettada they will be able to respond to something. Simply if you find some relationship, plausible relationship between financial and non-financial data, 10 times ma'am sonanga. Inga problem ayichu thirupi sonanga 11th time. All these things if you see, analytical procedures mattu padichittu ponana, then you will not be able to do the other audit procedures. If you are doing inappropriate audit procedures, that is called as non-sampling risk. Non-sampling risk is a component of detection risk. Now listen here. Audit risk is a function of risk of material misstatement and detection risk. Risk of material misstatement is a function of inherent risk and control risk. I just want you to understand this graph. Audit risk is risk of material misstatement and detection risk. Detection risk is sampling risk, non-sampling risk. Risk of material misstatement is inherent risk and control risk. What is in the control of the auditor? What is in the control of the auditor? All of you. Only the detection risk is in the control of the auditor. All the other risks here is in the control of the management only. Are you able to understand? Yes. Now coming to essay 315, which is identifying and assessing the risk of material misstatement. Now you know exactly what is wrong, what is misstatement and all of those things. The risk of material misstatement through understanding the entity and its environment. Every standard will have something called as What is the objective of the standard? The objective of the standard is to identify and assess the risk of material misstatement at the financial statement level and ABCD level. That means at the financial statement as a whole and also for each account balance, class of transaction and disclosures. For what are they identifying and assessing the risk of material misstatement? To provide a basis for designing and performing the further audit procedures. Now, for identifying and assessing the risk of material misstatement, the auditor shall do 4 activities. First activity, he has to first identify the risk. Second, he has to, what is the name of the standard? Identifying and he has to assess the risk. Next, he has to relate the identified risk. Next, he has to consider the likelihood of the misstatement. That means he has to consider the probability of the misstatement happening or not happening. That is called as likelihood. It is nothing but the probability. Now, we saw risk assessment procedures. What is this risk assessment procedures? The risk assessment procedures are nothing but the audit procedures which are being performed to understand the entity and environment. How are you going to understand the entity and its environment? How can you understand the entity and its environment? The first thing you will be doing is, you will find the nature of the entity. Nature of the entity. Now, what is the shareholding pattern? Who is having the ownership? How is the financial structure? What is the debt equity ratio? All of these things are nature of the industry. The second one is nature of the entity, The second one is the industry it belongs to, whether it is a product sector, whether it is a service sector, product, now what product they are selling, all of those things. Because only if you know that they are in the tourism industry, you will know that there is an inherent risk there during COVID. Otherwise, you will not even know that. So, the questions you will be asking is, what is the nature of the entity? What is the industry it belongs to? What are the accounting policies that they are having? If they are having accounting policies, it has to be followed. Year after year, same policies has to be followed. If there is a change in the accounting policy, then reasons for the same must be there. Yes or no? Yes. Every company will have business risk. What is the strategy to tackle the business risks? All of these things we have to see. Say for example, they are selling petrol. What is the business risk there? They are selling petrol. My client, I am the auditor. I am going to client's place. I am asking them, I want to understand your entity and the environment. That is the first thing I will be doing. And I am asking them few questions like which industry, what are you selling, what is your nature of the entity, who is the owner. All of these questions he is saying. That time he is mentioning that he is selling the petrol. If he is selling the petrol, there is one inherent risk which is there, which is not in the control of the client. What is that? The petrol will get evaporated. So automatically you have to ask, what is the control that you are having for this evaporation of petrol? What is the normal loss percentage for this petrol? These are the questions you should consistently ask the client. Are you able to understand? The next one is, how is the financial performance? That means, have you submitted anything, any financial statements to the credit rating agencies? What are your key performance indicators? All of those things we have to ask the client to understand the entity and its environment. Are you able to understand? So SA 315 is basically talking about identifying and assessing the risk of material misstatement through understanding the entity and its environment. In that, the objective is to identify and assess the risk of material misstatement at the financial statement level or at ABCD level to provide the basis for my further audit procedures. For identifying and assessing, first I have to identify the risk, then I have to assess the risk, then I have to relate the identified risk, then I will see the probability of it happening, that is likelihood of it happening or not. Then we saw what is risk assessment procedure. Risk assessment procedure are nothing but the audit procedures done by the auditor to understand the entity and its environment. What are the procedures which I will be doing for understanding the entity and its environment? The first thing I will go and ask the client, which industry, what service are you providing, what product are you giving, what is the nature of business, is there any business risks, or what is the financial performance, have you submitted anything to any credit rating agencies, what are the accounting policies you have followed, are you consistently following, if not consistently following, have you made a disclosure for the same, what are the reasons for the changes in accounting policy, like that. You should be able to ask the client. Are you able to understand? Now coming to the main part of SA 315, which is internal control. What is the meaning of internal control? Internal control means what? I have already told this in class. For example, you all know PVR. Everybody, at least one time in your life, you would have gone and watched a movie in PVR. What do you show before going to PVR? What do you show? Your ticket. Physical ticket or message? You will show the message. Say for example, you are going with your +1. 1+1 you are going to PVR theatre to watch the movie. That time what you did, you booked C1 row. You actually booked C1. But how many people are going? 2 people are going. Once the message came to you, you edited the message like this. Because when you are going for 1+1 anyway, theatre is empty. All seats are actually for you. Outside what are they checking? They are checking the message. Okay, C1, C2 is there. Are they really checking? Is PVR only sending and all of those things? There will be one person who is standing there. Just for 1 second, he will see and he will let you inside. So you can even edit to C3, C4, C5. Yes, when group of friends are going, you can edit to whatever you want. So here, what can I conclude? I can conclude that internal control is weak. Are you able to understand the meaning of internal control? So who has to frame the internal control here? Should the auditor go and frame the internal control? No, PVR is supposed to have the internal control. Internal control means some controls which is designed, implemented and maintained. By whom? By the management or TCWG itself. Auditor is not involved in the internal control. Are you able to understand? So this is designed, implemented and maintained by management or TCWG. For what are they doing this? To provide a reasonable assurance to achieve the objectives of the internal control. What are the objectives of the internal control? So, internal controls, how many internal controls will be there in an organization? Just take a guess. How many internal controls? Say an organization like HUL. How many internal controls will be there for this organization? There will be minimum, I am saying, 1,000 to even 10,000 controls will be there in the organization. 10,000 controls. That means if they are buying a fixed asset, there will be controls with regard to fixed asset. Who has to purchase the fixed asset? Who has to give the approval for purchase of the fixed asset? From where the fixed asset should enter the office? As soon as the fixed asset is entered the office, there should be something called as inward register. In that inward register, who has to key in the data? Who has to approve the data which is keyed in the inward register? Where should the fixed asset be placed? How frequently they should check the physical verification of that fixed asset? One person will be putting the journal entry for that fixed asset. Who is that person? Another person should be checking maker-checker concept. Another person should be checking whoever is doing the journal entry for that fixed asset. Same way for the fixed asset, depreciation has to be there. One person will be keying in the depreciation, another person will be verifying whether it is keyed in properly or not. One person will be checking whether the rate of the depreciation is correct or not. Like that, there will be so many controls for just one item itself. Same way for sale of fixed asset. Nobody should have the access to sell the fixed asset. If all the employees are having access to sell the fixed asset, what will happen to the fixed assets in the entity? Daily on with the So, what is the procedure for sale of fixed asset? Who and all are the levels of approval approval based on amount of the fixed asset. How is the fixed asset being sold? Only when it is obsolete or some other reason. Who is deciding that this fixed asset is obsolete? Who is then, what is the name of that? Like that, there will be thousands of control for each and every item, and each and every person will be assigned those controls. Are you able to understand? So these are designed, implemented and maintained by the management and TCWG to provide a reasonable assurance for achieving 4 objectives. What are the 4 objectives? Now, if the auditor is able to see only fixed assets, I am there to see. Now, fixed assets will say 150 controls are there. I will test all the 150 controls, or on sampling basis, I will test at least 25 to 30 controls. If I am satisfied that whatever controls they have given me is perfectly, they are following it. They have designed the control, implemented the control and maintained the control very perfectly. If I am able to tell that the amount of fixed assets which is shown there, can I say that it is perfect? Yes. So it is telling me that I can rely on the accounts which is submitted to me. So the first objective is reliability of financial reporting. Financial reporting is nothing but accounts. I told you in CA final your first paper is accountancy, which is called as financial reporting. Financial reporting is nothing but accounts. So the auditor can rely on the accounts if the auditor is satisfied that the internal controls are perfect. Are you able to understand? This is the first objective. The second objective is effectiveness and efficiency of operations. Third objective is, I can be sure that the assets are properly safeguarded. If there are so many controls for fixed asset itself, how many controls will be there for stock? How many controls will be there for debtors? So I can be sure that these assets and all are properly safeguarded. And I can be sure that they are following all the laws and regulations. So there are 4 objectives for internal control. The first one is reliability of financial reporting, effectiveness and efficiency of the operations, safeguarding of the assets, and laws and regulations have been properly followed. Now, if they are asking definition of internal control, you are going to write design, implement and maintain by management to provide a reasonable assurance for achieving the objectives. But if they ask directly objectives of internal control, separately it is there. The first one is, it should be properly authorized. Basically, internal controls means what? It is dividing the worker and giving each person different work. Authorizations must be proper. Authorization can be general authorization or specific authorization. General authorization means for petty cash less than 10,000, anybody, whomever they want, they can just take the money. You yourself put the signature and take the money. But after 10,000 till 25,000, B has to sign. 25 to 50, C has to sign. After 50,000, CEO has to sign. Like that they are having the rules now. General now for small amount and all. General authorization. For big amount, for important transactions, they have to get specific authorization. So the first objective is authorization. The second objective is to verify whether the amount, to verify whether all the record, whatever is recorded in the financial statements is of proper amount, is in the proper account, and it is for the proper period. So if the internal control is proper, I will be able to tell that all the records are of proper amount, account and period. Are you able to understand? And I will also be able to tell that in fixed assets, what were you able to tell? That the assets are properly safeguarded. So these 3 objectives you will be writing. If they are asking directly as objectives of internal control, in the 3 mattu edina, you will get only half marks. You have to start off with the definition of internal control and then write these 3 along with reference to standard number and name. Then only you will get the full marks. Are you able to understand? Clear? Can I go to benefits of internal control? The benefits of internal control is to basically identify the risk of material misstatement. The standard itself is saying identifying and assessing the risk of material misstatement by understanding the entity and its environment. So, identification of risk of material misstatement. Once I am able to identify that the risk in this specific area is extremely high, that means controls, they are not following properly. Assets are not properly safeguarded. Now I know risk is high here, so I know I will have to do extra audit procedures at this area. I need to know I have to get extra audit evidence from this specific area. So the benefits is basically for you to identify the misstatements which is there in the financial statement. Misstatement is nothing but the difference in the amount presentation, classification and disclosure. The difference in that, if it is there, I should be able to identify, and wherever the risk of material misstatement is there, I should be able to identify. Once I identify this, I will be able to design the nature, extent and timing of my further audit procedures. Are you able to understand? So the benefits are three benefits: identification of the misstatement, identification of the risk of material misstatement, designing the nature, extent and timing of further audit procedures. Whenever there is benefits, there will always be limitations. The first one is nature of financial reporting. Financial reporting, now I already told. Sorry, the first one is, it is only a reasonable assurance. Sorry. Nature of financial reporting limitations is where it's in essay 200 where limitations of audit for that nature of financial reporting. Here limitations is first, this is only giving a reasonable assurance and not complete assurance. I told you internal control is designed, implemented and maintained by management and TCWG. They are all humans. So even though fraud illanalo, errors are possible. Humans will always make errors. Are you able to understand? I am saying that less than 10,000 nobody, 10,000 to 25,000 you have to give the signature, 25 to 50,000 you have to give the signature. That I am telling. That time, he will feel that, why is she giving 25 to 50? Why can't I give 25 to 50? Am I a small person? Is she a big person? Like that, ego clashes and all will come. So there is a collusion between the management itself. That is also a limitation, disadvantage. Now the PVR person who is standing there and who is looking at your phone and he is sending you inside, what is his actual job? His actual job is to check whether this person has paid for how many ever people are entering. But what he is thinking is his actual job, that he should just see your phone for 2 seconds. Whether your phone shows some Swiggy order also, he is going to see it for 2 seconds and leave you inside. Yes or no? So here he is not understanding the purpose as to why this internal control itself is framed. That is also a limitation. Now here, this is designed, implemented and maintained by the management and TCWG. So there is always a judgment by the management. What if the judgment itself is wrong? They are thinking risk of material misstatement is extremely high here. So they have so many internal controls for that specific area. Actually, it is a submatter. So unnecessary. So waste of time. So the judgment of the management itself is wrong. Now. That is a limitation. It is a small entity, chinna entity. Only me, her. 3 of us in an entity. How to frame internal controls between us 3? She will approve for what? I will approve for what? She will approve for what? Between us we have to approve for each other. So for small enterprises and all, it is difficult to design or implement or maintain any kind of internal control. These are the limitations of internal control. Reasonable assurance, human element is involved. There might be collusion between the management. There is always a judgment by the management. The person who is doing the internal control might not even understand the purpose for which he is doing it. And the last one was, for small enterprises, it is difficult to design, implement or maintain the internal control. Now we are going to study of various aspects. In the study of various aspects, there are only how many aspects? 4 aspects. In the first one, we are going to see general nature and characteristics of internal control. Under that, we are going to see the purpose and the limitation of internal control. The second one, we are going to see controls relevant to the auditor. Third, we are going to see nature and extent of understanding the relevant control. Fourth, we are going to see components of internal control. I am going to start with components of internal control. Components of internal control. Now, I want you to remember what? Crime. What is crime? Control activity, control environment, monitoring information system and risk assessment procedures. Are you able to understand? These 5 are the components of internal control. Control activity, control environment, risk assessment procedures, information systems and monitoring activity. Now, what is control activity? Control activity means this only is the policy and the procedure for the internal control. This is only the policy, this is only the rule which the management has made it for himself. So, control activity is the policy and procedure. Examples are ISPA. I-S-P-P-A. Yes, what is ISPA? Information processing, segregation of duties, performance review, physical controls and authorization. By way of physical controls, by way of authorization, by way of reviewing the performance, what is S? Segregation of duties, or I? Information processing. By way of all these things, I will be able to make so many controls in my organization. So, component of internal control now, crime, which is starting from control activity. Control activity is the policy and procedure, that is the rule which the management is making for itself. How can the rules be made? By way of ISPA, ISPPA. Information processing, segregation of duties, performance review, physical controls and authorization. Physical controls means which person has to enter after which person. Till 5 o'clock, close the office room. Nobody should enter the room or exit the room. Like that, if I am making a control. And after 5, you have to put your fingerprint so that I can know exactly at what time you exited the room. All those things are physical control. Segregation of duties means what? Segregation of duties means what you did for petty cash, 10,000 to 25,000, you are responsible. 25,000 to 50, you are responsible. Like that, I am segregating each person's duties and I am framing the controls. Information processing. Who does the information processing? The software does the information processing. Who is supposed to input? How the software is processing the data and giving the output? Is the software processing properly? I have to re-perform the activity in my calculator and see whether really 10% depreciation is being calculated. I will do the recalculation. I will do the re-performing. Like that, I will check for information processing. The last one was authorization. I will authorize different people for different activities. So basically, control activity is the rule, that is the policy and the procedure. Are you able to understand? Next comes the control environment. Control environment means what? That is the culture of the organization. That is the ethics which is followed in the organization. How will the auditor know? How is the culture? How is the ethics? Are they torturing the employees like anything? Morning only timing is there. Exiting timing, not there. Morning 10 o'clock everybody enter means exiting timing after 2 days. 2 days you have to work continuously. Then again go home just to take bath and again come. I'm not exaggerating. Big Four's work like that totally. So like that, what is the culture? What is the ethics? All of those things. The auditor has to check. He will be able to check by seeing the control environment in the organization. For seeing the control environment, we have a mnemonic called Shape PC. What is Shape PC? They will see the organizational structure. Organizational structure na, we have a partner killer director, director killer senior manager killer manager killer assistant manager. Like that, they have a structure. How is the structure? How are the people behaving in that organizational structure? Once we see that, we will be able to understand how the ethics are there in the organization. H stands for HR policies and procedure. HR policy they have written, employees are assets of the organization. That means what? Assets in our organization are continuously used. That means by shift basis. Assets in our organization, if there is a machine, how they will use the machine is 8 hours one shift, 10 minutes break, again 8 hours one shift, 10 minutes break, again 8 hours one shift. 24 hours over. 24 hours ki inno konja time venu for the 10-minute break and all. If you want to take, you need some 24 and a half hours in a day. Like that, the HR policy itself is saying employees are the assets of the organization and the assets will be used like this way. Like that, if the policy itself is there, what is the culture in the organization? That is the only culture of the organization. So if it is like that, how is the ethics in the organization? Very worst ethics. They don't care about the employees' mental well-being and all of those things. So you have to see the HR policy and procedures. A is assignment of authority and responsibility. Who is having what authority? Who is having what responsibility? Can they really handle that authority? Or simply one first day article student giving so much responsibility. How will she manage? She can't manage all of those things. Like that, authority and responsibility has to be given to proper people at the proper time, based on their knowledge, based on their skill. It should be given, not for everything for anybody. Not giving the authority and the responsibility is also bad. So there has to be a balance for that. What is P? Philosophy of the management. The philosophy of the management itself is like, if you go to movie theater and all, it's wrong. If you go out and eat, it is wrong. If you spend time with family, it is wrong. What is your age? Young age. This is the age to earn. So you please come to office. I will give you the salary. I am only giving you the salary, so you please work for me. I am there to spend the time with you. That is the philosophy of the management. If that is the philosophy of the management, then that means the culture in that organization is poor. They don't have any ethics. So the auditor should understand what is the ethics, what is the culture in the organization. E is ethics only. We already saw what is ethics. Next P is participation by those charged with governance. Participation by those charged with governance. It is good or bad? It is not bad, not good. It is neither good nor bad, because in places where they have to participate, they must participate. But if they keep participating on day-to-day activities and keep asking you questions, we will get irritated like anything. So there should be a balance for participation by those charged with governance. The last C is commitment to competence. How are they competing with the other companies in the same industry? Are they doing cheap competition, or are they doing some classy level of competition? All of those things we have to see. Some big fours, what they will do? Audit, 5 lakhs they are charging. Another big four will come. Audit plus taxation. I am giving free 1 plus 1 offer. Only for 4.5 lakhs. Like this, if they are competing, it is a very cheap way of competing. But say they are saying, audit sir, I am charging 5,50,000, but along with audit, I will also give you consultation. I will tell you how to improve. I will tell you how to improve the effectiveness of the internal control. Like that, they are adding value to the client and telling them. There is a way to compete in the industry. So what is the commitment to competence? All of these things auditor has to check to understand the control environment, the components of internal control we are there. Components of internal control is crime. The first C stands for control activity, that is the rule, that is the policy and the procedure. E stands for control environment. Environment is nothing but the culture in the organization, the ethics which is followed in the organization. For that we have shape P, C. Yes? Clear guys? The next one is called as R stands for risk assessment procedure. For risk assessment procedures, I told you the risk for sale of petrol. Yes or no? If they are selling the petrol, automatically risk comes. What is the risk? Evaporation is the risk. For that, first you have to identify the risk. Next you have to identify the risk. ISPA is offered this also, if you remember, risk assessment procedure also. What is ISPA for risk assessment procedure? Significance of the risk. You have to check how important it is. Significance of the risk. What is P? The likelihood of this happening or not. A. Actions to be taken for that risk. These four, if you are able to ask the management, they will also know how they have identified what is the significance of the risk, what is the likelihood of it happening. Petrol selling and all, likelihood of it happening is 100%. How can they avoid that? Yes or no? And what are the actions they are taking? Are they somehow reducing their normal loss? All of those things we will be able to ask them by way of analyzing their risk assessment procedures. Risk assessment procedures, now you should think of business risk only. I think in class I gave some other example. Yes, therapy example. Whichever one you want you can write for your convenience. Next one is what? Monitoring activities. What is there in monitoring activities? In crime, components of internal control, control activity is the rule, which is the policy and the procedure. For that we saw ISPA with double P. Risk assessment procedure means they are analyzing the business risks in the organization. For that mnemonic is also ISPA with a single P. Control environment means the culture, the ethics in the organization. For that it is shape PC. The next one is monitoring controls. Monitoring controls means what? The first one, we have to see the effectiveness of the internal control. How will you see the effectiveness of the internal control? We saw that internal control means it is designed, implemented and maintained by the management or TCWG. That means they have to monitor the internal controls by themselves. They have to follow it up themselves. So auditor, when we are going for audit, we have to ask about their monitoring activities. Are you able to understand? How frequently are they monitoring their controls? What is their timely basis? Are they monitoring month on month, or are they monitoring 6 months once, or are they never monitoring? All of those things we have to see. Monitoring must be an ongoing activity. It is not a one-time activity, yes or no? If they are just saying monitoring activities, sir, yes, we are doing, yesterday only we did. Next when will you? Next I will think about after 1 year, sir. Like that if they are saying, that means it is not a ongoing activity in their organization. It is supposed to be an ongoing activity. I told you for small enterprises, it is very difficult to do internal control. Yes? Small enterprises with just 3 people, it was difficult to do internal control. Small enterprise, imagine with 50 people, it will be highly effective. Yes or no? 50 people there, 10 people will be there for doing all the policies, procedures, approving, authorizing. All of those things will be done only by 10 people. The remaining 40 people will be following all the controls. Here it will be extremely effective. So here for monitoring, they are saying that if it is a small organization, condition, it is easy to monitor. It will be effective to monitor. So can I conclude that for a very small enterprise, it is a limitation? Yes, for very small enterprise, it is a limitation. Slightly bigger, it becomes a good thing for implementation of the internal control. Are you able to understand? Clear with monitoring activities? The last one is information systems. I will just open the PDF. Now we are in information systems, which is crime order I. In information systems, what are they saying? The auditor will obtain an understanding of the information system when he knows that who is doing the input, what output they are getting, how the information system is getting processed, what are the backup records, where is the server being located, what are the controls surrounding all the journal entries. That means the person who is inputting, what are the controls for him, is there a maker checker. All of these points are for information system. Now see here, for crime, components of internal control, I told you it is crime. Yes, C is control activity, R is risk assessment procedure, I is information system, M is monitoring of control, and E is control environment. Now, components of internal control is done. In general nature and characteristics of internal control, what is the purpose of internal control? The purpose is the same as the objectives in the definition. What is the definition? The definition is, it is designed, implemented and maintained by the management and those charged with governance to provide a reasonable assurance. Management is providing a reasonable assurance. Audit obtaining reasonable assurance. The auditor will obtain. Here, management is providing a reasonable assurance to achieve the objectives. What are the objectives? Reliability of financial reporting, effectiveness and efficiency of operation, safeguarding the assets, and all the laws and regulations are properly followed. That is only this purpose. The limitations of internal controls, already we saw. This is only a reasonable assurance. Humans are involved. There can be collusion between the management. The person who is doing the internal control might not even understand for what he is doing the internal control, and there is a judgment by the management which is involved. And for very small enterprises, it is difficult to design, implement or maintain the internal control. So this is also done. Now coming to controls relevant to the auditor. I told you there will be 1,000, 5,000, even 10,000 controls are there. But auditor has to do only for the controls which is relevant to him. How will he find the relevant controls exactly for the audit? He has to first see the size of the entity. He will see the size of the entity and he will decide how many controls he has to see. The size of the entity can be very small and they may be having 1,000 controls, possible or not, 10,000 controls, possible or not. For even a small enterprise, they can frame so many controls if they want to be so strict. If they want to be exactly perfect, they can have so many controls. But is it possible for the auditor to test all the controls? It is not possible. So the auditor will first consider the size of the enterprise. The second one is legal and regulatory requirements. In the cooperative society, we saw that there was a legal and regulatory requirement for transferring some 10% somewhere, reserve fund, educational fund, all of those things was a legal and regulatory requirement. So auditor definitely has to test those controls. So controls relevant to the audit now. Auditor has to check these factors and then test the controls. Are you able to understand? The first one was the size of the entity. The second one was legal and regulatory requirements. The third one is materiality. Material means important. If he feels something is important, then he definitely has to check those controls. If it is not important, why to waste the time? Leave it. Next is nature of business. Why nature of business is important? We saw that for petrol sale, what happens? Petrol gets evaporated. If petrol gets evaporated, there is a normal loss. So the control surrounding the normal loss definitely has to be tested by the auditor. So the nature of business is very, very important. Next is circumstances and the components of internal control. What are the components of internal control? Where are the internal controls being implemented? It is implemented only for fixed assets, sir. Otherwise, we don't have the concept of internal controls. Where you will test? You will test for current assets. No, components of internal control means you will see exactly where and all it is implemented, and based on that, you will make your testing procedure. Are you able to understand? Yes? Next is complexity and nature of information system. Information system means the system which is in front. Person who is doing the journal entry, automatically the system is giving the output. Yes? If the system is automatically giving the output, say for example, you only are putting this purchase entry. Only one purchase of fixed asset if I put, and if I am classifying this fixed asset as say land or building or whatever, machinery or whatever, year on year, automatically depreciation is getting calculated. I don't have to again put an entry for depreciation. So here, there should be a control of one person who is checking whether the depreciation is getting calculated automatically. Sometimes what will happen, one person has to go and key in depreciation. Entry quota, automatic 10 or 20%, whatever rate it is, the system will do the calculation. Automatic rate will be taken from whatever rate is applicable to that fixed asset. Are you able to understand? So how complex the information system is, accordingly the controls has to be tested. Next is diversity and complexity. If it is extremely diverse, if it is extremely complex, then the organization itself should have lots of controls. If the organization is having lots of controls, then the auditor's sample size should also be bigger. So auditor has to check diversity and complexity. There are a lot of related risk. Business risk is different. Related risk is different. Related risk means what? Business risk, I am in this business. If I am in this business, definitely I can't escape that risk. Related risk, I am getting affected. For example, say I have a shop in Wayanad. What happened to Wayanad? Fully gone. Yes or no? Is that related to my business risk and all? No. Just because I have a geographical presence there, my business is gone. That is my related risk. Like that, for many products and services, there will be a lot of related risks. So say for example, Coca-Cola is there. Coke is not doing anything, but Pepsi is doing super ads. Pepsi is doing very good ads. Now everybody started buying Pepsi. Did Coke do any kind of mistake? No, it is a related risk. They did well, so I am getting affected. Are you able to understand? That is called as related risk. Now what did we see? Size of the entity, legal and regulatory requirements, materiality, nature of the business, circumstances and components of internal control, complexity and nature of information system, diversity and complexity, related risk, and last is any specific control which is there for preventing, detecting and controlling the material misstatement. If there is a specific control which is there for preventing, detecting and controlling only for this financial reporting process they are having for this material misstatement, then auditor has to definitely check that. Now how ma'am, 9 points you told, how I will remember all these things? It is, what is the mnemonic? SLM, NCC, DRS. I want you to just write this chart in your books. Just this chart in your books. Yes, and here I want you to write SLM, NCC, DRS. S is the size of the entity, L is legal and regulatory requirements, M is materiality, NCC, N is nature of the business, one N is component of internal control, and another C is complexity and nature of the information system. Complexity of the information system. DRS, D is diversity and complexity, R is related risk, S is specific controls for preventing, detecting and correcting the mistake. If you write SLM, NCC, DRS, at least 5 to 6 points you will be able to remember. Are you able to understand? This is the controls relevant to the audit. And when you are writing this here in components, I want you to write crime like this. Crime. And in control activity, I want to write policy and procedure. ISPA, write like this. What is this? ISPA you will remember. Risk assessment procedure, what is it there? ISPA again, what is that? Information systems, what we saw, backup records, input, how it is getting processed, output, all of those details. Monitoring, what we saw, how the internal control is getting monitored, whether it is an ongoing process, how many times they are monitoring, timely basis. Just write small points in your book itself. Control environment, here we saw shape PC. Yes or no? So please write, make this chart. Just this one chart is enough. Yes guys? Clear? Yes? Now we saw controls relevant to the audit. Next we have to see nature and extent of understanding of relevant controls. That means auditor, how deep I have to go, the extent I have to understand the controls. Now here controls relevant to the auditor, what does that mean? There are so many controls, how I have to select, this is the quantity of the controls, how I have to select, that is here, controls relevant to the audit. Nature and extent of understanding the controls, now how deep I have to dive to understand the controls. That is the meaning of extent of understanding of the relevant controls. How deep I have to dive. I have done only 3 points, don't worry, don't look at me like that. The first one is capability of the design, capability of how the internal control can prevent, detect and correct. See, the internal control is designed, implemented and maintained by the management and TCWG. This internal control, first thing the management has to do is design the internal control. First they need to know that inga prachana irukku. இதுக்கு ஏதோ ஒரு கண்ட்ரோல் ஃப்ரேம் பண்ணணும் அப்படின்னு தெரிஞ்சாதான் they will design the control itself. Next they will implement the control. If the design itself is wrong, what is the use of implementing, monitoring and all of those things? There is no use of that. So first thing they have to do is to check what is the capability of the design of the control and to check how this control is going to prevent, detect and correct the mistakes. Are you able to understand? They will check the capability of the controls. The second one is risk assessment procedure. What is risk assessment procedure? Risk assessment procedures are also audit procedures which are employed by the auditor to understand the entity and its environment. AROR, that is audit procedures, external confirmation, inspection, inquiry, re-performance, observation, analytical procedures and recalculation. That is audit procedures. Risk assessment procedures, now they are also audit procedures but not all the audit procedures. This is only IO, that is analytical procedures, inspection, inquiry and observation. IO na risk assessment procedures, AROR na it is audit procedures. Remember like that. Are you able to understand? So the first one is you have to check the capabilities of the design and also how it is able to prevent, detect and correct the misstatement. The second one is risk assessment procedures. For risk assessment procedures, the audit procedures which we will be using is IO, analytical procedures, inspection, inquiry and observation. The third one is you have to understand if the internal controls are not operating effectively. If the internal controls are not operating effectively, what should the auditor do? The auditor has to tell the management and suggest new ideas to them and tell them how they can change the internal control or how they can change the implementation of the internal control and all of these things. Are you able to understand? So what depth they have to go now? These three. In so many controls, how they have to see, which control they have to test now? SLM, NCC, DRS, components of internal control now, crime, and first one what is our general nature and characteristics, clear purpose and limitations, very easy. Yes or no? We are done more than half of SA 315. Just to go for short commercial break and come back fresh for evaluation and testing. Hello guys, welcome back. We saw till study of various aspects. Have we completed the study of various aspects? Yes. All the 4 points under the study of various aspects we have completed. We only have evaluation, testing and IT environment. If these three concepts if we finish, we are a master in SA 315. What is evaluation of internal controls? How are they supposed to evaluate? If they evaluate the internal control, auditor will know, it will enable the auditor to know these points. It will enable the auditor to know whether the internal controls are adequate or not. It will enable the auditor to know whether there is any error or fraud which can happen in the entity. It will enable the auditor to know if the internal audit function is effective and efficient. So it will enable the auditor to know so many things by evaluating the internal control. The first 3 points are the adequacy of the internal control, how it is able to identify, prevent, detect and correct any error or fraud which is happening. You will be able to tell how is the efficiency and effectiveness of the internal audit function. You will be able to tell how the recording of transactions, that is the input, how the recording of transactions is happening. That is the input of the journal entry one person is doing, how he is doing that. You will be able to know how the transactions is being processed. That means the computer is doing this process. You will gain an understanding as to how the computer is doing the process. You will be able to know how the output is reliable because you will be doing the same process. You will re-perform, you will recalculate and you will know whether you can rely on the output or not. By doing all these things, you know the extent, that is the depth of the internal control which is there in the organization. If you find any area where the internal control is not designed properly, or if you find any area where the internal control is unable to prevent, detect or correct the misstatement which is happening, what should the auditor do? Will the auditor go for qualification? If the internal control is not preventing, detecting, correcting the misstatement, will the auditor go for qualification? Qualification means, will the auditor be saying that the financial statements is wrong? The auditor will be saying that the financial statements is wrong only when the financial statements are not representative of what has happened in the company. So here, if the auditor finds that there is some internal control deficiency, he will be suggesting how to improve the internal controls. So here, in the evaluation of internal controls, by evaluating, it enables the auditor to know these things. Yes? Next comes testing of the internal controls. What is the auditor testing? The auditor is obtaining the audit evidence by checking the effectiveness of the design as well as the operation. So he is basically testing the internal control to get some kind of an audit evidence that whether the control is operating effectively and efficiently, and first and foremost whether the control is designed properly. For that, there are few audit procedures that he has to do. The audit procedures are IAO. That is the audit procedure. What is IAO? IAO is inspection, inquiry and observation. What are the audit procedures? Error, external confirmation, inspection, inquiry, re-performance, observation, analytical procedures and recalculation. What is risk assessment procedures? The audit procedures in risk assessment procedures. It is IO, that is analytical procedures, inspection, inquiry and observation. What is the audit procedures in testing of the internal control? IIO, that is inspection, inquiry and observation. என்ன மேம் நீங்க ரோய் ஐயோ ஐயோ இந்த மாதிரிலாம் TR மாதிரி பேசுறீங்களே. So add the TR also. T is testing and R is re-performance. Are you able to understand? Yes. So testing of internal control na IIO TR, inspection, inquiry, observation and testing and re-performance. People who don't know TR, I can't help you. I can't do anything. You please Google about that wise man. You must know about him. Are you able to understand? This is testing of internal control. In evaluation of internal control, we saw that when he is evaluating the internal control, he is able to know about a few points. In the testing of internal control, basically he is testing the internal control to obtain the audit evidence for the effectiveness of the design as well as the operation. For that the audit procedures are IIO TR. T for testing. So IIO TR is for testing. Life you should not forget. Error inge eludhi vechu IIO TR ange eludhi vecha waste of my time and your time. TR na only for testing. IIO TR. Error 100 times I have told in class and at least 10 times I have told in the marathon also. Error is audit procedures. For risk assessment procedures it is IO, analytical procedures, inspection, inquiry and observation. That's all clear? Yes. Evaluation done, testing done. The last part is internal control and IT environment. What is internal control and IT environment? There are so many manual controls. There are so many IT controls. Which is better? Manual control is better or automated controls are better? A mix of both is the best. Only manual, there will be advantages also as disadvantages. Only automatic controls, there will be advantages, there will be disadvantages. So manual or automatic kadayadu, manual and automatic, that is the best mix. While using this automatic control, there are a few benefits. What are the few benefits? What is automatic control? Example for automatic control. Say for example, I am purchasing the fixed asset. As soon as I purchase the fixed asset, I am giving an instruction saying I will only type purchase of fixed asset amount or maybe I will scan the invoice. Automatically entry will be done by the system itself. Depreciation also calculated by the system itself. At the end of every day, I will just press this button called as run control. Once I press this button called as run control, the system itself will check whether the purchase is done correctly, whether the amount is done correctly. It is a testing, it is a checking. The system itself will start checking once you just press the button called as run control for checking. So when the system itself is checking, can it check a large volume of data in just a few seconds? That is the first benefit. Large volume of data can be checked by the system in no time, in a blink of an eye. If so many transactions has to be checked by people, humans, it is impossible. Are you able to understand? Now, large volume of data it is able to check in no time. If you want to give additional information saying you run the control for this fixed asset and at the end of it you please give one more instruction saying after every day you are going to press that run control. After you press that run control, it is going to check everything. In the end, automatic posting in the balance sheet also. Like that, any other additional information you give, basically, you evlo adichalu thangu. Are you able to understand? IT system means நீ எவ்வளோ information கொடுத்தாலும் அது தாங்கும். So large volume of data it can process. Any additional information if you are giving also, it will process. In IT, the risk is low. Because one time if you are able to check whether it is doing the processing properly, every day just clicking off button, you will be 100% assured that it will do the same job only correctly. So the risk here is very low. But if there are benefits, always there will be limitations. So what are the limitations? That means what are the IT risks? IT risk is first one. I shall write here. IT risks, first one. Inaccurate processing of data or processing the inaccurate data. What is the meaning of that? Let me repeat myself again. Inaccurate processing of data or processing the inaccurate data. Here, the first sentence, the emphasis is on what? Inaccurate processing of data. The inaccuracy is with relation to the processing. Processing inaccurate data. The inaccuracy is related to the data. Here, input itself is wrong. Here, the process which is done is wrong. Are you able to understand? So, the first IT related risk is inaccurate processing of data or processing inaccurate data. Are you able to understand? Clear? People will have different access for different things. For example, the person who is entering the journal entry should not have the access of approving the journal entry. Yes or no? What is that concept called? It is called as maker-checker concept. The maker should be different from the checker. That is called as maker-checker concept. The person who is doing the entry, he is only approving the entry also. So, there is no concept of approval itself. So, here, unauthorized access should not be there. The person who is making the entry should not have the access to approve the entry also. That is called as unauthorized access. An employee is leaving the organization and going because of very bad shape PC. What is shape PC? Control environment. Control environment means the culture in the organization, the ethics in the organization, first behavior they are doing. They are considering humans like machines and they want us to work 25 hours when day only has 24 hours. In that, don't I have to take bath, sleep, all of those things? Podum Pasami, I am leaving your organization and going. What the company is doing? You are leaving in 1 month, correct? So you please work for 2 months. That means what? In 1 month, you will be able to work 40 hours per week. That means in 4 weeks, how many hours? 160 hours the max. 160 hours you are supposed to work, but you please work for 2 months in that 1 month period itself. They want you to double the number of hours and work. You are getting extremely irritated. So you want to take revenge on the organization. When you are leaving the organization, if you are having access to the master file, what will you do? Access to the master file. இத்தனை வருஷம் ஃபுல்லா போட்டிருந்த ஃபிக்ஸட் அசெட் என்ட்ரி, ஜர்னல் என்ட்ரி, லெட்ஜர் போஸ்டிங் எல்லாத்தோட ஆக்சஸும் உன் கையில் இருக்கு. அவன் உன்னை டார்ச்சர் பண்றான். What you will do? That access, what you will do? It is in a pen drive. You are getting access to that pen drive. What you will do? You will break it. You will throw it. Yes. You will flush it. Yes or no? You will do all these activities. So, unauthorized access to the master file, unauthorized changes to the system or program, if it is there, then they will misuse it. Third one is unauthorized changes to the master file or unauthorized changes to the system or program itself. Changes to system or program na enna artham? That means if fixed asset is purchased, depreciation has to be calculated at 10%. You are going to the master file and you are saying calculate depreciation at 100%. In 1 year, depreciation value will become 0. So here, what is happening? Because you had unauthorized access to the program itself, how it has to process, adike unak access irukku. So if you want to take revenge, you will do all these nasty activities before you leave the organization. Yes or no? So who is having these access? All of these is very important. So this is part of IT risks. We are in limitations of IT risks. We started off by saying inaccurate processing of data or processing the inaccurate data. Then we said unauthorized access to people. Then we said unauthorized changes to the system and unauthorized changes to the master file. Say you are supposed to put the entry. Every day you are the person who is doing the journal entry. Control is very proper. The person who is doing the journal entry cannot approve it. This one person is doing the journal entry, another person is approving the journal entry. Now you have to go and put the journal entry. For that, when you are doing login ID and password, you yourself are not able to enter. Appadina enna artham? You have lost the access itself. Somebody has changed the password. Now how will you enter the journal entry? So loss of access is also a IT risks. Now just telling all the IT risks: inaccurate processing of data, processing the inaccurate data, unauthorized access, unauthorized changes to system, unauthorized changes to the master file, unauthorized changes to the program, system or program. Next is loss of access and also loss of data. All of these are IT risks. Now, you tell me the answer. When there is high judgment involved, that means you have to think a lot and then you have to make a decision. Can the computer do the thinking or humans do the thinking? Where I have to rely? I will be relying on manual controls when the judgment involved is extremely high. Now I want to see how is it reliable. Which one is more reliable? If something is automated, it is more reliable, or something is manually done, it is more reliable. Automated will increase the reliability of the data, but if there is thinking to be done, then if there is judgment or discretion involved, then manual is better. This is suitability and reliability. With this, essay 315 is over. Okay. We started off with audit risk, where we spoke about risk of material misstatement, detection risk, inherent risk, control risk. Then we said identifying and assessing the risk of material misstatement through understanding the entity and its environment. How we have to understand the entity and its environment we saw, risk assessment procedures we saw. Then we came to internal control. Internal control means designed, implemented, maintained by management or TCWG to provide a reasonable assurance for achieving the 4 objectives, which is also the purposes. Then we saw limitations, then we saw benefits, then we saw what? Controls relevant to the audit, nature and extent to understand the internal controls, component of internal control. Component of internal control is nothing but crime, control activity, risk assessment procedure, information system, monitoring activities and control environment. Then we saw evaluation of internal control. This will enable the auditor to know few things. Then we saw the testing of internal control. Testing is IIoTR. Risk assessment procedures is IO. Then we saw internal control and IT environment, IT benefits, IT risks we saw, which is suitable where we saw. Clear guys? It is actually little vast, but if you study, direct questions they will ask. 100% there won't be any paper without 4 or 5 marks from essay 315. Easy to get this 4 or 5 marks. Just spend that 1 hour, finish revising. That's why I gave lots of mnemonics. I hope it will be easy for you when you go back home and study this essay 315. Clear guys? Okay.